right, good morning. Good morning. Thanks for joining us on Leap Day. In commemoration, I put a frog right there. Happy Leap Day, February 29th, and to the fourth day of our mega huge, awesome MetaStock Traders Conference. My name is Greg Lewis. I'm the marketing manager here at MetaStock. And if you haven't heard of us, I'm going to play a little video for you right now. How about that?
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the Armo. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, all right. Thank you so much for being here and for watching that video. I don't know if you've been to one of our events before, but this is day 4 of a 6-day event, which we hold about quarterly. We have events that last an entire day, which we hold monthly, and we have events that last for about an hour, which we hold once or twice a week. And the reason I mention all that is this would probably be a great time, there's our button, for you to like and subscribe and ring that bell, and you'll be notified every time we do that. It's an easy way to stay on top of our ziggy-zaggy streaming live. Oh, excuse me, I'm going to mute while I... Woo, got a little bit cold. Hey, so like I say, like and subscribe. A few things about today. We encourage you to chat. Actually, I was just setting up a poll here that asks when's the last time you entered a trade. Today, this week, this month, or more than a month ago. And I'm going to start that poll right now. Boom. So go ahead and enter that when you log in. And when you log in, sure, just tell us hello and who you are and where you're streaming from. We'll be starting in about 4 minutes. We very much encourage your comments and your questions, and we enjoy the banter, and it's very informal. We just ask that you be respectful of the presenters and your fellow visitors. Also, if you go to our homepage, well, let me put it this way. If you have not registered for this event, that is to say, if you haven't gone on to this page right here, let's see if I can, okay. If you go to our homepage and select the banner at the top, then you go to this page and you'll see this little button right here. And I'm not sure if you're seeing that on the screen or not, but anyway, that little button right there where it says register now for free, then you'll be able to register for the entire 6-day event. Also, you'll be registered to enter the chance to win door prizes, which Jeff Gibby is giving away several times during the day. No purchase is necessary to win. In fact, you don't even need to be here to win, but you do need to register. And while I'm on this page, I would like to show you that today's first presenter is one Daniel Sinnig. He's great. Then we have Martha Stokes, CMT, extraordinarily educated woman and knowledgeable. Then down the way we have Melissa Armo, and I'm sorry, this software doesn't work that well. Peter Dalal and Rob Booker, and then finally Jerry Allison. I think we have 7 speakers today. If my whizzing back and forth on the screen isn't helping you at all, you can go ahead and go to MetaStock.com, hit the banner on the top, and then you can see what the schedule is yourself. We'll be starting in about 2 minutes and 22 seconds. I don't think there's anything else I really have to tell you. I will be pinning on the top of the chat here on YouTube where you can go to register. Along the day, I'll also be pinning in whatever landing pages they're talking about, or chats, or telephone numbers that you might need. So go ahead and watch that in chat. And again, if you're watching this on YouTube, the presenters are in GoToWebinar, but we will pass whatever comments and questions you have for them into GoToWebinar from YouTube. Also, finally, a lot of people ask us this is being recorded. Well, yes, in fact, what you're watching right now is recording if you're watching this live, and you can come back right to here, and this is where the recording will be. I see that we have people here. We have Superfan Vincenzo from Italy. Ciao, Vincenzo. Anton, I can't, sorry, my screen's covered up. Jeff, Kelly, a lot of people in here. Go ahead and say hello. Give us a shout out. Anyway, have a great leap day. Have a great time with us for the next 7 hours. We really are glad you're here. I'm going to go ahead and let you listen to a little bit of jazzy music while I make sure everything's set up so we can start in 1 minute and 4 seconds.
All right. Good morning, everybody. Hope you're doing well. My name is Jeff Gibby. Welcome to day 4 of the conference. Vincenzo, it's good to see you again. Kelly, thanks for coming again. Vincenzo, good to see you. Anton, I already said it, Vincenzo. Good to see you guys. As you're joining us, say hi in the chat. Dennis, it's good to see you. Neil, thanks for coming back today. Today is looks like it's going to be pretty sunny here in Utah, and I hope you're doing well. It's good to see you. You look great today. Make sure if you're watching us on YouTube, like and subscribe. It helps a great deal. We sure appreciate that. We're trying to get to 70,000 subscribers, and we're almost there. And Greg would really appreciate it if you would like.
Can you hear me?
Yeah. Are you going to get grumpy again?
Well, a little bit. You can't see it, but our folks on YouTube, for some reason, your screen that you are in keeps on minimizing, which is not a problem for you or the folks on GoToWebinar, but it is an enormous problem for us here in YouTube land. And I don't understand why it keeps happening, because it's never happened before. And
I'm not doing anything.
I don't know. So I guess the best thing I can offer is an apology to people on YouTube, as I keep on having to resize the screen. Maybe it'll go away on its own. What could possibly go wrong? Go ahead.
Greg. The difference is we played some videos, and I said, let me know if something funny happens. We're done playing videos.
Well, but it's happened several times. Anyway, I'm sorry.
We need to move on.
Please move on. You're doing a great job, and I'm here for you all the way. Just FYI, there's a little issue.
Is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have the liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor is it paid for the promotion of a security. No information contained in the presentation should be construed as an investment advice or solicitation to buy a security. So, William, good to see you. Thanks for coming in. All right, let me go ahead and kind of just very quickly. I want to talk about our sponsors, AAII.com, CMTassociation.org, and Technical Analysis Stocks and Commodities Magazine. I'll talk about these partners as we go, but they've been awesome. They very, very much help us grow the event. They help us with it. They do a really, really good job. Do you know who also does a really good job? Our next presenter, Daniel Sinnig. Daniel is going to talk about some indicators and some methodologies he's developed for MetaStock. He's a great programmer, and I really like kind of the bundle of that he's going to talk about, and the way he's kind of made them all work together. He's a very, very smart guy. We love to have him on. He always does a fantastic job. Daniel, let's go ahead and get you started.
Hey guys, good morning. How's it going?
Good. You had a little bit of a peek behind the curtain today, didn't you, Daniel?
That's right, yeah.
All right. Cool.
Guys, how's it going?
I'm going to, I can hear you. Let me go ahead and make you the presenter. I'll make sure we can see your screen. Things have been going great this conference, and I'm sure today will be no exception.
All right, so let me pick my screen. And Jeffrey, please confirm that you can see it.
Yep, I can. Everything looks good. You look good. I can hear you.
That's the way.
I'm going to get out of the way. Your turn.
Okay, well, thanks, guys. So good morning, everyone. Greetings from Montreal, actually, our beautiful headquarters here of Trading Indicators, a company that I started roughly 10 years ago. And I have to tell you guys, what a journey it has been. We came a long way since the very beginnings. I'm going to tell you a little bit of a backstory of how we started off in just a bit. But before I do this, guys, there's one thing I want to talk about today, which is how we can leverage the power of artificial intelligence to help us find trade ideas and make informed trading decisions. And everything in this talk is geared toward a subject. And the beauty of it is I'm going to give you a very hands-on approach how everyone can do the same steps that I do every single morning to find trade ideas. So this is what we're going to go through today. So the a bit more complicated title is Confluence Trading with Artificial Intelligence. All right. So, but before we get into this, let me ask you a question, just hypothetically. How would you trade if you somehow would know the odds of having a successful trade before you take that trade? You know, if you can somehow put some numbers to it that perhaps would tell you, well, the odds of winning my next trade perhaps is at 73%, and conversely, the odds of losing it would be 27%. How would you trade? Well, I bet you that everybody in his right mind would only take the trade when the odds are in your favor. And if they're not, you stay on the sidelines. Right? This just makes sense. And this is where the artificial intelligence that we have developed comes in, because we have come up with an approach which actually will do exactly this. It will predict the odds of winning your next trade before you enter it. All right, so to build up to this, let me quickly review what happened earlier this year. So I was on the MetaStock Euro Summit about a month ago on January 29th, and I've used our odds predicting technology and the MetaStock scanner to pick a trade. And I presented this trade 1 month ago. It was a trade to go long Constellation Energy at level 120.30. Stop loss just 10 points below with a target of 139.50. And I picked this trade based on our criteria, based on everything that we use for our own trading. So let's quickly review what happened to that trade idea from January 29th. So if I go over to MetaStock, I'm just going to switch over quickly my window, open up Constellation Energy. And you can see here, if I zoom in a little bit, that this was the Gen 29 signal that I eventually took action on. So this happened on the Friday, and then Monday we entered into the trade. And just recently, as you can see, this trade worked out very beautifully. Just a couple of days ago, we did hit our target at 130. What was it? 139 or 135, and the target. And of course, afterwards, when the earnings came out, CEG really rocketed up. But nonetheless, we did make this trade successful. We booked our profits last week. So a beautifully done trade, and everybody who joined us for the Euro Summit could have taken action on that as well. But, well, this is in the past. Let's see what today's brings. So for today, I've used the very same technique from last month to pick another trade. And this is my trade of the day for today. It's a trade to go long Arista Networks, a stock in the S&P 500s in the technology sector. And we're going to go long with a limit long entry order at 270. It's just a bit below market price right now. A target of 295, just at the upper end of this trend channel, and a stop loss at 251, just below the swing point here. And this would give us a risk-reward ratio of 1.31. Well, so what I'm going to do in this presentation, I'm going to explain to you very clearly how I use our tools and MetaStock to pick this particular trade. And it's going to be in a manner that everyone can follow along, but we have to build up to it a little bit. All right. So you may ask yourself the question, who is this guy to just give these random ideas of what could be traded? Well, give me a bit of background of who I am. So my name is Daniel, and actually my background is perhaps a bit different of the background of most of the traders that you hear at this MetaStock conference, which, by the way, is an awesome event. I love to be on this show. So my background is actually in software engineering, and Jeffrey mentioned this early on. And for the longest time of my career objective was to become a professor in software engineering. And I went through all the hoops. I did my master's, my PhD, my postdoc. I was teaching at various universities in software engineering here in Canada, but also in Germany, which is my my home country. And I even have a profile on Rate My Professor. If you guys want to look me up, you can find some old entries there. But you know what? All the time while I was in academia, I was also possessed by the trading bug. And I started trading on the side. And as you start off, as a beginner trader, you are prone to make some mistakes. And so did I too. So I overtraded. I traded when market conditions were not right. I revenge traded. I took too much risk. And after donating quite a bit of money to the market, I took a hard look in the mirror and I came to the realization, oh man, trading is hard and I need help. And for me, needing help meant I need tools which will help me make better trading decisions. So I rolled up my sleeves, being a software engineer, and they started coding. And most of the tools that I've written in the beginning, they were tools just for my own trading. And once I realized, oh, these tools actually are helpful. They help me make better trading decisions. I thought, okay, well, let's put them out there. And perhaps others can make sense of these tools as well. And this is really how the story behind trading indicators started. Now, this is almost 10 years ago now. And over the years, we have written way over 500 different trading indicators, fully automated trading strategies, trading scanners, trading dashboards for clients all over the world. We cater to retail traders, we cater to trading educators, to institutions. And it's been quite a journey since then. And what I'm going to show you today is perhaps the most influential tool set that we have created. All right, so I'm very excited about showing this to you today. Now, before we get started, just a quick reminder, of course, that if you trade FX, Forex, stocks, or any other asset class, keep in mind that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is capital that you actually can afford to lose. And should you lose it, it will not affect your lifestyle. When it comes to hypothetical performance or performance based on backtest results, keep in mind that this is not necessarily indicative of future performance. All right, so with this out of the way, let's get started. Now, remember when I said in the beginning, how awesome would it be if we knew the odds of winning your next trade? So we asked ourselves the very same questions a couple of years ago. Is this possible? Can we calculate some kind of numbers or statistics which would estimate these odds? And the easy answer is yes, it can be done. And this is thanks to our proprietary instant efficiency technology, which does exactly this. It shows you the odds of winning your next long trade and the odds of winning your next short trade. And these odds are displayed either directly on your chart or in case of MetaStock in the expert commentary. We're going to see how this looks like in just a bit. All right, so we can display these numbers, all right. But the real question is, what are these numbers actually telling me? Is there any meaning in those numbers? Because everybody can just display some percentages. Is there any meaning in those numbers moving forward into the future? The reason why I say this is because these numbers are essentially based on backtest performance, on hypothetical performance, which happened in the past. I just read the disclaimer that hypothetical performance is not necessarily indicative of future performance. So what's going on? Am I contradicting myself here? Well, guess what? We have asked ourselves the very same questions. And so to get to the bottom of it, what our odds actually meaning, we have conducted a comprehensive case study where we back-tested and forward-tested a swing trading system. And this was done over the course of almost a year. And we applied our system logic to 84 big US stocks, Tesla, Apple, IBM, Microsoft, and so forth. And this swing trading system would give us long and short trade signals. A trade would last approximately 1 week. And over the course of this back test, of this test, the system generated 6,827 entry signals. So okay, we had all these signals, and then we looked at the performance. And the first performance that we looked at was, what if we would have traded every single signal? So 6,827 signals resulting in 6,827 trades. And this was the performance that we got. And you probably agree with me, oh man, this looks pretty terrible. This is a losing system. Nobody in his right mind would trade a system like this. And I agree with you, it doesn't look very pretty. But then we did something. We then applied a filter to our system and only took the signals or where the odds of winning your next trade were in your favor at the time when this signal was generated. So for example, if we had a signal perhaps in May 2022, we would look at the odds as of May 2022 and only take the trade if the odds were in our favor. And this was the resulting performance. As you can see here, it's a difference of night and day. We only took in the end 2,599 trades. We call these the sweet spot trades. But by just simply applying this odds filter, we got this performance. And all of a sudden, we did have a winning system in our hands. And this gave us so much confidence that there's actually meaning in the odds that we calculate moving forward, that we decide to build an entire tool suite around that concept. So what I'm going to show you now is this tool suite, which has this odds prediction technology built in, which will estimate the odds of winning your next long or short trade before entering it. All right, so we call this tool suite the Power Bundle 360. And it's actually a bundle consisting of 3 different indicators. One indicator for trend trading, one indicator for spotting reversals or pullbacks, and one indicator for trading breakouts in the sideways or out of a sideways market. And each of these indicators has this AI-based odds prediction technology built in. And there's a reason why we took or made 3 indicators for this bundle, because by covering each trading style, trend trading, counter trend trading, and breakout trading, we thought that every trading style is reflected and you get a full rounded approach by having this bundle in your toolbox. All right, so before we look at the chart, let me quickly give you an intro of these 3 indicators. So the first one is our trend trading indicator. We call it 1 to 3 strike. And it gives you a trend entry if 3 things come together. We need to have directionality, so price needs to be moving either upwards or downwards for quite some time. So we need to be in a trend, basically. We need to have an increase of volume and an increase of volatility. And if all these 3 things come together, the indicator will give you an entry signal, a trend entry signal. So that's indicator number 1. Indicator number 2 is our counter trend indicator, designed to predict trend reversals and pullbacks. We call it divergence cloud. And as the name suggests, it is based on the concept of divergence, which is basically a discrepancy between price move and an underlying indicator. And for this purpose, we have developed a brand new underlying reading for that, which we call volatility divergence. And as it turns out, this is actually quite a predictive way of looking at divergence with the power of forecasting true trend reversals. All right, so this is indicator number 2. And then indicator number 3 is our breakout indicator, which we call volatility crusher, an indicator designed to detect what we call strong breakouts. And in our book, a strong breakout is a breakout where price will continue to move in the breakout direction for quite some time after the breakout has occurred. And you can imagine that how you as a trader can take advantage of this, because you can, quote, simply enter in the direction of the breakout in the anticipation that price will continue its move. All right, so enough theory. Let me just switch over to MetaStock and show you how all this works. And by the way, guys, if you have any questions, please don't be shy. Put them into the questions section of your GoToWebinar, and I'm gonna look at those questions as I find time. All right, so let's switch over to MetaStock. I'm gonna switch to Pfizer on the daily time frame. So this is the daily time frame. But before I actually comment on what we see here, let me just clarify something right off the bat. We're going to mostly show stock examples in this presentation, but our indicators, they work for any asset class, be it futures or FX or crypto or equities or ETFs, no problem. They will also work on any time frame. So the daily time frame for perhaps swing trade setups, but they will also work on the lower time frames like the 5-minute time frame. We're going to have some examples of this later on. Okay,
I do have a question coming in, if it's okay to interrupt.
Yeah,
I don't know.
Of course.
Robin from YouTube wants to know, are we to use your AI system as a confirmation only? If so, does your system come with entry patterns you recommend?
Yeah, so this will actually be answered very shortly. So the short answer is yes, you will get very clear entry signals, and you will get a sense of confirmation through our odds. So just stay tuned just a little bit for that. It will all be answered. All right, so back to the chart. So here we have FISA on the daily time frame, and I went ahead and applied our trend trading indicator to it, which is called 1 to 3 strike. And as you can see here, you see these, these bigger arrows on the chart. So here we have a big arrow facing downwards, which is an arrow or a signal for a short entry. And here, for example, we have an arrow facing upwards, a green arrow. This would be an entry signal for a long trend entry. And you can see here, this is alternating a long entry, short entry, and so forth. Now, when I teach trading to our students in our community, I always tell them one thing. Everybody can just enter into a trade. It's it's possible. You can just enter into a trade. But the real skill lies in when to exit a trade. And there's one example I always tell my students. In the morning of perhaps yesterday, trader Mark and Thomas, they met in their trade room, and they decided to trade perhaps the the S&P E-mini futures. So Thomas goes long, and at the same time, Mark goes short the S&P E-mini futures. And at the end of the day, both were profitable. How is that possible? Well, the answer lies in trade management and timing your exit. And this is exactly what I mean, because just by finding the right time to exit, the entry actually is you can make almost every entry work just by finding the right time to exit. And this is why we have equipped all of our indicators with exit suggestions. So like the short entry here. So this was a short entry, and then we have these smaller arrows along the way. These are exit suggestions as the trade pans out. So take some money off the table here, book some partial profits. Here again, and then finally we close out the position when a signal in the opposite direction comes along. Same for long entries. See, we have a long entry, a partial exit here, here, and here, and then we close out the position at this point. So all of our indicators, for this reason, are equipped with exit suggestions, because timing your exit is just as important, or perhaps even more important, than finding a good entry. All right, so this is our trend trading indicator. But I haven't showed you the most important aspect yet, the odds prediction technology. Where can we find this? Well, in MetaStock, you're actually going to find it in the expert commentary. So if you right-click on your chart, go to Expert Advisor, and go to Commentary, a little sub-panel will open up. All right, there we go. So here we have our sub-panel, and if I scroll down and just make this a little bit bigger, if I can find the way to do it. It doesn't matter. Okay, you can see the sub-panel here, and if I scroll down a little bit, you can actually see here two numbers. We call this the long efficiency and the short efficiency. And what these numbers are telling you is that historically speaking, our long signals have worked out 64% of the time, and our short signals 65% of the time. Now, this is a trend trading system, so typically our winners are way bigger than our losers, because once you catch a nice trend, you can write it out. So typically winners are bigger than losers, so that even with 64% or 65%, you can have quite a profitable system on your hand. But you know what? There's always room for improvement. And one way typically traders try to improve the accuracy of their signal system is to play around with the parameters. So let's try this a little bit. All right, so I'm going to go to the parameters of this indicator. It's not so important what they mean exactly, because we have documentation for this. But let me just show you the principle of it. So let's say, hypothetically, we want to perhaps change this volatility period parameter. Let's say from 7 to 10. All right, so I'm going to click OK. I'm going to close this and reload the chart. And please observe what happens to our statistics. So I'm going to refresh this chart. And after a few seconds, once this is reloaded, you can see it now. There we go. Oh, they changed. So now we've changed the parameters, and our statistics also changed. We can clearly see that, wow, it made it worse in the long side and better in the short side. And you might be inclined of trading FISA to the short side. So this could be actually quite a nice improvement, because let's face it, FISA has been falling down ever since COVID ended. I mean, you may be very that perhaps shorting Pfizer is like beating a dead man at this time because it's been falling so much. But nonetheless, it's definitely a very bearish stock. And we have just increased our hypothetical odds of winning our next short trade simply by playing around with the parameters. So perhaps we can even make it even better. So let me go one more time to the settings real quick and perhaps change it. Okay, we change it from 7 to 10. Maybe I increase it a bit more to 14. Let's see what happens. Click OK, close it, and I will now reload my chart. All right, and let's see if the odds further improved. Oh no, it went down. This was not good. In any case, you can see that, by just changing the parameters, we can directly see what the effect of that parameter change was in our statistics. But you're probably going to say one thing now to me. Oh man, Daniel, there's no way in hell I'm going to tediously change these parameters just to find the sweet spot by myself. It's just takes way too long. I have to do it for every single stock. I don't have enough time on my hands. But guess what? We have asked ourselves the very same question. Wouldn't it be awesome if the indicator could find the best parameterization automatically for us, the one that will give us the best odds, the best statistics? And you know what? We've done it. We have created in the latest generation of our indicators an auto optimization feature, which will do exactly this. So let me quickly enable this for you. So right click, I'm going to go to Expert Advisor and now attach the EA, which has the auto optimization feature built in. We call this the AO feature, AO for auto optimization. So I'm going to apply it. And now the same indicator will be applied to the chart, but this time the indicator will find the best odds for us. So it's loaded. You can see it's the same sequence on the chart, but now the parameters have been chosen to give us the best possible odds of succeeding. If I scroll down here, we can now see that our long efficiency has increased to 75% and the short efficiency to 83.33%, simply by finding the best parameters for this particular symbol and time frame. And guess what? Whenever I change time frame or symbol, the auto optimizer will redo its work and find the best parameters for that new symbol or time frame, which is pretty cool. So this saved us a bunch of time and allowed us as traders to focus on the really important decisions in trading to eventually pull the trigger. Because if you have to spend all your time and energy finding the best parameters, you might be already exhausted or your focus may be off. So since this is all done for you, well, most of the heavy lifting is done, and you can focus on making the final trading decision. It's a great time saver and energy saver for that. All right. So because this feature is has been such a success and such a big time saver, from now on, I will only use the auto-optimizing versions of our indicators. Okay, so let me quickly switch symbols. So this was Pfizer. Let's go to, let's say, General Electric. A great stock. It's been very bullish. I don't know if you follow that stock. Also on the daily time frame. And once this is loaded, my computer is a little bit slow today. Once this is loaded, we can once again see that 1, 2, 3 strike is applied to this chart. And you can see these beautiful long entry signals along the way. And just had a signal a month ago and an exit suggestion last week, taking this huge move of General Electric and booking profits on that. And if you look at the odds here for General Electric, wow, for the long direction, it's been a very bullish stock as of late. We have a 91% accuracy of our signals across the entire chart, which is pretty good. This is one of the best performing stocks for the long direction that we currently have. So GE, and the principle is exactly the same. Now this was another equity on the daily time frame. Let's change it up a little bit. Let's open up Bitcoin. Bitcoin, I don't know if you noticed, has been on a tear lately as well. So let me just quickly switch off the expert commentaries so we have a bit more real estate. So let's switch over to Bitcoin, if I can find it. There we go, Bitcoin on the 5-minute time frame. And I was just curious because Bitcoin has been, crazily bullish lately. I have huge moves. I was wondering this morning, are there some intraday trading possibilities of Bitcoin. So what I've done, I've applied 1, 2, 3 strike, the auto-optimizing version to it. And let's look at what the odds are telling us. So I'm going to put on the commentary once again. And let's see how well the signals have been working out for Bitcoin. Let's see what we can see. All right, so scrolling down here, and not very surprising, you can see one thing. The long direction has been working with amazing accuracy, whereas the short direction, not so much. Is this surprising? Not at all, because Bitcoin has been so bullish for the last couple of weeks or maybe months. So the long direction is working much better. But now, there's one thing I wanted to mention here. Sometimes you do have this big discrepancy between long and short direction. So how should you handle this as a trader? And there's an easy answer to it. You would simply focus on the trade direction, which is working better. In this case, the long direction, which has a clearly better performance. Why would you even consider the short direction? It's not working out well. And as I often say, sometimes staying on the sidelines is the best trade decision that you can do. And in this case, staying on the sidelines would mean to ignore the short signals because they have not been working out well. The indicator will tell you, hey, right now, the short signals are not working out so well. And you would only focus on the long signals. This could be a great extra confirmation. And I know who it was, Robert on YouTube said, hey, is this also a confirmation indicator? And the answer is yes. These odds are giving you the extra confirmation. You can only trade, or you would only trade when the odds are in our favor and stay on the sidelines when the odds are not. And why would you trade when the odds are not in our favor? All right, so this was for our trend trading indicator. Real quick, I'm going to show you the other 2 indicators. The second one is for finding reversals. We call divergence cloud. And for this, I'm going to switch over to UPS. I can find it here in my list. All right, and in this case, I have applied our divergence cloud indicator to this chart. So as soon as this loads, we can see how the indicator looks like. All right, so what do we see here? We see the same kind of arrows on the chart for short entries and long entries. But the logic of this indicator is completely different. It's an indicator designed to spot reversals. And you can see it here that this downtrend here has replaced this uptrend. So now this uptrend that we had here reversed into a downtrend, which then reversed into an uptrend, which reversed into a downtrend. And you can see how well Divergence Cloud is able to spot these reversal points, these swing points in the market. And this is exactly what this indicator is designed to do. And in its underlying logic, it uses our own proprietary form of divergence. And you can see it here on the chart that when chart bars are colored greenish, that means we have bullish divergence. A downtrend may come to an end and reverse to the upside. And if it's reddish, like these ones here, we have bearish divergence. You also can see the same colors here in this ribbon below the price chart. And the long entry can only occur if we have bullish divergence, and the short entry would only occur when we have bearish divergence. On top of this, also this indicator will give you, in addition to these entry signals, also these exit suggestions. Because once again, timing your exit is just as important as timing your entry. All right, and of course, we also have our odds prediction technology built in. And once again, we can see here for UPS that the short direction has been working out better than the long one. And in this case, well, what would you do? You would perhaps only focus on the short entry signals because they will, historically speaking, will give you the better odds of succeeding. All right, so this was UPS. And one more example, real quick, Iron Mountain, IRM, the equity on the daily chart. Once again, we have Divergence Cloud applied to this chart. Actually, we don't. Let me just quickly switch it over because this leads up to the final topic I'm going to cover today. So let me quickly apply Divergence Cloud to it. If you just indulge me for 1 second. All right, so attach, go down here, put Divergence Cloud AO for auto optimization onto the chart. And now we can see the same signals here. And once again, you can see how well Divergence Cloud is able to pick these swing points in the market. An uptrend reverses to the downside, upside, downside, upside, and so forth. And this is exactly what this indicator is designed to do. All right, one more thing I have to show you, and then we're gonna come to the punchline of this entire presentation and how I picked the trade of the day for today. So the last indicator is called volatility crusher, our breakout indicator. And let me show you one chart where this indicator is applied. I'm gonna open up Accenture once again on the daily time frame. So this is our breakout indicator, and this one works a bit differently from our 1, 2, 3 strike and divergence indicators, in the sense that it will always give you 2 targets for each entry. So it's designed to that. And another thing for this indicator is that targets in this case tend to be a bit closer, because the whole idea of this indicator is to take advantage of a breakout move. But since this move, the breakout already happened, chances are that price will not continue indefinitely in the breakout direction. And this is why this indicator, we've back tested this endlessly. This is why this indicator places its targets fairly nearby. You can see it here. We have a short entry, target 1 is hit, target 2 is hit. It's not too far off. We're like in and out fairly quickly. Here we have our long entry, target 2 is hit, and indirectly also target 1, because we had this gap open, which covered target 1. Here another short entry, target 1 hit, target 2 hit, and so forth. You get the point. This is exactly what this indicator is designed to do. Okay. Now, of course, we also do have our odds prediction technology built into this indicator, the volatility crusher indicator. And if this expert commentary is opening up, you will see one thing. It will come apparent right away once you see it. It just takes sometimes a couple of seconds to open. And if I scroll down here, you can see that the odds are extremely high, sometimes as high as 100% in our look back period. And there's a reason for that, because our targets are a bit closer than our stop. And once you do this, by definition, you're gonna get higher odds. But for some trading styles and trading personalities, this is exactly what you want to have, because it gives you a lot of confidence. You get a lot of successful winner trades in a row, even though they're a bit smaller. But at least you have this constant, feeling of success throughout. So it's a trading personality decision of whether you want to go for bigger trades and bigger winners, or perhaps smaller ones, which will happen more frequently. All right. So let me quickly go back to my chart and build up to the punchline of this presentation. So what we've seen is that each of these indicators, to give you clear entry and exit signals, they will run on anything, on all time frames, on all asset classes, and support all trading styles, no problem. They all come with our odds prediction technology, which will show you directly in the expert commentary or for other platforms on your chart, what are the estimated odds of winning your next long and short trade. And they have auto optimization, which will find the best parameters for you to win your next trade. So you don't have to fiddle around with the parameters yourself. But there's one more thing, and this is really where everything comes together. One last piece. The answer to this is Confluence. Because we thought, can we push the envelope even a bit further? And we did it. We created an indicator called super signals based on the concept of confluence. Now, let me explain to you real quick for 1 minute what confluence means. Confluence is just a technical or complicated term for when the good stars are aligning, or in terms of in trading lingo, when multiple indicators are lining up and are forecasting the same price move. All right, so what do I mean by this? Let's have a look at an example, unrelated to the indicators I just showed you. What can we see on this chart? Okay, so we do have a descending trend line, just right off the bat here. Okay, descending trend line. Price is approaching the 200 SMA, which is also descending. So descending SMA. We just retraced into or near to the 61.8 FIB retracement level after this downtrend. Price is retracing into this rebound level, 61.8% FIB level, and we are overbought on the stochastic. So what are all these things are telling me? These are all bearish indications, basically indicating, hey, this bearish move is likely to continue. So we have multiple indicators or indications that this bearish move will continue. And this is exactly what Confluence is all about. Multiple indications are forecasting the same thing. So how can we take advantage of this? Well, what we have done is we have created an indicator which looks for confluence between our power bundle indicators, between our trend trading indicator, our divergence indicator, and our breakout indicator. And if they line up, they're forecasting the same move, then we have what we call a super signal. Now, there are different degrees of how these indicators can line up. Some are more often, others are extremely rare. So a platinum signal, for example, is when two indicators are forecasting the same move, whereas the other indicator, the third one, is not contradicting it. A gold indicator is when two indicators, a gold signal comes in when two indicators are having an entry signal in the same direction on the very same bar, for example. Or platinum, which is the rarest of all, is when all three indicators, and this almost never happens, but you can scan for it. It does happen sometimes, but it's very rare. When all three indicators are having the same entry signal on the very same bar. Which is extremely rare because, remember, all these indicators are based on very different mathematics and logics underneath. So if all the different logics are forecasting the same signal on the same bar, wow, then something is really up. All right, so let me quickly show you how this works. So back to my chart. All right, and I'm gonna now open up Iron Mountain. We've seen this before with divergence cloud applied. So now I'm gonna switch this over. I'm gonna apply our super signals to Iron Mountain. Let me just quickly hide the expert commentary just to make this load a little bit faster. All right, and we do have a few more minutes left, so please stay with me. All right, because I still need to explain to you how I found the trade of the day, which is where everything comes together. So I'm going to apply now our super signals indicator. All right, and once applied, you can see that you get these indications throughout the way. So for example, here we have a bronze signal. Here we had a silver signal. We just had a silver signal today. I didn't even see this because this market just opened, which seems to be working out quite nicely. And if I scroll back through that chart, let's see what we can find. Another nice bronze signal. Let me see if I can find perhaps a gold signal here. Look at this. This is a gold signal where two of our indicators have an entry signal to the short direction on this very same bar. I have a nice follow through and so forth. So you get the point. This is our indicator based on Confluence. Let me switch it up one more time. Let's go to NVIDIA. The NVIDIA has been in the news last week because they reported their earnings. So let me open this up. So NVIDIA, of course, is extremely bullish. Let me just go to the end of the chart. And of course, we do have some beautiful bronze signals here, which forecast a continuation of that move. But that's one thing I wanted to show you. Let's look a little bit back, because NVIDIA has been bullish before, very bullish, and perhaps nobody in his right mind would have bet on the fact that NVIDIA could actually, drop quite significantly. But look what our super signals have shown in the past. And these are not repinning, these are happening in real time. We had a gold short signal of NVIDIA back in 2022, which would have worked out beautifully. Here, another one. Nice short signal. And these are big price moves because NVIDIA is so volatile. But these are still very big price moves, which you could have taken advantage of by following these short signals along the way. Forecasting a short move in NVIDIA, which has been so bullish, at least at this point here. It was a gutsy call, but thanks to our short signal, this has worked out quite nicely. All right, so this is super signals, our latest addition to this indicators package. Now, there's one more thing we also built, and I won't be able to expand much on it, is we actually have built into our super signals indicator a way to create your own super signals based on the logic that you want to define, based on whatever combination of indicators that you want to put in. Of course, using our power bundle indicators. So you can even do this. You can create your own super signal. Now, so let's switch context one last time, and now I'm going to wrap it up. How did I find the trade of the day? So, but before I answer this, let me ask you this question. How do we know which symbols currently have entry signals? Should I just go through all these signals one by one manually to check if by chance they have an entry signal? No, of course not. That would be way too tedious. And we at Trading Indicators, we're all about saving time. So, nope, we're not going to do this. We're going to be a bit smarter than this. And we're actually even going to push it a bit further because, we may have multiple symbols with entry signals today, tens or hundreds, depending on how many symbols you're going to go through. How do we know which of those hits, which of these signals will actually be the most probable ones to result in a successful trade? All right, so let's answer this question. This is exactly what I did this morning to pick this trade idea. What I've done, of course, I used a scanning approach. MetaStock has one of the most powerful scanners in the industry, perhaps the most powerful one, which is awesome. So I use MetaStock every morning to find these trade ideas. But what we've done actually is we didn't just do plain old scanning. What we've done is we employed something what we call generation 3 scanning. What do I mean by that? Well, let me explain to you. Generation 1 is probably what you do on a daily basis if you use a scanner. You simply scan for what we call plain old signals. Just, use the same settings to scan through your universe of symbols to see which ones have entry signals. There's nothing wrong with that. It's plain old scanning. It's a traditional approach. But we can push it a bit further. Generation 2, the next level would be to scan for signals and then be able to sort these signals by their estimated profitability. This is generation 2. So you can actually rank your scan results. This was not possible in generation 1. You just see symbols of entry signals, but as far as you know, they're all the same. So generation 2 is to be able to rank your scan results. But it can be even further. And this is what we mean by generation 3. Generation 3 is to use optimized parameters on a per symbol basis. Sounds complicated, but let me give you an example. Typically, when you run a regular scan, you will use the same parameters with an indicator scan for every symbol. We just saw that, changing your parameters and optimizing your parameters can have a huge impact on your performance. So scanning with the same parameters for every symbol may not be as good. This is why in generation 3, we have instructed the scanner to perform an instant optimization for every symbol it scans through. And this is what we mean by generation 3 scanning. So this morning, I did exactly this, and I ran a scan, actually, I should say last night, but today I reviewed it, because this has been my routine. When the market closes, I start a comprehensive scan in MetaStock, and I just let it run until it finishes. In the morning, I review the results. Okay, so this was a scan for divergence cloud entry signals. And we have predefined explorations for this for MetaStock, so it's super simple to start. And there's a lot of documentation for this. And this is what we came up with. And here I scanned through the S&P 500, so a fairly small set of symbols. And this is what we found. We found 5 symbols which currently have a long entry signal using the divergence cloud scan. So Accenture, Arista Networks, IDX, and McCormick. All right, so far so good. So these are all symbols of entry signals. But what you can also see in your scan are the estimated odds of having a successful trade if you were to execute on that entry signal. And these odds are displayed right here. You see it? 75% for Accenture, 83% for Arista, 77% for this one, and 85% for IDX, and McCormick 77%. So imagine, this was a small scan, imagine you had hundreds of stocks of signals. What you can do is simply sort them by the estimated odds and focus on the ones with the highest odds of succeeding. And this is exactly what I did. So here, just by looking at this, I can see that IDEX has the highest odds, 85%. All right, so let's then check it out. So this is what I do next. I then open up the chart, and then we're going to do it right now with MetaStock here. I'll close this little alert, and let's open up IDX and see what happened. All right, and I annotated this a little bit this morning. And we can see this stock, this was run last night, had an entry signal yesterday. All right, so this is where now my technical analysis comes in. So would I, because I always like to double check if that signal makes sense, if I'm comfortable with that signal. So what can we see here? We can see that this symbol on the daily time frame has been in an uptrend for quite some time, since the end of October last year. Things have been moving up, and we are clearly in a trend channel. So it's been trending up. But what is the #1 rule of trend trading? You don't want to chase your trend. You want to wait for a pullback. But this is not the case here. Look at this. We are right at the upper end of the trend channel. Not a great trend entry. I'd like to see a pullback towards the lower end of this channel and then end into the trend direction, which will give you a much better entry price, and you're gonna have less risk on the table because your stop loss can be much closer. So even though the odds for the entry signal are very high, if I go to the commentary here, we can see that, it's probably historically speaking at 93%. I then manually decided this is not the ideal entry that I'd like to follow for my trade of today. Instead, because it's at the end of the upper trend channel. I don't like that setup, even though the odds are at 85%. All right, so let's move on to the next one. The next best one was Arista Networks, 83% odds. So let's open this one up quickly. Window, Arista Networks. And here, once this is opened up, it's going to be a bit different. And this is exactly why I took that stock as my trade of the day. So a couple of things happening. We are in a long-term uptrend. So we're definitely trading with the overarching trend. So this trend channel has been going on since August last year. We are not at the end of this, at the upper end of this channel. Well, somewhere below here, we had this little pullback towards the lower end. And then it looks like price is now rebounding towards the upper end. And we also had earnings with a big gap down here. But oftentimes, especially for bullish stocks, gaps tend to be filled. So to me, the fact that we do have this nice long entry signal, we do have odds in our favor at 82% or even higher, 83%. And we have a gap to fill, and we are at some of the lower end of this trend channel. This made me decide to pick this one as the trade of the day for myself. So we can see here my stop loss would be right below the swing point here at around 251, and my target is at the, towards the upper end of this trend channel at 295. So if I go back to my slides, we can see exactly this. So long entry, well, I think this is at 270. So waiting for a limit long entry. Where are we now? So I'm waiting for a bit of a pullback to get this entry. I think it's going to happen. I always like to enter on a pullback by use of a limit order because I want to be filled at the price that I want. So waiting for this pullback at 270. If we get filled, we're going to have a 1.31 reward risk ratio, or stop us at 251, target around 295. And this is exactly why, and this is the trade I've chosen. And guess what? It's taken me perhaps, I'd say maybe 20 minutes to find that trade, thanks to MetaStock's great scanner and a bit of manual analysis once I had seen my the trade signals which had the highest odds. I was able to focus on the ones which actually gave me the highest odds. All right. Now, if you're wondering, are these indicators for me? Well, let me tell you one thing. It doesn't matter whether you are perhaps a day trader or a scalper or a swing trader or perhaps an investor. You could use these indicators because they will work on all time frames and chart types. Also, it doesn't matter what you trade. If you trade equities or FX or cryptos or futures, no problem. You can take advantage of these indicators because they will work on all asset classes and symbols. And if you're a bit of an engineer like me, who believe that good tools can make your life or your trading life easier, then these indicators are definitely for you because they will do most of the heavy lifting for you. They will show you the odds, the estimate odds of winning your next trade, and they will do auto optimization. Both are huge time savers because then you can really focus on the stocks which currently have the best odds of succeeding, and they're already optimized. In the end, it just comes down to making a bit of technical analysis, what I've just shown you, and then pulling the trigger. And this is what a trader should focus on making that final decision. All right, so we do have, before we get to the questions, a special offer prepared as a big thank you for spending this morning hour with me. I know your time is precious, so thank you so much, guys. So we do have a great offer. Normally, the Power Bundle 360 or 3 indicators, along with our Super Signals indicator, retailed at $1,497. And this is for life. So this is there's never going to be a second payment. But this would include all the super signals that we've seen, the gold, platinum, bronze, and silver signals. You will get our 1 to 3 strike indicator, which is the trend indicator, divergence cloud for counter trends or reversals, and volatility crusher for finding breakouts. All right, so you're going to get all this. You're going to get our win rate prediction based on AI and our auto optimization technology. All right, so you're going to get all this. But we're going to make it even more special. This is already a good deal. We have put together what we call the Super Traders Pack, where we will include 2 bonus offers. The first one is our trend radar indicator. I haven't even had time to talk about it. I'm going to show you in a second what that means. So it's another indicator you're going to get, and you will be invited to our exclusive members-only trading sessions, which will take place every single Tuesday at noon Eastern. So typically a value of $9.97 a year, you will be invited to these sessions as well. But there's one more thing. We're also going to slash down the price from $1,497 to only $997 if you take advantage of this offer during this MetaStock event. So a great offer, and this, of course, is for life. So real quick about the bonus offers. Trend Radar, it's an indicator which is displayed below the price chart, and it will show you at a glance by means of these, these colors here, what is my short-term trend, medium-term trend, and long-term trend doing. And one awesome feature for this indicator is to find healthy pullbacks in a trending move. Remember when I said you don't want to chase the trend? You don't want to enter when it's overextended near the upper end of the trend channel? A Trend Radar can actually signal these pullbacks for you, which we consider healthy pullbacks. Look at this one here. Everything is green, so clearly an uptrend. And then we have these, these little reddish smaller areas here, which denote pullbacks. As a trend trader, that's what you want to see, because this will give you the trend entry that you want. You enter at the lower end of the trend channel, it's going to give you a much better entry price with much less risk on the table. All right, so this is bonus number 1. And bonus number 2 are our exclusive trading sessions, which take place every Tuesday at noon Eastern. The next one is scheduled for March 5th, which is next Tuesday at noon Eastern. Of course, these are all recorded, so should you miss one, no problem. We'll record them and post the link afterwards. So if you want to take advantage of this package, all you need to do is to go to tradingindicators.com, which is our homepage, /MetaStock, which is going to redirect you to a page which shows you all these extra bonuses. And I think also Jeffrey has put some extra bonuses into this offer as well. So please check it out, tradingindicators.com /MetaStock. All right. So I know I talked a lot. Do we have some time? 2 minutes. Jeffrey, are there any questions?
Yeah, we have a couple.
So I probably talked too much.
You did great. How long do these signals perform for either the daily or weekly? And does the software signal reverse if the stock price drops? Neil wants to know.
I didn't get the second part, but in terms of duration, actually, you can define on over how many bars these symbols or the signals should be optimized, and over how many bars back the statistics should be generated. So that's a setting for that in the indicator, so you can customize that. What was the second question?
Does the signal reverse if the stock drops? Does it have stop losses?
Yes.
Actually? Would be a good way to answer that, I think.
So yeah, it does. So you get reversal signals. So for example, if you have a long entry signal and not all your exits have been hit yet, so there can be multiple exits, and there comes a short entry signal along, that means to you, hey, close out your long position, and now it's time to focus on the short direction.
Des wants to know if you've considered opening up a hedge fund or a mutual fund.
No.
Okay.
So in the end, I'm a software engineer. I love building tools. I love to trade, but I trade for myself. That's the kind of right environment for me, focusing on building tools and trading for myself. Yeah.
All right, we did have some questions that we were able to answer both between ourselves. Rick says, thank you for the question or the response and the YouTube link. So I'm going to go ahead and kind of just, I think what I'll do is reiterate the offer, talk about how people can get a trial with it, and actually even made a fancy little QR code I'm going to show. So,
Ooh,
nice. Yeah, I mean, people are excited now. Thanks, Daniel. I appreciate you. Let me go ahead and kind of change the presenter over me. And thanks for coming in. I do appreciate you.
Yeah. Bye, guys. Yeah, thank you so much.
Every day.
Bye, guys. Have a nice conference, everyone. Enjoy.
I'm going to do this. takes a second for me just to kind of, there's a few, I wish I could have had a more automate the things I need to do to kind of get this switched over, but it's all good. Maybe I'll set up a macro. I'll go ahead and make me the presenter here. I do want to kind of reiterate, just Daniel's such a great guy and such a good designer. I love the way he kind of displays things in MetaStock. I love the way that he's written it. And he does. He takes these things are all things that he pulls out of his brain, the radar cloud, the automatic, everything. So as part of the methods that are included in the Power Bundle, you're going to get the divergence cloud, the volatility crusher, and the 1, 2, 3 strike. They'll have a template. They'll have scanning. I love it when Daniel talks about scanning because I feel like I say it all day long. I love scanning in MetaStock. I do it every day, sometimes twice. Well, every day that the market's open, I should say. But it also features a system tester. You can go in and customize the indicators. You can go in and put in exactly what you want to look for with them. And all of that stuff is included. So if you don't have MetaStock, I think one of the biggest reasons that I would encourage you to get MetaStock is for scanning. We've talked a lot about scanning, finding those opportunities and ignoring noise. But if you take advantage, one of the things that we're going to throw in is a free subscription trial to MetaStock. So you can either do like a free month, or we can do an extended trial where you get 3 months. But that's going to be basically with that, you're going to get free white glove service. We'll answer any questions you have, help you understand the program, help you walk through everything. You'll get free unlimited support, access to all of our training that we've done for how to use it. And all of that stuff is just included. With MetaStock, I'm going to talk about it again in a minute and all day. But it's been rated 31 years in a row #1. And the people that have been with us have just been with us for decades and decades. It's just such a great program. And so we know if we get you started with a great product like this or some great methodologies like this, there's a good chance you're going to keep it. I wouldn't trade without it. So the Super Signal special that we're going to do that Daniel offered was $9.97. It's a savings of $27.89. It's going to get the super signals, the 1, 2, 3 strike, the divergence cloud, the volatility crusher. You get that automatic optimization that he talked about. You're going to get Trend Rater. You're going to get the member-only trading sessions. I love how much is included. And so it's $9.97, 30-day money-back guarantee, free trial to MetaStock, low risk, high reward. Give it a go. So tradingindicators.com/MetaStock. Click on the QR code. You can also call us 800-882-3040, metastock.com/salespchat. So big thank you to Daniel for not only coming in and showing us, but also creating it. Good job. We definitely appreciate that. So in response to the questions about kind of the recordings and whether the recordings will be available and all that kind of stuff, youtube.com/MetaStock. So all week, we've been taking all of the sessions, making them available for, this will be interesting to, well, I don't know if it's interesting. I'm going to say it anyway, though. We get more people that watch the recording than come live. And so anytime you want to come up, come to youtube.com/MetaStock, subscribe to the channel, hit like on the video, if you like it. But it does help a great deal. And we do have tons and tons of really, really good content, like Daniel's speech or the next speaker. So youtube.com/MetaStock for all of the recordings. So, all right, very cool. As we move on, I want to thank one of our sponsors. Our 3 main sponsors are Stocks and Commodities Magazines, thanks, AAII, and CMT Association. Normally we have CMT come in and do a presentation. It's usually Tyler. And it's very interesting to me what a CMT designation can do for you. Unfortunately, he's in Dubai right now, and he couldn't make it due to the time zone differences. But it's very interesting to me when he comes in. He'll talk about how much having a CMT designation can help. It can help you if you're looking to get a job in the banking industry and the trading industry. It can help you if you have one and you want more assets under management. It can help you if you're looking to have more responsibilities in the job that you already have. And you can even do it even if you just want 3 really cool letters to put after your name, CMT. It is a pretty good accreditation program. It's a very, very challenging program. And it is, if you want to check it out, go to cmtassociation.org and you can find out more about it. My thanks to CMT, to Tyler, to all those guys over there for sponsoring the events. Big supporters of the conference and it's early. I should be able to talk still. The work that they do over there. I appreciate those guys. So, of course, we're MetaStock. MetaStock, as I just talked about, you can get any of the specials that we talked about today at metastock.com/conf promo. In addition to that, you can get what we call our extended trial, where if you buy a month, we'll give you a second and third month for free. It brings down, if you're doing the end-of-day version, it's like $69 a month, is it? 3 months of that, the $69 is about $23. And you can find out what's been rated so highly for so many years. So if you haven't tried out MetaStock, again, I wouldn't trade without it. I love it. I use it. I'm about to run a scan in just a few minutes here. And the thing is it makes it just so much easier for me. I'll be able to pay attention. The scan will run. It'll be a few minutes, and I'll see if there's any stocks that I like. It works great. So metastock.com/conf promo, metastock.com/sell-chat at 800-882-3040. After our next speaker, we're going to start doing some prize drawings. I didn't get my list ready yet, but I promise it's coming right after this next speaker. Our next speaker, though, is Martha Stokes. I love Martha. She does a really, really good job. She actually also talked about CMT Association. She does have a CMT designation. She is a chartered market technician, as well as a lot of the people that we have speak here are. But I like Martha because she comes in, she can talk about dark pools is usually what she talks about. And every time she speaks, I seem to learn something. And she just does a really, really good job. I appreciate her being a partner in MetaStock for as many years as she has. And it's always good to have her. So let's go ahead and bring you on here, Martha. Go ahead. Maybe. All right. Okay, I can see your screen. I can't hear you just yet. I can see you. We're getting there. Yeah, here she comes.
Okay, can you hear me?
Yep, we're perfect now.
All right. So,
how you doing this morning, Martha?
oh, I'm doing wonderfully well. We have aerial floods right now, aerial rivers coming out of the sky, but we do well in the Pacific Northwest. It's worse down in California.
I've never heard the term aerial rivers, but that really paints a picture in my head.
It's actually been a term that's been around for many years, but they're using it. The retail news and everybody got, wow, that sounds so cool. You know, it's where a dense, heavy concentration of rain comes. It's heavier than it's ever been before. It started in the pandemic. It started getting much worse. So cool. It's okay, but it's fine. Yeah.
Well, I'm happy to say that we can hear you. We can see you. We can see your screen. I'm going to get out of your way. It's your turn.
All righty. We're going to talk about how to accelerate your indicator analysis. As always, I'm an educational service. I am not recommending stocks. I don't tell you what stocks to buy. It actually is illegal to do so. I'm a Series 86. So I'm a retired professional of the market. Also, everything's copyrighted, and we have permission of MetaStock to use their charts. These are my credentials. It's very important that you understand a person's credentials, because there's lots of people who are just retail traders who are trying to teach, and they don't have the credentials the SEC requires. Now, they're able to get away with that because the SEC can't run after hundreds and hundreds of retail traders. But you need to be careful when you're working with someone that they have some sort of designation after their thing, or they have a series from the SEC that approves them. I am a chartered market technician, member of the CMT for many, many years, and the CEO and co-founder of TechnoTrader. I have authored 2 professional doctoral theses that expand the body of knowledge of technical analysis. I'm considered a cycle expert on cycle evolution theory and relational technical analysis, which is my new technical analysis that I've been teaching to my professionals, my CMT designates, and my CMT candidates. So it's very important that you have this information, because I literally expand the body of knowledge beyond the CMT exams so that you can get a job in the industry. There are more and more floor traders. There are more and more CMTs being hired by the buy side and sell side institutions. So I cater them and help them. I also help the retail trader, and I keep my things affordable so that you can also participate in this as well. The intent of indicators for stock trading is to speed up your stock pick analysis. Unfortunately, all too often, that happens is just the opposite. You spend more time rather than less time trying to figure out what stock is going to be the best for your particular trading style and goals. This leads to frustration and often a huge waste of time. Scans are great, but scans will never, ever replace the fact that you have to look at those indicators and candlesticks and determine if it's an ideal and low risk entry with a high profit margin or not. There are certain things that even AI cannot yet do. Time is money, especially if you're trading for extra income or if you are a professional or semi-professional. You want to write down, everybody write down right now, how much are you worth an hour if you were going to be hired by somebody? How much money would you expect to make? You should expect to make at least that an hour and more and cover all the costs of your trading. Now, a lot of you think that trading is free. It's not. You're going to have to pay, professionals pay a lot. Most of my professionals spend anywhere from $5,000 to $25,000 a month for all this stuff they need to trade professionally. The more efficiently you use your indicators, the more value they will have to you for your trading, because you will have a higher success rate. There are several common problems and mistakes that many retail traders make when choosing indicators or using indicators. Often experienced traders come to us to improve their trading success rate. They want to be able to hit that 80 to 90% success rate that they have to have in order to become a professional. The number one problem that we see when working with experienced traders is an incomplete understanding of the correct way to use indicators. You can't just use an indicator without understanding its functionality. Most traders do not realize that there are only 20 prime indicators and 7 subordinate indicators. During my CMT work, I studied 250 different indicators, stock indicators, market indicators, financial indicators. And I learned a lot by doing that. So I have vast knowledge on that. All of the rest, the hundreds of indicators that are currently available to use, are knockoffs or slight variations of the original primary indicator. And what I discovered is the primary indicator was superior in analytics to the knockoffs. Common mistakes choosing indicators. The second most common mistake is the misuse of indicators, using the wrong type of indicator for the current market condition. There are 6 market conditions: bottoming, topping, trading range, platform market condition, moderately trending up or down, and velocity trading up and down. What market are we in right now, folks? What market condition are we in? Anybody have a good guess? It's moderately trending. We just came out of a platform market a few months ago. Many traders are using a combination of indicators that are all variations of the original primary indicator. I call them spaghetti indicators because they have all these indicators all crunched into one of the little panels for your indicators. And so they'll have a dozen little indicators, and they're all the same primary indicators. They're all basically the same thing. So if you use indicators that are just knockoffs or the same primary indicator, then the analysis will show the same result. Thus, you're thinking, oh, it all agrees. Well, of course it agrees. It's the same formulas, just slightly altered. This can cause whipsaw trades. We have developed 5 uniquely different TechnoTrader indicators that give 5 different analyses of any chart you are studying. And these are totally unique because we are tracking not, crossover or a buy signal or a MACD or some other thing like that. What we're tracking is the dark pools. So our leading indicator is a TT volume exponential moving average, a combination indicator that provides superior analysis of day-to-day volume tracking. Volume is more important than price. Write it down. You use your candlesticks for your price analysis. You always use your candlesticks for price analysis. Bar charts should be set aside because they no longer are as efficient or useful. So it has to have a superior volume. It matters. This exposes high frequency traders, HFTs, smaller funds, and dark pools through volume patterns. And you have to know who created that volume surge. Was it a dark pool? A lot of you see these huge spikes of volume and think, oh, whale, yay. Wrong. It's an HFT, and they're front running you, and they're making a ton of money at it. Technotrader quiet accumulation, TTQA. This is the indicator that tracks large lots versus small lots. Large lots versus small lots. Why is this important? Because the large lots have trillions of dollars that they can move one way or the other. They have millions of shares of stock. So if it's the uptick or the downtick, you have to know which side of the transaction the large lot is occurring, because large lots do not create momentum runs. They trigger them, but they don't create them. They are not moving price up. They're holding it tight and steady. It reveals quiet accumulation by dark pools when HFTs have entered and discovered the dark pool, and when smaller funds are in control of price. Smaller funds are highly emotional. They're retail side. They're no longer considered professionals. Anything less than $3 billion is a small fund that doesn't have to report to the SEC anymore, because the SEC doesn't consider them professionals. They consider them retail. So be careful of who you go to if you're looking for a financial planner or financial advisor, that they are managing more than $3 billion. Technotrader volume accumulation. It's a centerline volume oscillator. You've all learned about stochastics or other RSI centerline indicators, but I mean dual line indicators. The centerline indicator is a volume oscillator and is critically important in today's market because volume leads price. This allows you to see the consistency of volume over time, and that's imperative. It reveals whether volume is strengthening to the upside or the downside, and often diverges from price prior to price reversing its trend. Now, wouldn't that be lovely? You've got this nice swing trade running up and up and up, and then all of a sudden, with the white candle, there's this divergence. The volume is saying, no, this is not going to hold. And the next day, the stock moves down. This happens over and over and over with TTVA. It's a very reliable indicator to track for exiting and entry signals. So my leading indicators, Technotrader flow of funds is an indicator that monitors the flow of money in or out of a stock over time. This is a fundamental. If the dark pools are quietly accumulating over months, usually 3 to 6 months, you need that flow of funds to tell you they're moving in, or maybe they're rotating. They're slowly selling as the investors and retail side are buying speculatively. So what are they doing with NVIDIA right now? Are they accumulating, or are they slowly rotating? This indicator tells you that. It confirms large lot and giant lot activity as they accumulate or distribute in a rotational manner, which doesn't show up in price. RSI is my little variation of an indicator. It provides an analysis of price action using an intermediate term and a short-term price oscillation to provide a centerline analysis for momentum price action. And I just love this. It's very, very nice. I use it for my students. It is also excellent for the identification of new price patterns called a platform. Platforms are the basis of all platform position trading. I'm not talking about positional or pivots or any of that. I'm talking about platform market trading, which is a longer hold, has a higher percentage of profits over a month, and people who work full-time or part-time or stay-at-home moms or stay-at-home parents or working from home use it because they can put in a couple of trades a month and make good money, very good money. Essential indicator analysis. I'm going to use these indicators today to show you how using a complete and refined professional level set of indicators is simple, fast, and more reliable. These hybrid leading indicators designed specifically for MetaStock charting software can dramatically streamline your indicator analysis. MetaStock came to us and we wrote these indicators specifically for MetaStock. They're the only place that you can get these specific indicators written by us for MetaStock. MetaStock's an awesome charting software company. We've worked with them for many years. They are very conscientious about making sure their data is accurate, making sure that their data is clean, that it's easy to use and fun. So I'm very proud to be part of the people that they invite into their conferences and stuff. Professionals achieve an 80 to 90% success rate in their trading. If they don't get hired or they get fired. So don't think you can do a 50%. If anybody says, oh, you can make it with 50%, it's a zero-sum game, run, because they are not telling you the truth. It's a scam. That means that 8 out of 9 trades, 8 to 9 out of 10 trades are profitable. My students are required to achieve at least a minimum of 75% success rate on the simulator before going live in the stock market. Why do I emphasize simulator trading? Because you can do no wrong. You're going to make mistakes when you're starting out. You're going to make mistakes when you start developing bad habits after trading for 5 or 6 years or 10 years or 20 years. And you come to me and say, Martha, I just don't get it. It's like, now I have to unravel all these bad habits that you've developed over these years. You have to simulate trade. And anytime you change something, anytime you change in your procedure or your processes or your strategies applied to your trading style, you have to go to the simulator and forward testing it. The SEC and all financial industries forward test. They never, ever back test. That's only on the retail side because that's historical. That's not telling you what's happening right now. If you have less than a 75% success rate, then you need to seriously consider why and go on a simulator to practice and not lose money. Because when the retail crowd loses money, they hate the stock market. They blame the stock market. Oh, it's not fair. No, it's just that you aren't trading properly. It's not like somebody buys and somebody sells and somebody loses money. Most of the time, buying and selling is going on and both parties are making money, except for you guys. One key area that causes chronic losses for most retail traders is the indicators they are using. Using indicators properly. In order to use any stock or market indicator properly, you must understand the indicator category. What indicator category is it in? What market data is used in that formula? What market condition was underway at the time the indicator was written and the intent of the writer, what he was intending to do. In the 1950s, George Lane wrote the stochastics because it was a wide sideways trading range and he wanted to see when it was going to turn down and they had no volume. MACD was written in the 60s for a market just coming out of a severe bottom. What are the limitations of the indicator? All indicators have limitations. Is it for short-term or long-term analysis? I go in and I go and visit people who are trading or doing their own investments and I look at their indicators and I go, you're using OBV for a short-term indicator? You have to have it right and you have to have the right period settings, what indicator patterns form and what each means. We have a constantly changing market condition structure. It's not static. You can't just take one thing and always use it all the time and it's going to work. Under what trading conditions does it work ideally? You have market condition and then underneath that trading conditions. And you want to know what the trading conditions are because that's the day-to-day activity. Which sub-indicators to use with the indicator, if any. I always use sub-indicators because I find it's easier for my students to learn. The exact formula is only useful if you're a mathematician and wish to alter that formula for your own use. When you alter an indicator, it becomes a proprietary indicator unless you release the formula. A lot of professionals will customize their indicators. Are they going to share them with you? No, because they have made them just specifically for how they trade each market condition and the trading conditions that they're in. Daily use, data used in the stock market, stock indicators is price, time, and quantity, different than volume. Those are the 3 data sets. 2 pieces of data are needed to create a stock indicator. An example, price and time, or quantity and time. Price and time indicators will lag to some degree, sometimes more severely. Simple moving averages and some of the other averages in MACD now lag quite a bit because the market is more dynamic. We have the millisecond trading and so on and so forth. It isn't like it was 10 years ago. It isn't like it was 5 years ago. Quantity and time indicators sometimes lead. Price, time, and quantity indicators, which are hybrid leading indicators, lead most of the time. And that's what we've developed for MetaStock. You have the primary chart layout. You have price, time, and quantities in various formats. This is our TT quiet accumulation. This tracks the large lots moving in or the large lots moving out and so on, so you can get in early and move and follow that trend up or so on. And I assure you that the AI, which are being promoted heavily, do not have the ability to make this kind of analytics. They may sometime in the future, 20 or 30 or 40 or 50 years from now, but right now they're just red light, green lights transformed into AI. And red light, green lights fail dismally, so they're not going to be any better now. Categories of stock indicators. Trend, you need to understand what your category is because it tells you what it's going to analyze. There's trending and non-trending. There's direction, continuation. These are usually simple price and time indicators and are the oldest indicators. These are not as useful as they were before dark pools existed. And dark pools have been around 20 years, folks. Velocity, acceleration, deceleration, volatility, momentum. These are also mostly price and time indicators. Quality, strength, continuation, duration, and sustainability of price and trend. These are the value indicators revealing the strength of the price action in relation to its volume. Oscillators, you know about overbought and oversold, but there's also overextended, increasing, decreasing energy. There are volume oscillators and there are price oscillators. TechnoTrader students learn both types, but we use volume oscillators more than price oscillators because the price oscillators lag because there's the millisecond trading, the faster trading, there's more professionals. It's just a different market. Flow of funds, money flows in or out. The best are cumulative and formula construction because they don't zigzag all over the place like moving averages do. Accumulation and distribution, large lot activity versus small lot activity, uptick, downtick, quiet accumulation, quiet rotation, quiet distribution. Quiet meaning they're not moving price. Dark pools do not move price. Take a sticky notepad, write dark pools do not move price and put it on your monitor. Because right now in the retail side, they're saying, oh, the dark pools, they move price. They do not move price. Buybacks do. Sell side institutions doing buybacks move it. They reveal where the dark pools are slowly acquiring millions of shares of stock over a long period of time, or when they're slowly rotating out of a stock to purchase a different stock. And when they start rotating out of a stock and they're selling against the retail buyers and the retail day traders and the retail investors all buying, smaller funds managers buying because, oh, the stock is going to go up forever. Oh, it's going to go up forever. Odd lot investor, oh, yeah. But it slowly bends by the weight of the larger lots that they're selling. And you'll see this bend occur. And that's a somewhat new pattern that we have in the market today that you haven't seen before. Categories of indicators, hybrids, indicators that prove more than one, that provide more than one confirmation or include all three pieces of market data in a more complex formulation. These lead price action most of the time. So they are very important because you can have this little thing that says, oh, buy the stock, it's going to move up. Well, how do you know it's going to move up? How do you know that an indicator that signals the price is actually going to move up? How many of you have had whipsaw trades? Oh, the continuation pattern was great on the candlestick or whatever you're using, or the indicators were signaling, and then all of a sudden you get in and it goes, why? Why does that happen? Why does that happen? Because you don't realize that pros are in there already, and as soon as you start buying, they sell and it goes down. Cycle reveals the cyclical patterns in some stocks. Cycles can warn of an impending topping formation before the price collapses. You need to study cycle indicators too. How many of you use cycle indicators? Are you CMT designates? Are you CMT candidates? Are you wanting to be a professional trader? Then you need to learn the cycles because they will tell you more about what's going on than you can imagine. I use cycles all the time, all my life. I've been studying cycles since I was 12 years old. Cycles also show when a stock is about to bottom. These are part of the dark pool indicators, and they're very, very important because all businesses cycle. What's the average duration of an NVIDIA cycle from trough to peak? Anybody know? Anybody know? 4 years average. Now, cycles have a variation in average. Sometimes it's 3 years, sometimes it's 5 years. It will wobble like that. Before, where are we in the NVIDIA cycle right now? Where are you? Do you not know? Well, then you need to find out. Okay, Trending or non-trending indicators, okay, I'm in the backside. Okay, specialty, detrending, relational, comparison, deviation, harmonic, pivots, stops, subordinate indicators applied to primary indicators. I suggest no matter what indicators you use, that you include exponential moving averages as your short-term, long-term would be weighted, linear regression, moving linear regression, channels, and bands. Bollinger Bands are awesome, but they're a price indicator, so you have to use your volume indicators with them. Subordinate indicators make analysis faster and easier and more accurate with simple signals that are extremely reliable. The 12 most common mistakes using indicators. 1, using the wrong indicators for your trading style. Day trading often has this mistake. Using all the same types of indicators for your analysis. I see this all the time when I go and study, or somebody sends me their things and say, Martha, I understand I'm not making money. I lose and then I make, and then I lose, and then I make. Well, that's why. Spaghetti indicators, combining too many indicators of the same type, analyzing too many indicators in too many time frames, not using enough indicators, using the wrong indicator for the current market condition. If we have a velocity market, is MACD reliable? No. Using the wrong periods and settings for your trading style. Using long-term indicators for short-term analysis or vice versa. Using an incomplete set of data with your indicators. So you have to be careful. You have to make sure that you have as much analysis as that is fast and easy and reliable. You should be able to just look at candlestick, indicator, yes, no, and it's done. Not identifying who is controlling price via your indicators. You must always be asking yourself, who is in control of price? Not maintaining an efficiency in your analysis. Using older indicators that are overused and exploited by HFTs and retail trading systems. There are systems designed to trade against you. They're designed that way. And if you're using some of the older indicators and very basic ones, they see that because all of the retail side orders are lit before the market opens. Because that's an SEC rule, because the SEC rule wants to make sure that you get the best execution. But that means that you're front run every single day. They know. Even as you're typing it in, your brokers are recording this and sending that information out. The evolving market structure. Most retail traders are unaware of the underlying evolution within the internal market structure and how that has forever changed how they can trade stocks and options. You're trading like it's 1999. You need to be trading like it's 2024. The financial markets have changed more in the past 10 years than they did in the previous 100 years. They have changed more in the past 3 years than they did in the past 20 years. These changes have occurred so rapidly that most retail traders are stuck using outdated indicators and trading systems without knowing it. And they're all over. There's a plethora. There's maybe 400 different programs you could go into for retail trading. And most of them are from the 90s. Okay. Understanding which indicators you need to use today is imperative for not only accelerating your indicator analysis, but also so for the level of success you can achieve. This is a high frequency trading desk. They program it and they leave it alone and it does all the analysis. It has technical analysis, which is seen here. It has fundamental analysis. It has news that's coming through, all kinds of different things. They have 6 primary different ways of tracking what's going on. They use social media. They use retail news. They use extremely overpopular technical indicators. They use some other activity that's to track and front run. They're only on the retail side. They're not on the professional side. So Dalal wrote the theory that caused us to have technical analysis. He is the father of technical analysis. In his day, he said there are 3 levels of market participants. And that was great. And that's what all of you learn. That's what the CMT groups learn. So this is where I come in. And I say, now, well, this is today's market structure, the bull market structure, cycle of market participants, and you need to know this. Buy-side institutions and dark pools have 1 trillion assets under management worldwide. The giant buy-side institutions have 1 to 5 trillion personally in their own company that they're controlling. They control the bottoms. They start the bottoms. They slow down the selling of the, whether it's in a business cycle or a market cycle or an industry cycle, because they start buying bargain price stocks and when everybody is terrified of the market. Wealthy private investors, they started in October accumulating rapidly. That's why my students knew that this huge bull growth would occur, because I told them in October, okay, we got to be ready because in January at the earnings season, we're going to have huge growth. Wealthy private investors are your billionaires, the people who own the large corporations and then retire, Jeff Bezos, Bill Gates, and so on. Who knows more about business than those billionaires who started a company in their garage and grew it into a mega global corporation? So they are advising, but they have managers, but they know what's going on. They buy at the best price. Professional traders on the buy side also are trading not only for the institutions, but also to make sure the return on investment in mutual funds and ETFs matches. And so they will be trading short term as well. Then you have professional traders who are independent. A lot of them were working for the big banks. Banks said, you have to come back and work in the office now that the COVID is gone. And they just said, no, we're going to stay home. We're going to make money because we can make more money at home trading for ourselves. Sell side institutions, professional traders on the sell side that work for the sell side, they are trading on a short-term basis. They'll trade the retail side. They won't be trading in the dark pools. These all trade in the dark pools. Okay, they have access to the dark pools. Corporations, they invest in smaller companies. They are heavy in NASDAQ private market. How many of you know about the NASDAQ private market? Where small private companies are being nurtured and taken care of, and the corporations and the dark pools are investing in them early before they IPO. Yeah, really great stuff. High frequency trading and hedge funds are on the professional side. However, they trade the retail. Sovereign funds, foreign funds, and nonprofit funds, we are the largest stock market in the world, bar none. We are so large that if you added up all of the nations, 200 and some nations that have a stock market, and added them all together, we would still be hugely larger than the combination of all the other markets in the world. A lot of the markets only have maybe 20 or 80 or 90 stocks to trade. We have 7,000, and we have 3,600 ETFs, and we have all these other things. We're huge. So they're in our market. That's what they're doing. Overseas trading overnight. Yeah, that's what's happening. Small asset management and small funds, small hedge funds, AAII and investment groups, I bundled all together because they all trade the same way. There's all similarities. The investment groups all trade the same, so their lot size and everything is dominated by that. Smaller assets management companies with under $3 billion, B with a B, not million, $3 billion are no longer on the retail side. They're on the retail side, not the professional side. So be careful who you go with, because there's a lot of famous small asset management companies with $3 billion, and they're not on the professional side. They're retail. Means these are the professionals who make high income. They work for the big, huge corporations. They get together at lunchtime. They all enter their orders all at the same time to move the price dramatically. So if you see a chart where suddenly there's this huge volume spike in price going on midday between 11 and 1, that's the means. It's not a professional. It's not a whale. It's not a dark pool. Sorry. And retail traders chase the means. So it's really amazing. Small lot investors tend to wait and get in very late in the run because they're scared. They think the bear market, they hear all this time is going to be negative news. Then suddenly about at this point, then it suddenly becomes positive. Today, oh, the market's running. Oh, it's going to be great. Oh, consumers are happy. Yay! Yeah, well, what's going to happen next? Yeah, we just got through an earnings season that was great, but can that be matched and better next time? So you start watching the buy-side institutions going, are they rotating out? Are they bending that? Are they bending that trend? Are they rotating out of that stock? Checking the PSHI and so on and so forth. So percentage of shares held by institutions, very important. Retail trading chat groups all depend on each other. They're all retail. It's the blind leading the blind. It's like, people trying to teach each other, and they don't have any professional in there to help them at all. They have gurus, but they don't know what they're doing. Odd lot investors get in the last. We have the odd lot investors that just came in last week. They were so excited. I'm going to make a ton of money on NVIDIA, I bought it at like such and such a price, and it collapsed 200 points, and they go, ah. Okay. So 80% of all the market activity, some $300 billion changing hands every day in the market, is controlled by the professional side. And all of you are paying attention to these groups. These groups account for only 20% of all the market activity. Bad idea to be worrying about what they're doing. You should be worrying about what these are doing. And your normal indicators and your normal reversals and continuations and all the stuff you're using doesn't show you that. On the downside, it's just the opposite. Buy-side institutions start selling, wealthy investors, corporations, sell-side institutions, and professional sell-side traders and professional independent traders all set in before it starts moving down. I just needed room. But they get in here at near the high, and they just wait. They have a sell short, and they have a buy to cover way down here. So suddenly, high-frequency traders get their hitch too. So they're going to gap the stock down by filling the queues of the retail side stock exchanges full of small lot orders on a millisecond, all selling. And so they're selling short. Sovereign funds panic. They start selling, and their buy to covers of these guys fill those orders. And small funds managed investment groups panic, and the sell side institutions and professional traders buy to cover, fill those orders. Retail traders start in here going, oh, okay, we can start selling short. They're late in the game. Memes groups and chat groups, they're all in there. Small lot investor. Oh, they've held because they're supposed to hold forever. Let's hold forever. We should hold for 40 years. No, you can't do that anymore. Some companies don't last that long. Yahoo certainly didn't. Small lot investors, capitulation. Odd lot investors, capitulation. Who's buying? Buy-side institutions, because right in here, these sell-side professionals stop selling short. Bump, stop. Buy-side institutions are slowing down the runs down. They're quietly accumulating until all of this is exhausted. Everybody's sold out. They have no investments in the market in any way, shape, or form. They're never going to be a buy the market again because it's a ripoff. I hate the market. I hate the market. I hate the market. Yeah, I hear that all day long. There's nothing wrong with the market. Everybody can make money, but you have to pay attention to what's going on. Giant buy-side institutions has grown exponentially. The buy-side institutions now dominate every financial market globally, and they are massive, and they're mostly US-based corporations. These are the ETF developers, mutual fund companies, and 401k pension management firms. Over $100 trillion is under their control. To avoid front-running, these institutions have off the exchange peer-to-peer transactions that are hidden from the public exchanges. Everybody comes to me and says, Martha, how can I find this dark pool? You can't, except in your MetaStock charts with the indicators that I have. These are called dark pools of liquidity or alternative trading system venues. The SEC has documented that dark pools control price at a specific price range level for buying or selling, and therefore do not alter or disturb price. That means you need a totally different set of indicators to find the dark pools, and there's 50 different ATS venues. It's massive. So you're up here at the peak, and they have all this liquidity that's hidden from you. You can't see. You cannot see it. HFT started in 2002 after the pricing of US stocks switched from fraction pricing to decimal pricing. In order to make profits, these SOS bandits or independent traders that once were floor traders, in order to make profits on the penny spread instead of 25 cents, 75 cents, $1 spread, quantities of orders and speed of execution increased exponentially. They bought whole new $1 million computers, and they went to the exchanges and say, can we plug right into the exchange for high-speed execution? And the exchanges, needing money, said, sure. Currently, HFTs account for about 50% of the liquidity on the public exchanges each day. So they're not going anywhere because they provide liquidity. These companies trade on the millisecond scale, trading 1,000 times a second or 60,000 times a minute. Retail traders, by regulations from the SEC, are only allowed to trade the minute time frame. That means you need different indicators than you did even a couple of years ago. Most retail traders are using the same outdated and popular indicators. These indicators become overused and exploited by HFTs. High-frequency trading firms use these popular indicator formulas and strategies to find anomalies in order flow. Their favorite is MACD and now RSI and stochastics. When cluster orders are identified by the quantitative analysis QA formula, it triggers automated electronic orders that cause whipsaw action in retail trades. You got whipsaw trades? You're trading against the HFTs, folks. It is not the market makers who are causing your trading losses. It is you getting in the way of the HFTs, giant dark pool institutions, and getting swept up in their massive order flow. Normal order flow will be very irregular. Cluster orders are caused when there's chat rooms and retail groups and all this, all trading the same way. You all have the same indicator. You're all day trading. And so HFTs just pick you off like that. Dark pools always have a range. If it goes below the range, their automated orders stop. If it goes above the range, the automated orders stop. They're always in control of price. In today's electronic marketplace, you must use certain indicators in order to analyze a stock pick properly and thoroughly for your trading style and the market conditions. Also, your indicator sets must have indicators for all the market data, not just price indicators. You need quantity indicators more than you need price indicators. Quantity indicators encompass several categories of indicators: quality, accumulation, distribution, volume-based oscillators, flow of funds, and hybrids. And so we have a stock chart, and we have quiet accumulation, and then HFT's gap up. See that long volume pattern? That's an HFT gap up. Okay, so you see these runs coming. There's a quiet accumulation right in here. Get you in with the nudges that the pro traders have, because they've been seeing this quiet accumulation that's been going on here. It will be a rectangle at most times, and I teach my students how to draw the rectangle around, because they're identifying a fundamental level. You want to know what the fundamentals are? You just have to learn how to read the stock charts properly. There's a fundamental level right in here. And then there's a fundamental level right in here, and then it takes off. They're no longer buying. Dark pools aren't buying. They're just sitting waiting. Smaller funds are buying. Super blasting is always smaller funds. So we have another one where we have it with selling, selling, selling. Then all of a sudden quiet accumulation starts, and then the stock moves up. You need to get in at trigger points with specific buy entry signals so that you can see what's going on. We have a drop in price here, and we have a raise here. That warns before that this is going to go. There's another indicator also, the PT VA is also excellent at showing when it will signal on the white candle, and then you can get out the next day. It's great. So high frequency trading, price and volume, and TTQA action. This is usually a one-day event triggered by news. They are mostly seen on big blue chip stocks because that's what most of you trade. The dark pools are buying the future stocks that are going to grow, like NVIDIA. These huge moves with exhaustion pattern volume and TTQA seldom have this action the next day. So it's a one-day event. HFTs get in, they hear about news or something, they gap it down or run it down on huge, huge volume. This indicates the huge exhaustion pattern, and it pops back up. Now you are trying to sell short, and you have a bargain hunting buy-side institutions in your way. Smaller funds and retail traders chase HFT action because they are using news for their trade entries. I can't believe how many of you are trying to sell short in a moderately uptrending market. Are you wanting to give your money to the professionals? Or are you wanting to make money? These patterns frequently occur at or near the bottom or near the top. So a lot of times the HFTs will gap it down right into the buy zone of a dark pool. It's like, whoa. And of course, then immediately starts moving back up. Retail traders tend to be on the wrong side of the trade when they chase HFTs. Don't chase HFTs. You should not. So this is my oscillator. That is a volume oscillator. It will signal before this run down, and it signals regularly. It also will signal that a bottom has been reached, that this is not going to continue moving down. It's going to move sideways because there's quite accumulation going on in here. So the signals at the bottoms and the top. Also, you want to watch this flow of funds over time. It tells you what's happening. Oh, well, most of the time there's money moving into this. If there was money out, it would be a little different. It would be showing like this. Oh, money's moving out of this stock. Even as it's moving up, there's this contrarian pattern. Oh, money's flowing out. They're letting the price go up in it. And then these small little sellings are them selling as it's moving up. So they're making money as they're selling. Yeah, and then right here, there's a bottoming action. Okay, we need to stop selling short. But you'll try to get in here, and then you'll have a whipsaw, and you say, how unfair this is. It warned you way over here. Dark pools are starting to accumulate this, okay? So these indicators are very valuable. Indicator summary. In order to trade the automated marketplace, where dark pools and HFTs dominate, the retail side, public exchanges, HFTs dominate. Dark pools are on the ATS venues, hidden. You can't see their activity. There's no way to see it. It is forbidden by the SEC. You'll never see it. So anybody who says that they can show you the dark pool stuff is lying. And the SEC will eventually come and penalize them for misleading you. They just have to find them. You must have indicators that quickly expose where the dark pools are accumulating and when HFTs have entered thereafter. So this is the little pattern. Write it down. There'll be a buy zone, and there'll be dark pools quietly accumulating, not moving price much. It's always a range. And if it goes out, they stop buying. And if it goes down, they stop buying unless it goes way down. And then they'll buy because it's a bargain. Then there'll be the technical trader nudge. There'll be this candle. It's a brand new candlestick pattern. I teach it to my students, and it's a nudge. It's telling you, okay, pro traders have identified that dark pools accumulation. They nudge and they nudge and they nudge. What they're doing is they're pushing the HFT. They're pushing the HFT button. Guess what? Guess what? And so then they sit back and they wait. And all of a sudden the HFTs just gap that way up. Happened so many times during this earnings season. It was unbelievable. I said, students, there's a nudge, there's a nudge. And they got in, and then all of a sudden the thing gapped hugely. It also warns of a gap down. Palo Alto, whoa, was anybody ready for that? My students were. Since dark pools use controlled and bracketed orders that keep price within sideways pattern, price indicators will not expose their activity. Write it down. Price indicators mostly will not, unless you see that just this narrow line that I teach. I have to teach you what to look for. It's something that takes a little time to learn. This means you will probably chase the HFTs after price has moved instead of getting in ahead of the HFTs and riding along with the dark pools and the pro traders as price moves up. It also means you are likely to be buying into a topping formation without even realizing it as price moves up slightly and then collapses as the dark pools exits quietly and HFTs suddenly trigger on sell down, selling short, often with a gap down. Without indicators that show you these patterns, you are trading blindfold. Accelerating your indicator analysis pro tips. These are your tips. Your first template should not be price indicator, but have a volume and accumulation indicator. So candlesticks are your price, and make sure you're using the proper aspect ratio. The aspect ratio is a golden rectangle. And a lot of times I'll see these squished charts or skewed charts. And it's like, how can you see anything? And there's some people are still using bar charts. Get with the program, candlesticks, candlesticks, candlesticks. Your first template should not be a price indicator, but have a volume and accumulation indicators. This is a priority. So you'll have your price based on candlesticks with the aspect ratio of a golden rectangle. And if you don't know what that is, look it on the internet or come visit me and I will help you put your indicators and your charts together. MetaStock has a beautiful layout. Perfect, perfect. And then you have your two indicators below. Do not stack more than two because it skews the data set. You have to be able to read the stock chart. An AI cannot read the stock chart. An AI will never be as clever as a human brain. The human brain functions at a level that AI only dreams about. Price indicators can't tell you where the dark pools have been buying or where their HFT activity has occurred in the past. The price indicators can't tell you that. If the first template analysis of the volume and accumulation fails, your stock pick criteria, do not bother studying any other indicators. Move on to the next stock pick. So I have this set up so it's super easy. My students have a set of buy entry signals that are specific to TechnoTrader that I have found that are the dark pools and the pro traders, what they use. And since I work with pro traders and I know a lot of these things and I go to trading floors and study what's going on, I can identify these new entry signals. It's not a reversal or continuation as in the candlestick books. It's a whole new candle pattern. And I know that MetaStock has one of my webinars in their library. So you can go there and check or come to our website. We also have some there. So you're studying those and you want to check and make sure that it's all lined up. You need two indicators below. And then if you check the first template and it's negative, that's the end of that analysis. It's that fast. Use computer scans and sorts that have hybrid leading indicators in the formula. I have market condition scans that I give only to my students because it's my formula that was on my trading floor. And because I went in the morning and I go, oh, futures. And then I realized they don't work. They just tell you what the indexes are going to do. Then they don't tell you what the broad base of 7,000 stocks or ETFs are going to do. So I created these scans in MetaStock, and I developed them exclusively for MetaStock, and they tell you exactly what to expect for the trading day and what's going on there. I students tell me I have a high 95 or 99% rate. I never bothered to check. I just know it works. This will automatically bring up a far superior stock picks to study. Trade not just with the trend, but also with the large and giant funds so that you can enter prior to the huge moves that occur when HFTs find the dark pools because of the pro trader nudges. Maintaining a consistent template layout so that you can easily compare relational values between volume, accumulation, distribution, and candlestick patterns. You have to have the right layout. Don't skew everything. Don't try to squish everything onto one chart. It is one click away. You can go click, 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 and you have all your indicators and all your things that you need right in MetaStock. Super easy. You do not have to squish it all onto one chart, and you shouldn't, because then you can't see it. So that's the end of my presentation. Thank you for bearing with me through that whole thing. I hope you enjoyed it, and I hope you learned a lot. You want to visit www.technotrader.courses. This is our area for our people who are interested in finding out more about TechnoTrader. You start with some free lessons to learn more. This shows you how we educate, how we teach, what we teach. We have how to create a professional trading plan so that you trade like my professionals if you're a CMT designate or a CMT candidate, or if you want to be a professional trader, that's something you will really want to study. The Leading Candlestick Indicators mini course is great. You can learn about some of the new leading hybrid candles, and there's also webinars on that as well. And then swing trading with the professionals, how to swing trade, how to identify professional trading going on. And I give a prize to everyone for putting up with me for almost an hour. And it's you have 24 hours to claim your gift. You have to register on my website. And we don't harass you with sales calls and all that stuff. We do invite you back. We'll send you a little email saying, come on back. Why don't you check this out? But we're very soft about it because I am only looking for very serious traders. I'm not looking for that sell millions of my courses. I am in retirement. I do this because I love it. I have a great passion. I enjoy every aspect of it. Nothing makes me prouder than to have one of my older students now, a professional, saying, Martha, I'm running $100 million hedge fund. Or Martha, I made more money last year trading platform position style trading than my husband, who is a high-end manager at Boeing. And I'm going, or my student that said, I just made a killing on NVIDIA. That makes my day. That's why I do this, because unlike a lot of professionals who don't want to have anything to do with the retail side, I believe in you. And I know my professionals who work very hard and diligently. So we have relational technical analysis. It's your free gift. All you have to do is register on the site. You have 1 week of free access. That's the code that Jeff can give to all of you, and type in, if you would please, Jeff.
Already done.
I am done.
No, I already put the link in the chat for you.
Okay,
so.
Good. Awesome.
Yeah.
Is there any questions?
Yeah, a couple, and some comments, and all that kind of stuff. So David earlier said, when you talk about quantity, do you mean dollar volume? And how is that different from actual volume?
Okay, what we're tracking is not dollar volume. What we're tracking is lots. How many shares? A large lot or a giant lot buy-side institution, their lowest one right now is 1 million shares. I check this information every day. It was 1 million, and the highest one today was 9 million. Yesterday, there was a 35 million lot order going through. So it's shares. It's not dollars, it's shares.
Gotcha.
Lot shares. So we differentiate a small lot from a large lot shares.
Gotcha. Thank you. Scotty B says, good stuff.
Thanks.
Our very own Greg Lewis, I think you know Greg.
Oh, yeah, I know. Hi, Greg.
He said, I lost the quote. Martha is delightful. I want her for president.
I get so many people telling me that, but I can't stand politics. I have a rule with my students, no politics. The only politics we do is the market politics, which are totally different than government politics, but that's all we do. But yeah, it's so fun. Please join me. I really enjoy teaching. You'll get a wealth of information from the website. There's lots of free stuff to poke around in. We have several mini courses, and I have a lot of people that go through all of them. They go, wow, this is so cool. And that makes my day. So thank you for having me. Any other questions?
I wanted to reiterate, it's free for a week. I've actually been up to the TechnoTrader place, and I know how seriously they take kind of the education that they create, and it's all really good stuff. So ttrader.im-rta-224. Martha, absolute pleasure. Thank you for coming. Thanks for spending some time with us. And
It's a pleasure of mine. Thank you.
I'll talk to you again soon. And thank you for also teaching me a new word with the vertical river, or what, airborne river, or whatever.
Aerial river, yeah.
All right. Thanks, Martha.
Talk to you later. Bye.
Okay. Well, let me go ahead and do this. We're just going to change over a little bit. I'm going to push the buttons I need to push, all that kind of good stuff. Okay, yeah, I think, this button too. I do want to spend a second to say thank you to Stocks and Commodities. I don't have their sign up right here, but they've been a great supporter of the MetaStock conference. They've got 1,300,000 or so around their subscribers. Been publishing since the 1980s. Always does some great articles. Always a good supporter of MetaStock. And you know what? If you want to get a free trial issue, just go to traders.com. I think they can send you the latest issue, and they're happy to do that. But one of the things that I know that you think is very, very serious, or take very seriously, because you're here on day 4, is education, learning more about different market techniques. And certainly having somebody deliver you a magazine every month that has different new cutting edge techniques about trading is very, very helpful. And I do want to say thank you to all of those people over there for supporting the events that we've done for over a decade. We do appreciate it. So in the Jack says, are there a MetaStock add-on for the charts? All of the sort of is the answer, Jack. I appreciate that question. All of the indicators that they've written, they include with courses. So I don't know what the pricing is on that. We don't sell it here directly at MetaStock, but I would recommend them. I was really, really involved in that process when we put them together, and we've been really involved with Martha ever since. And you can find out more about them if you go to technotrader.com. So can you please provide the code for free registration? Yes, I believe you just need to go here. Kumar, let me go ahead and send this to you. And I think that's all you need to do. To save some time, just to kind of catch us up a little bit, I went ahead and had you guys submit numbers for me in the chat so that we could pick out a winner. And I want to say thank you to Apogee, Veronica, Tim, Peter, MetaStock, Calvin, and everybody else that gave numbers. Appreciate that. I am going to give away a prize, and the number that was picked was 1111. And the person that goes to is Keith Ford. Oh, Keith F. Keith F. And he is in. He's got a Hotmail account. He's here in the US of A. I'm going to basically kind of the prize that you won is I'm going to give you a candlestick forum package. So Steve Bigelow, the late Steve Bigelow, a super good friend of mine, great technician. I have a couple of books that I'm going to send to you. So one of them is called Candlestick Profits, Eliminating Emotions by Steve Bigelow. The other one is High Profit Candlestick Patterns by Steve Bigelow. And I'm also going to give you a mouse mat that he had created that kind of has all of the major patterns. And I would recommend you read these books. They're great. One of the things about Steve was he was such a great teacher and writer. His books are very, very straightforward. They're easy to read. And so congratulations. I'll go ahead and kind of send you some information about getting that. Make sure I have an address that's good for you, all that kind of stuff. And it's going to be next week. So there you go. Kumar says it's looking for a code. I'm not sure exactly what that is for the code, Kumar. You might need to actually email or get in touch with Technotrader. And you can do that at technotrader.com. So I just don't know what it is. If you haven't, try the RTA-224, plug that in and see if it works. All right, cool. All right, our next speaker is going to talk. Oh, there's this toxic commodities. Cool. Our next speaker is going to talk about stock gaps and gaps in stocks and strategies that she uses around gap trades. She always comes in. She does a great job. I really like her take. I love looking at gap analysis of gaps. And so let's go ahead and get started. Melissa, how are you doing today?
Testing, testing. Can you hear me?
I can hear you, yeah. Go ahead and make you the presenter here.
Okay. Wonderful. Can you hear me?
I can hear you. I can see you too. Oh, I mean, I can see your charts. I should be specific.
See my charts, yeah. Well, if you can see me, I don't have my hair and makeup done, so.
Okay. Totally fine. I can hear you well, and I can see what you're trying to show us. So I'll go ahead and get out of your way, and I'll let you take over now.
Thank you so much. Thanks for having me, Jeff. Welcome, everyone. What a great day to be here. What a great day to trade, which, of course, today is what? Today is leap day. You get one extra day to trade, one extra day to make money, and one extra day of life. So I'm looking forward this afternoon actually to go out, enjoy Central Park. I live in New York. For those of you that don't know me, my name is Melissa Armo, and I own my own company called the Stock Swoosh. And as Jeff said, I trade gaps. I specifically trade momentum in gaps, and I do prefer to short, although ironically, we did go long today. The market gapped up today on some economic data this morning, and we went long. But I appear on TV, I talk about the stock market, I talk about economic data that comes out in news, and of course, many things that affect the overall market, moves like we're happening today. If you have questions after the presentation today, you can always email me at melissa@thestockswoosh.com. You can follow me on Twitter, Facebook, YouTube, or Skype, or you can call me at 929-3200-GAP. Probably the best place to follow me is YouTube, where I put a lot of videos. I put trading room videos on there, webinars, and I also put some interesting videos about New York. So we're into already almost, tomorrow is officially March 1st, the third month of 2024. Hard to believe 2 months of the year is already gone. And it's a good time to reassess and think about where you are for the year. I'm very goal-oriented. I'm a very goal-oriented person. I set goals for myself, daily goals, weekly goals, monthly goals, annual goals. Sometimes it's very challenging for traders, particularly if traders are losing money, to think in their mind about making, 200 grand a year, whatever trading. They can't seem to quite grasp that concept if they're losing, especially if people are losing for a very long time. So think about it in bits and chunks. And I say chunking it out. How are you going to do this week? How much money do you want to make tomorrow? And again, it's a good time to look at what you're doing so far this year for the first 2 months of the year. Think about it. Are you on track for the year? Because if you're not, you got plenty of time left in the year, 10 more months to get on track, to do something different, to do something new. So I put the stats in here. I run a live trading room where I do trades on margin. Most of my trades are actually shorts, okay? So far for the year to date, we're up 229,059. This is through the 26th. Now today, I actually, like I said, went long. We actually went long Amazon today. I still like Amazon higher, and I also called an options trade in Amazon. These are our stats for the year so far in options, 618, 645. So far this year, it's been a really strong start to the year. Why? The markets had a lot of momentum. The markets had a lot of volatility, and stocks have specifically as well. So our year-to-date totals for day trades and options, again, you could do one, you could do the other. I do both. It's totally up to you. But 847,704 year-to-date. Now, I risk more money, I will tell you, in my options. And the reason I do that is because I wanted to be able to trade certain stocks like NVIDIA. We're in NVIDIA calls, actually, right now. And I believe that NVIDIA is higher, and NVIDIA is kind of expensive to trade as an option, but still way, way cheaper to trade as an option than it is to do as a day trade based on the price point. So one of the reasons people love to trade options, and that includes me, is you can take a trade and hold it overnight with a fixed risk. And we will talk a little bit about options later. So you can capture the momentum with a fixed risk, and also the benefit of doing options, you can capture the overnight move in a gap. And again, that's what we're going to talk about today. So to start out, just to set the tone here, I do these webinars, I do these lectures. I'm always excited to come and talk to Jeff's people. But it's really, really important when you're listening to all the lectures this week, when you're listening to people talk today, when you're trading, when you're sitting down and deciding what to do with your cash, or even to sign up for a class like mine or somebody else's, you need to think about what you're doing. You need your brain, okay? So you need to keep your brain healthy. You need to think about what you're doing when you're trading. And again, I always say I can be perfect for 30 minutes a day, 1 hour a day. I focus on the morning. The morning part of my day involves trading between 9:30 and 10 a.m., maybe till 10:30. But usually the first 30 minutes of the day, I'm in and out and done. And so I'm extremely focused within that 30 minutes of the day. Far too many people, when they're trading, and again, today's a good day to talk about this because the market gapped up today, rallied, flirted with the highs, then dropped. So many people look at things, make choices based on fear, or basically gamble in the market and don't really think through what they're doing. So you need your brain to trade. You need to think things through when you're trading in order to make money, in order to be successful. And this is whether or not you make, $1,000 a week or $10,000 a week. You have to think through what you're doing. So how do you make money in the market? Sounds like, oh, well, everyone's trying to do this. How do you do it? It's really not that complicated when you break down the philosophy of how. The how is what? You determine who is in control. If you can determine who is in control of a stock or the market, you can get into position in the correct direction to profit. In other words, if the bulls are in control, you want to be long. If the bears are in control, guess what? You want to be short. Because the only way you're going to make money if a stock is rallying is if you go long. And the only way you're going to make money if a stock is falling is if you short. You're not going to make money if you're against what's going on. Okay, so you have to look at the control side of it. And this is often where frustrates people because today's again a good example of this because the market whipped around today. If you were in calls, for example, today, if you were in longs, you would stay with them. You would stay with them. You have to have 100% conviction. If you shorted, which I don't know why you would, and we didn't short today, but again, if you shorted, you would have to have a reason for doing that, which would be what? Now, the market gapped up today. I don't short gap ups. So that's something we're going to talk about a little bit. But the bottom line is, in order to make money in the market, you need to determine who is in control, and then you take a position in that direction of the control. So again, who is in control? This is the one that we did today. This was Amazon. Definitely. With Amazon, the bulls are in control. So here we have, again, Amazon closed here, gapped up, rallied. So what is a gap? Let's just go over this very specifically because, again, I trade momentum and gaps. A gap is the difference between the close and the open. So yesterday, Amazon, this is a daily chart, Amazon closed here at one price and gapped up at another price. Then it rallied, and the momentum in Amazon, at least this morning, I don't know exactly what it's trading at right now, but the momentum in Amazon this morning was up, okay? So the bulls were in control. So you would have wanted to go long, which of course we did. We got in, got out. And again, this is still higher anyways. So you could be in calls in this, looking to continue up. This stock is getting bought. Now, it may be sloshed around here with the overall market at 12:15 lunch period, but it's neither here nor there. The control this morning, if you traded this, was in the side of the bulls. This was when we did the other day. This is PANW. Who's in control of this? This was the day we did it, February 21st. The bears. Stock closed here, gap down. Again, what is a gap? A gap is a difference between the close and the open. So at 4 o'clock Eastern time, this stock closed. Okay, this was an earnings gap actually. Then it opened the next day at a price that was lower. Okay, then it fell, and it fell big, huge, got sold off, shorted, and we shorted this. And so again, who is in control here? The bears. Okay, so the only way you would have made money there is what? Shorting. Just like today, the only way to make money in Amazon today would have been to go long. Okay. And specifically, we're talking about needing your brain. You also need a focus. And as I said, my focus is gaps. So the strategy that I do is focused around gaps. So again, what is a gap? A stock gaps with the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple, right? But how do you determine how to play the gap or what stocks to do? Many gaps are nothing gaps, or what I call nothing burgers. There's nothing to do with them. You can't predict the direction of them. In other words, they're not getting bought. There's no one really in control, or they're not getting shorted or sold off. There's no one really in control. Many stocks will go on any given day with the overall market. And unless you read the market correctly, pretty much for the whole entire day, it's going to be difficult for you to make money unless you have a specific stock that is going on its own, which of course Amazon actually is going on its own to the upside, and PANW on the day that we did it was going on its own to the downside. Now here was another one we did. Again, what is a gap? A gap is a difference between the close and the open. So at 4 o'clock, the stock market, the US stock market closes. Then you have something called post and pre-market trading. And that's where the gap's being created. Now here, the Roku closed around 95 and change. Open in the morning here around 77 and change. Open, dropped, fell. Again, this was a short. Now I didn't do a put in this. I didn't do an option in this, but you could have. It's actually continued down. Actually, this was a nice overnight if you did it, but I did the Dane trade in this. This was Roku, but this was a short. So again, who is in control here? The bears. All right. So how do I determine the control? I have a checklist. It's a 26-point checklist. This is the meat and potatoes of my strategy. This is how I determine who is in control, whether or not I want to go long it or short it. But really, the rating system helps me determine who is in control. And that's how I get high odds in my trades. And that's how I get the kind of results that I just showed you earlier for the year. Because I'm not looking at everything like a 50-50 crapshoot or that I need the market for my trades. It's challenging for people to do that. Now, some people may be having a good year because the market's been in an uptrend this year, may do highs, a bunch of times. Do I think that the sustained rally in the market continues for the rest of 2024? No, I do not. And when the chop happens, whenever that occurs, whenever that is what's going to be problematic for people that are doing swing trades or who are going with the market and the overall direction of the market. What I look to do, though, is momentum trading, which, like I said earlier, is chunking it out, where I'm getting in, getting the move, get out. Swing trading or longer term trading, where you buy and hold the stock for weeks or months or years, is not even the way that I'm doing the options. When I'm doing options, I'm taking a weekly option expiration where I'm taking the trade, getting the move, and getting out. Like I said, we're in NVIDIA, so we buy a call. It has 1 week to go in a day. Boom, we get in, get the move, get out, whenever that move happens to happen. Okay. Now, I was talking about the live room. I called the PANW in the live room. So the trades I do in the room are trades on margin. So this is effectively day trading. Now, people that don't understand margin, you need to research it. You can open up a prop account and get 10-to-1 margin. You can open up a retail account and get 4-to-1 margin. Every trader, every professional trader trades with margin. And I use stops, or what are limit order stops, when I take a day trade. And again, I'm usually in and out in several minutes. But theoretically, you could hold a trade all day if you want to, if it's continuing to go. PANW was a trade that you could have actually held and had the extension here on the day, on this particular day. So what happened here? What happened to make the gap? The stock had earnings. And for whatever reason, again, I'm not worried about fundamentals of it, but for whatever reason, the stock gapped down and it tanked. It absolutely kaboomed. So we shorted it. Entry was $270.10. $600, 600 shares was a $3,720 risk. You can risk less, okay? But this was an advanced trader risk with an exit at 261. It came all the way down. I think it got to 260 or close to that. Profit was $5,460. This isn't a day trade, and this is a trade that you would have needed a margin account to do. This is a smaller risk, or what I would say a beginner risk. You could have risked less. You could have taken 100 shares. A risk of 1240. Again, you could have made 1820. This is a good return on investment, or what you would say risk to reward, where we're looking to risk one and make one. Sometimes we make a little bit more than one. Sometimes we make a little bit less. Sometimes we make double or triple. But my goal, and again, I said I'm very goal oriented. My goal every day is to try to make one. Take the amount that I'm risking and turn it over into one, okay? And again, if you can do that, you're gonna be profitable. If you look back on the stats that I showed you at the beginning, there are trades that I take that lose, but I have more winners than losers. And the reason I use stops is to control the losers so the losers don't go out of control. So when I lose the one amount that I risk, okay? But again, getting back to what I was saying, how do I pick the gap? How do I know this particular gap is going to drop or fall, or this one's going to rally? Again, I didn't really like anything to the downside today. I did look for shorts today. I was trying to find a good short today. Maybe we'll find a good short tomorrow. There's a bunch of earnings out tonight and tomorrow morning, but I really liked actually Amazon today. And that has been very strong, as I said. But how do I determine which stock I want to trade? How do I get the best pick? I rate it. I rate the gap, okay? I go through the rating system, boom, boom, boom. and I try to determine whatever stock rates 20 points or more per the 26-point rating system. Now, how do you find gaps? Well, that's easy. And actually, Jeff can help you do that at the end. You find gaps by scanning. He has a scanner. You just scan them. It's easy to find gaps. It's not easy to necessarily find what ones are going to rate good. I may go through and scan 200 things in the morning, but I only may rate 5, and then I only may like 1 or maybe 2. So on any given day, like I said, most things go with the market. And if you need the market for your trades, you're going to get chopped up. Again, today's a great example of that because the market gapped up today, flirted like it was going to hold, and then dropped and broke. Okay. Now here's another example of one that we did that was a short, again, who was in control. UPS, stock closed here, gap down, open, rallied, dropped. So we shorted this. This was a short. Stock closed up here around 158 and change, gap down here in the morning to 146 and change. Again, here's the rally, get the drop, boom. So this momentum in the UPS, the trade here is a short. You wouldn't have wanted to go long this, okay? And many people also want to trade gaps for gap fills. That does not work consistently. Well, sometimes, once in a blue moon, a stock will rally against the gap or the direction of the gap. It does not work consistently to make money. But when you're trading, when you're thinking about what you're trying to figure out what you want to do, you really just got to weigh the pros and cons every time you take a trade. But you've got to put the odds in your favor. If you don't have a system to do that, then again, you're 50-50 crapshooting everything that you're doing, because at the end of the day, you want to take trades, analyze them, use your brain, but you want to take trades that have high odds. There's no getting away from taking the risk. Again, whether you put a stop in or not, you're still taking risk when you take the trade. And when I do options, basically my risk is my stop. So I don't kill options trades in the middle of them. Actually, we were in options. We were in an Amazon call for the last week, and the trade was down actually until it flipped around today. So I will let a trade completely play out, even into the last day of expiration, for it to go in my favor. I don't kill it in the middle of the trade, even for options. But I don't look at every trade like a 50-50. I'm trying to take trades that have very high odds of working, because again, I want to make money. You can't get away from the risk factor, but you can look at things, think them through, and use your brain and say, why am I doing this trade? So many times I talk to people, and again, I've had the business now for 12 years, going on 13, that I've taught people my trading method. And this is all that I do. So it's all that I teach people, because I only trade gaps. So I've been teaching gaps and trading gaps for a very long time. And the fact is, many people, when I ask them what their strategy is, they talk about moving averages, they talk about indicators, they talk about buying support or shorting resistance, and none of those things are a strategy. You're never going to buy any indicator and get a correct and accurate way to trade that's going to work more than it doesn't consistently. And consistency is all that matters. Anybody, even terrible traders, even people that are in these chat rooms just taking trades from people that are strangers, anybody can make money on any given thing on any given day, just based on dumb luck some of the time. Sometimes people have really, really good dumb luck, and they make a lot of money in one trade. Then they duplicate and try to do it, that same thing, over and over and over again for years, and lose way more than they made in the one dumb luck trade, because they thought they knew how to trade and they didn't. Okay. It takes skill in order to trade. It takes knowing what to do. And it definitely takes having a strategy, or you're, excuse me, or you're going to lose. Hold on, let me get a glass of water here. Or you're going to lose. So the whole point is that you want to look at trades more than the indicators, okay? More than the indicators, because if there was one indicator, one specific thing that would tell you everything that you want to do, no one would ever lose. We don't use that indicator. It's always interesting to me. And again, if you look at my charts, they're very, 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 very clean. So anyways, DFX, stock closed here, gap down. This is another gap. Who is in control here? The Bears. The Bears were in control. This was an earnings gap. Again, the banks have been rallying. Now, this was way back in January. Stock closed here, had the earnings, gap down here. So closed up here the night before, around 109 and change, gap down here around 100 and change, rallied, and we shorted it. And again, you could have done a day trade here. You could have bought a put in it. We didn't do a put in this one, but we did do a day trade. This was a huge, huge trade. Why? Momentum. How do you make money in the market? You got to get momentum. Again, I'm not scalping. I'm not scalping for 5 cents, 10 cents, 25 cents. I'm not risking $3,000, $4,000, $5,000 to make 500 bucks. And you shouldn't either. Those aren't good. Again, those aren't high odds trades. They're not good trades. All right. So anyways, this one here on the particular day that we did it, we shorted it at 115. Now I did an ad. So I had doubled up my risk with this one. I really, really liked it. Push back, we add in. Then I got out at 96.80. Again, this is momentum. So when a stock and something like this at this price point, $2, $3, $4 if you can squeeze it out of it. And it was a huge trade. Now, yes, you would have had to have a margin account to do this, but to go to a retail broker, you've got to have 25,000 cash to get 4-to-1 margin, which is 100,000. And you could have taken 1,000 shares of this, actually, close to it at 100 some per share. If you go to a prop place, again, you can get 10-to-1 margin. So you can take 1,000 shares with 10 grand with 10-to-1 margin and $100 stock price point. So people always say, oh, you need all this money. No, you don't. Everyone's trading on margin. Again, if you do not understand margin, you really have no business trading whatsoever at all, as far as I'm concerned. You must understand margin. And when you do options, which we're going to talk about a little bit, you got to understand those too. Because everyone's so worried about delta and this thing and that thing with options. If you get the move, you could have none of those things even matter. None of those things even matter. Even the timing necessarily doesn't even matter, because you could get it the last day, okay? If it goes, if it moves, if it has a big move, okay? And again, that's what we're trying to get. But anyways, here was the short, get the drop, boom, out. Again, this was DFS. This was January 18th. And I'm showing you an example here. If you took less risk here, total risk 1,075, this is a great trade. Okay, you could take this trade with a $10,000 account at a prop firm. You absolutely, absolutely could. Okay, this is a nice trade. Same trade, less size, could have even taken 100 shares if you wanted to. Any questions here so far from anyone? Just looking over at the chat. You can plop it in the room. Oh, go ahead.
We do. Vincent wants to know, do you recognize after hours price action when looking for gaps?
That's the whole, who asked that?
Vincent.
Vincent, that's where the gap's happening. Now, I'm not trading it. If that's what you're asking me, no, but that's where I'm looking at it. I'm analyzing it. That's where the gap's occurring. So the answer is yes. Good question.
And then just another comment. Kumar said, keyword, use your brain.
That's exactly right.
Anyway, that's it. That catches us up for the questions. If you guys have questions, let them know in the chat. Let us know in the chat, and I'll pass them along. Thanks, Melissa.
Yeah, and again, that's why. And again, I don't want to go off on a tangent here because I know we started a little bit late today. But the fact is, you got to keep yourself healthy. You got to keep yourself healthy. Again, you want to go off and go crazy. Do it on a weekend. So you get a weekends off when you're trading. The market's only open Monday through Friday. You have to keep your brain healthy. That means eating. I eat breakfast every morning. And again, I live in New York, so I'm trading Eastern time zone. If you're in Europe, you'd make sure you eat lunch. You need to get 7 to 8 hours of sleep. Again, all of these things sound like so much common sense, but you would not believe how many people do not follow any type of structure with their everyday lives, that all of these things help your brain, okay? And there's something called, REM sleep, when you get into that very, very deep sleep. And that is where your brain is regenerating and where you're getting into that deep sleep where you're resting, then you can get up the next day. And sometimes for even me, and this is the benefit of being in the live room with me, because I'm calling these day trades live, like the PANW, and I'm trying to narrow it down between one thing and two things, or something we're not going to do. I look at it and I say, no, we're not going to do it. And I make a decision within seconds. As fast as I'm talking here right now today is as fast as I trade. And the fact is that is as fast as you can make money and as fast as the market moves. And we're trading on the 1 minute chart. So you got to be able to do that when we're day trading. But if your brain is not sharp, then you're not going to be able to make quick decisions. And sometimes you could be up a lot of money in the trade and it can all go against you if you don't make a quick decision to get out. So if your brain is sharp and you keep yourself healthy, you're going to have a lot higher odds or higher chances of doing well and making money in the market, because there's far too much competition. There's far too many people out there. It's everybody that's coming to this conference all week and millions of other people that are out there too, and they want your money. You're not making anything. You're not knitting socks and selling them in the street corner down in Times Square and getting cash for them. You are going against another person's position when you're in a trade and you're making money. And when I make money and I make profit, I'm taking somebody else's money away. There are people right now that are short NVIDIA, 100% guaranteed. People shorted that at the highs. It was a crap trade. And I don't even care if it worked for a day. I would never have done it in a million years. We're long NVIDIA. The stock is higher. And the fact is that when I make money in that trade, I will be taking it away from the people that are short because they're going to lose. And that could happen as soon as today, as soon as tomorrow. You have to be on, you have to gain an edge. Okay, you have to gain an edge. And that's why I focus on gaps. Okay, gaps are very, very powerful. But anyways, getting back to this, you can trade options and you can day trade gaps. So let's look at some options that we did. This was in January Tesla. Now, I've been liking this. I've been liking this for a while. It's starting to fall today. We'll see. Strike for this one was 205. So we did the 205 puts. And I sent this trade out. The newsletter goes out in an email January 17th. It expired the 26th. So let's look at the Tesla chart. 205. What day was that? The 17th. So I called this here. Oh, this was a while ago. Here. Okay. Take it over. Bump, bump, bump. So again, this was the 205s. So this was a put. The cost of the trade was $450, which wasn't crazy for Tesla. Again, depends what you want to risk. You could have done 2 contracts for $900, made $900. This is a good trade. Dropped quick. Again, we're doing the weeklies. Whether you do, I always do the Friday expirations. And even when I'm doing the market, I'm not doing the dailies. There are daily market expirations. But the bottom line is the way to be in Tesla to make money on this one was the drop, was a put. You could have even made more money in this if you held it all the way down to the last day. I don't always do that, but you could have done that there. Now, we started talking about this at the beginning as far as goals, and I think it's also important to know, why do you want to trade? Are you doing this because you want to become wealthy? Are you doing this because you want to do this for a job? Are you doing this because you're retired and you just want some side income? Are you doing this because of inflation, which is, of course, the reason the market reacted today? Because costs of things are so high, rates are so high that you want extra money coming in. Many people decide they want to trade the market for various reasons and different reasons. And once they get bitten by the market bug, they're in. I find that people are just in for life. For as long as I've had the business, I've had people following me, which, like I said, it has been for 12 years, going on 13. It's the American dream to become rich, successful, and financially independent. A lot of people want to make that happen, but you've got to have a plan to make that happen. No one's going to ring your doorbell and drop it in a bag of money in your lap overnight. And again, sometimes it takes time. You set goals for yourself. You say, okay, between now and the end of the year, between now and January 1st, 2025, I'm going to have this much money in my trading account by trading for the rest of this year. And again, that's why I said we're 2 months and this is the end. Today's February 29th. It's the end of February. Look at your trading account. Are you up for the year? Are you down for the year? Are you where you want to be? Okay, it's a good time to assess really at the end of every calendar month. Okay, you don't have to do it every week. But again, at the end of the calendar month is a good time, or even quarterly, But so many things out there, so many things to do, so many different strategies. And again, you're here this week learning lots and lots of different things. If what I'm saying today resonates with you, then you may want to reach out to me. But the fact is, whatever you decide to do, you really only need one strategy and one focus. That's how you simplify it down. And again, that helps ease the stress off of your brain about the risk factor, because you have to risk money in order to make money in the market. So for me, my one strategy and one focus is gaps. And again, particularly shorting, although I will go long. Like I said, we went long today. But why gaps? Why are gaps my focus? Because gaps are the most powerful show of price action in a chart. Gaps have large moves. We talked about some of those here earlier. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. And again, there's gaps all the time. There's gaps every day, but you can't go long every bullish gap. You can't short every bullish gap. You can't short every bearish gap, and you can't go long every bearish gap. Again, it's not that simple. I analyze them. I study them. I try to figure out which one to do and then the direction. Here was one we did, the PayPal. Stop close here, gap down, open, drop. So PayPal, this was back here, had earnings, closed up here, around 63 and change, opened down here, dropped, fell. And again, we shorted it. It was a put, okay? And we also were doing some day trades here. But again, you could do whatever you want. You could do a day trade. You could do a put. I'm not doing swing trading, okay? If I did, my risk would be a lot less, okay? Because I wouldn't have a fixed risk in overnight swing trades. But if you wanted to do swing trades, you could do swing trades too, Again, there's many things you could be in right now with the overall direction of the market long, overnight as swing trades. But then you're not making money every day, and you're not making money every week, and you're not making money every month. When if you're in a swing trade, you're waiting for something to go, you could wait until July of 2025. The whole idea of trading momentum, which is exactly what I do, is I'm an active trader. You can call me a day trader, but I do options too. Whatever you want to call it. I'm an active trader. I'm looking to pull money out of the market on a regular basis each and every single day. And that, again, is something that I specialize in. Swing trading is, you can look at your retirement account, you can look at an account you have on the side. You're not going to be taking positions every day and getting out of them every day. And many times you will be down those positions before they go. And they're also affected by the overall market. But the key to what I follow in gaps is following, like we're talking about, control. Who's in control? Institutional money. That's who's in control. There is only one thing and one thing only that can move the direction of a stock. It's money. Not a little bit of money, but a lot of money, or what I call power money. And again, that's the whole key. Power money is in charge. Power money is in charge of the stock's direction. Trends are set and moved by the power money people. Guess what? There's a ton of them in the market. There's a ton of them in the market. There's a lot of large professional traders in the market. Banks trade. They have trading desks. There's hedge funds in the market. Again, think things through when you're taking the trades. As fun as it is to make money, it's not fun when you lose. All right. And it's also not fun being chopped up. You could take a trade, kill it. You could go long, you could kill it. You could lose a little, then short it and kill it. I guarantee you people are doing that with the market today. And they're doing it with NVIDIA, like I just said. You need to use your brain. You say, I believe this is higher, or I believe this is lower. If you don't know, you shouldn't be in the trade, because trading isn't gambling. Again, if you want to go gambling, just go to Atlantic City, go to Las Vegas, have a good time, look at it as a vacation. When I get up in the morning and I trade, I get up and I rate the gap, and I put the odds in my favor by saying, I'm not going to do this because it rates under 20, or I'm going to do this because it rates over 20. And then I put them in order, 1, 2, 3, 4, 5, if I have a couple of picks or whatever I want to do. And look at the overall market. Is the market with me? Is the market against me? Do I have to worry about the market today? Okay. Now, as I was saying, the point is to stay consistent, because it's the only way you're going to have longevity. It's the only way you're going to have longevity year over year over year. And many people that I talk to, they want to trade, they really want to do it, but they're up and down, and then by the end of the year, they lose. The 26-point checklist gives me the consistency that I need, because it helps keep me focused, and it will help keep you focused too. Again, that's how I know where the money is flowing. And this PANW was a good example, because it was a nice big short. Yes, it was a little pricey, but again, you could have bought a put in it as well. Again, puts are ways to do trades that are cheaper if you don't have a margin account. But for me, I personally like trading in the live room. I like the fast trades, and the benefit of trading gaps is you can trade fast and be done quick in the morning between 9:30 and 10. And I think the whole idea of trading is to work smarter, not harder. Sitting at a desk for 6.5 hours a day can really zap you. Particularly if you're waiting somebody to go. If you get the big move in the morning and get out, you don't have to worry about any economic data, reports, things that come out, the Fed, and you could just go about your business and go to your job or do something else, or go take care of whatever you have to that day. But a big flow of money going a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of the power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it isn't, it is. Trust me when you say that. Again, today is a great example of the market. NVIDIA is another great example too. The instant control on NVIDIA is to the upside. That's it. And that's why I'm not shorting the stock. I'm not shorting it for an hour, a day, 5 minutes. No. The control on the side of NVIDIA is up. Bullish. The bulls are in control. Okay. Any questions here so far? Now, I put in here a week of trades. Yes. Oh, go ahead.
We do have one coming in from YouTube. Sorry if you covered this already. Do you subscribe to the theory that all gaps get filled?
No, that doesn't work. I said that earlier. That person must have come in late. Gaps do not fill themselves consistently as a way to make money. I do not do that now. I'm taking a gap in the direction of the gap. And if you're trading gaps for gap fills, you will not consistently make money. While sometimes it may work. If you take one trade, you're going to lose in the next 10. It does not work as a consistent method to trade. And that's what happens then. People get tripped up. They take a gap, they lose because they do it just like you said. They do the fill, it doesn't work, and then they get plowed over and they lose a lot of money, and then they don't want to do it. People trade gaps and they don't understand them. That's not what I'm doing. Even if it rates poorly, I'm not flipping it. Say I rate a gap, it doesn't rate 20 points or more. Say it rates 10 or 15. I'm not taking it in the opposite direction of the gap anyways, because you must respect the gap.
Very good, thank you.
What were we talking about here? Okay, so this was 1 week of trades. I'm just going to quickly go through these here. No trades on the 1 day. It was the Monday, the 29th. Nothing rated good to do. Again, if you get up in the morning, there's gaps, you still got to rate them. There's nothing that rates good, you're not going to trade. And that can happen. Okay. This was BA, January 30th. We were shorting BA a ton, just an absolute ton. Again, this is dropping today. We didn't do this today though, but BA fell. Again, this is momentum. This is momentum. Here's the gap. Stock close here, gap down, open, rallied, dropped. So again, you get in, get out, done, boom. That's it. Could have held a little bit more, could have lowered your stop, but you're in and out of the morning and call it a day. We also did UPS. This was a good short too. This closed here, gap down. This was a gap on earnings. We shorted it, got in, got out, done, boom. Again, you see how these trades are quick and fast in the morning. Now we did Tesla on the 31st, we lost in this. I shorted this, got stopped. That was the end of that one. Again, I have a fixed amount and then I got stopped in it and then I lost. Again, if it resets up, you can retake it, but you got to put the stop in. We had a huge trade in Google. Google went the other day, actually. I saw it after the close and I didn't do it yesterday. You could have shorted Google yesterday. It was beautiful, but we didn't do it. Stock close here, gap down, open, dropped. Okay, Google was a nice short here on January 31st. February 1st, we did QCOM. I shorted this here. There were people in the room that got out. I didn't. I didn't react fast enough. It booped over, and I got stopped in this one. I lost in the QCOM. And then we did BA. This was February 1st. This fell off a cliff. Again, the momentum was to the downside. And then we did Amazon here. Actually, this was February 2nd. We went long Amazon. I've been liking this for quite some time. Like I told you, we did it today. We went long Amazon, rallying, boom, out. Again, nice trade, good trade. Could have bought it as a call. Again, nice momentum here in this today as well. And so this was 1 week of trades. My average risk is about $3,000 per trade. You could risk half. You could risk, 1/5 of what I do. It's the whole idea where you're going to have more winners and losers, and you chunk it out as you go about trading, because that's how you pull a week together, and that's how you pull a whole month together. And it's about having the daily focus, which is the gap. So how do I know ahead of time where stock will go? I don't guess where the gap's going to be. I'm not predicting the gap. I'm not in anything and then just predicting the gap itself. I see the gap after I see it, and then I rate it. And then I use the 26-point checklist. It tells me what to trade and what to look for in a trade. Again, think before you trade. It's exciting to make money, but it sucks to lose. And so many people are taking trades and they jump in things and they don't even think about it. People are taking trades like in stocks like NVIDIA, which no one should even remotely be trading unless they can afford to take that risk. Even those options are very, very pricey. Okay, they were before the earnings, they were after the earnings. The fact is, you must think about what you're doing. If you don't think about what you're doing with your risk, why you're taking the trade, have a set strategy you use, have a stop, know where you're going to get out. Okay, you have to know where you're going to get out. Okay, if you don't even know that or how much your goal is for your money you're going to make, again, you're just like trading on the fly. You're going back to the gambling mentality. But the key to getting big trades is momentum. When I trade, I'm looking for momentum. This gives me an edge, and it'll give you an edge. Momentum trading is one of the most profitable and fastest ways to make money trading. It's the only way to make money trading as far as I'm concerned, because if you're making a little bit and then some trades lose, you're just going to lose. I mean, it's just, again, it's ridiculous. We don't scalp. You got to get the momentum, and you got to get that in options too. Again, some of these things are so pricey. You have to be able to, you got to get a move. All right. $20-$30 in something like NVIDIA. I don't want $1. I need more. Learn how to take a position in a stock in anticipation that the stock will have an explosive move. That's what I mean by momentum. The explosive move could be up, the explosive move could be down, but that's what you need. These enormous moves happen in one direction and happen fast, particularly in the morning. Momentum trading can be very, very profitable. So again, what creates momentum in a gap? Institutional money. Who's in control? Gaps happen in the market on a regular basis. However, some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction, which can happen, or a larger, bigger move in the same direction, okay? Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That's how you know when the power of money will flow to pay you. So again, my 26-point rating system pinpoints the footprints of institutional money to tell me if someone's going to come in and buy and continue the bullish gap up, or short it and continue the bearish gap down. Again, because if you're not on the side of the control, then it's impossible to make money, okay? And again, we want momentum. If institutional money is coming in, guess what? We have volume, we have momentum. We're going to get a big move, all right? So if, you're a beginner, you never did this in your life, you're like, I don't know. I've taught beginners. I just taught someone that was brand new this past weekend. I had the February class. I've taught people that have never traded their life, and then I've taught people that are older than me. So if the fact that you have experience, while that's great to press the buttons and know a platform and things like that, you may have bad habits if you've been training for a while. Whereas someone that's brand new as a beginner doesn't have any bad habits, but they may need practice on the platform, setting their charts up, things like that. Everybody has pluses and minuses, and everyone has a different learning curve. You got to push forward and you got to push through it. Complaining about it or wishing you were a different place or why you wasted money on other classes or lost money trading in the market over umpteen years is never going to get you ahead. There's just no point in even thinking about those things. You can't change the past or mistakes that you made. The best thing to do for yourself is let that go, move forward and say, I'm going to do something different. Again, today's Leap Day. Let this be a brand new start for you to think differently about the market, about your trading, and have a brand new attitude. You got the whole rest of the year. Again, it's hard to believe, but before you know it, it's going to be Easter, it's going to be spring, it's going to be Memorial Day, and half the year is going to be gone. So the time to make changes and do things differently is now. And when we think about things in our past or things that we did, very often it can bring you down. You have to be your own best friend, your own best advocate, and your own best cheerleader. Because like I said, everybody else that's in the market trading wants your cash and wants your money. So if you're talking negative to yourself, you're not doing yourself any favors, okay? You are going against yourself as far as trying to be your own best advocate. And you don't want to do that to yourself because you want to succeed. If you've been trying to do this and trying to do it for a while and wanting to be successful, then you have the drive. You have the motivation. It just may be taking you longer than you thought. But trust me, it takes everybody longer than they think. When I started training, it was in 2008. I thought I'd be able to figure this out. I took one class. I didn't learn how to make money in that class. I didn't. So I took it upon myself then to start to trade on my own, and I thought I figured it out in 6 months. It took me over 3 years to figure out the strategy now that I've been doing for this last, however many years, 16 years. Things always take longer than we think, but things can happen fast once we start to make the transition. And again, it's a series of 10 steps up, 10 steps forward, 1 step back, 5 steps forward, 2 steps back. And seeing the profits, seeing the results, again, following the room is very beneficial for people. You may not be able to risk an advanced trader risk right now, but you got to build your account up so you can do it. And if you're having too many losses, it's going to be tough for you to ever pull ahead. And again, whatever works for you as far as doing options or day trades. Now, this was BABA. This was a nice one here. We did this one 216. I called it on 27. This was another put. I haven't looked at this chart for a while, but this was cheap, $1.80. Again, however many contracts you want to take. My goal is 100%. This booped a little bit over it. If you risked 1,080, you could have made 1,470. This is a good, solid trade. So we did it on 27. 27 BABA was here. Stock closed here, gap down, open, rallied, dropped, gap down here the next day, boom, you're out. Or you could have been out here. You could have been out here. You could have been out here. You could have been out here if you wanted to, but it was fine. And by this point, again, we were ready through the strike there. You see, we did the 75s. So into the close on the first day, the day I called it, we were ready through the strike. And again, I'm not holding the trade into the last day if I'm up in it. I'm more than 100%. That's ridiculous. Okay. So you get in, get out, chunk it, and you take another trade. Every trade that you're in, when you're in a trade, particularly an option, if you're in it every night, your money's being sucked up and used up in that trade. So let's say you're up. So you could be up $3,000 and maybe it costs you $1,000 to take it or $2,000 to take it. You really have then $5,000 at risk, the money you have at risk plus the profit. So it's important to take it and book it. take it and book it. And that's why we got to get the momentum. Okay. But again, get back to what I was saying, you must have an edge to be successful. Mine is spotting momentum, playing the gap. And also I do focus on shorting. You may say, well, how are you shorting now when the market's been rallying and making new highs? Trust me, we've been doing it. Most of the trades that I showed at the examples were shorts. Sometimes I will go long. We actually went long yesterday too. We went long eBay. eBay was a gap up in earnings. I liked it. And so today and yesterday, we actually went long. So I have nothing against going long. And we do calls on the options newsletter, but I do focus on shorting. But ironically, being able to spot pure weakness and seeing what's weak has helped me pick the best longs. Again, I talked about some of those today, but either way, you've still got to have a focus because there's too many people that are doing too many different things. People want to do Forex. People want to do options. People want to do Bitcoin. You're never going to get good at one thing, okay, unless you focus. People want to do futures. There's no magic bullet, okay? You have to learn something. It's got to work. And then you've got to get really good at it. And that is what I've made a career out of doing, okay? Because I've been doing this, like I said, since 2008. So whatever you choose to do, if you don't ever hone it down, you're never really going to get good at it to be able to get anywhere, to be able to risk, you know, $7,000, $8,000, $9,000 in an options trade in a trade overnight. But the reason I do love to short, just to tell you though, and I prefer to short even though we went long today, is because shorting moves go fast. Moves to the downside go fast and quick. And again, shorting is profitable because of the fear and the panic that comes into a stock when it drops and falls. Nobody thinks about getting out of something when they're down. They'll get out like that, okay? So moves to the downside go much, much faster than moves to the upside. There's no sense of emergency to go long. Now, I will say this, though. Occasionally, you have something called panic buying. You might see that, actually, in the video. We really haven't seen that yet. You might see that in a stock like that, but it's very, very rare. You might see it in the market, actually, at some point this year. But usually, the fear and panic happens to the downside, Any questions here? I'm just looking in the chat before I...
Yes.
Go ahead.
David wants to know, and I always think this is interesting. I love this question. Do you use market or limit orders or something else?
No, I do limit orders, but that's not a rule. That's not a stock switch rule. If you want to do market orders, you can. I found I get better fills with limit orders or faster fills, but that's not a rule. Do whatever works for you to get a good fill.
All right. Christopher asked, in your rating system of 26 points, can you give an example of what would earn 1 point?
No, because that's what you're paying me for in the class. And also the class is 14 hours.
Okay.
He's going to put me out here in about 10 minutes. So we don't even have time.
That catches. That catches us up with the questions. Okay. I'll let it back to you.
And you know what? That wouldn't even help you. Whoever asked that point, because again, it's not one thing. Even if I told you something today for free, what good would that do you? Nothing. You've got a system is a system because you look at everything today. And I don't know what this is. It's kind of interesting to me. Traders are very black and white. That's why they love indicators. They live and die by indicator because they want to see a 20-period moving average and they want to say, that's it. We're going to go long on that. It's all going to work. We're going to make all this money. Even if I gave you one thing today, it wouldn't help you. It would be meaningless to you because you wouldn't be able to make money on any one particular point of the 26 points. A system is a system because you look at everything together as a whole. You say this thing and this thing and this thing and this thing. And then guess what? Even after that, if I rate a gap at 8 a.m., market isn't even open, didn't even do anything, not even in trade, not even doing anything yet. I wait for the open. I don't even take that trade until after the market opens and after it sets up. What if it doesn't set up? Guess what? I'm not doing it. There was something today. I don't even know what it's doing right now. HPQ. We looked at it. It pushed up. We looked at it to short. If I had done it, I would have lost. We didn't do it. So I could go through all the steps, but that's the preliminaries. Then I have to also get the setup. If I don't get the setup, I'm not doing it. So again, a system is designed to use everything together. If you're looking for one thing ever to make a decision for you, you're looking for something that doesn't exist. And again, I know that's why people love this idea of indicators, whatever Fibonacci is, all this stuff. You're kind of like looking for something that's totally unrealistic and doesn't exist. You've got to learn it all. You've got to make decisions based on all of the points together. And then you wait for the confirmation to get the setup after the market opens. And if you don't get it, then you don't trade. So that was a good question. Every day I'm looking for stocks to trade that have, number one, a high probability of directional bias for the entire day, preferably. Number two, big moves of the day. Number three, early confirmation of my bias on the move between 9:30 and 10 a.m. Eastern time. And number four, precise entries with follow through and a good risk to reward. And you need that because, again, I'm not entering the stock in the pre-market. I'm not entering stocks in the post-market. What if it fails? Okay. And sometimes something is affected by the overall market. I think HPQ, if you want my opinion, failed today because of the market. Okay, because the market was up today and then rallied. This is initially, again, I don't know what it's doing right now, but that's what happened in the morning. So we didn't do it. But anyways, the 26-point golden gap rating system helps you pick which stock to trade each day. It's everything together. It pinpoints ahead of time which stock will have the move of the day with volatility to trade. And volatility is your friend because that's how you're going to make money in the market and you need momentum. Having a checklist keeps you organized. And this is imperative because so many traders are not organized. It helps you stay organized. It helps you stay focused. If you know you have ADD or something where your brain has a hard time focusing, or you're at work, or you've got kids, or the dog's barking, I mean, you really need something to help you. And the room is good for people for that. When I'm saying boom, and I'm giving the number, it helps people. But the reality is you still have to help yourself get focused too. Having a checklist forces you to look at what you should be looking at in a chart and a stock to make the correct decision. Having a checklist helps assist you with your directional bias. That's the only way you're going to make money. And having a checklist keeps you on track to reach your goals. A checklist is a plan of action. Like if you were going to get surgery, you'd go through a checklist. I say, don't eat 12 hours before, don't do this, don't do that, don't drink anything. You go on a plane, there's a checklist. The pilot goes through everything, this checks out, this checks out. All the time, anything that you're taking seriously, you have to do it. And unfortunately, a lot of people trade the market and risk money, they don't take it seriously. I had a cable outage, I had an internet outage. He came here, nice guy, young guy, came here, was like, oh my God, and wanted to find out what I did and fixed up my internet. And then he texted me the other day, some stock. It was a shit stock that he wanted to buy. And I said, don't do it. Don't do it. It's like everybody just gets excited about the money that they could make. But I mean, if you're investing in something that's crap, you're not going to make any money. You're going to lose. You really have to learn what to do in order to trade and be successful. And it's just like, you can't just say, well, whatever. Everyone that puts money into the market should have a plan of action and checklist. On a professional level, all high-income career field specialists have checklists. You've got to take it seriously. And I can't even stress that enough. And again, so many people throw money into the market and they just don't take it seriously. It's like, why? People take their IRA seriously, their retirement seriously, but they don't take their regular trading account seriously. That's as important, if not more important, because you can make a lot of money. You're limited with your IRA, your retirement account, of what you can do with it. You have no limitations in your trading account. If you have a margin account set up at a broker, you can do whatever you want. Don't waste time trading without getting anywhere. It just makes no sense. And again, if you've been attempting to do this for a while and need a strategy, you can come and learn my strategy. I teach the class once a month. Again, it's all day on a Saturday, all day on a Sunday. You will learn the points. You'll learn the whole system. You learn all the entries. You learn targets, the exits. You learn chart analysis and technical analysis on an advanced level. And remember, when you pay for a class like mine, it's a gift to yourself. It's an investment in yourself. This is a quote from Warren Buffett. This is a good quote. There's one investment that supersedes all others. You invest in yourself. You want to get ahead in life? You're going to invest in yourself. You want to get ahead in your trading? Same concept. Otherwise, you're fly-by-nighting it, 50-50 crapshoots. Fast forward 1 year from now or the end of this year, and you're nowhere or you're worse off. And I hate to see that for people, especially in this type of environment, especially in an environment where cost and inflation is so high and interest rates are so high. You've got to think about what you're doing with your money. And not only that, you should think about what you're doing with your time. Love what you do, because you're going to do it for hours and hours every day for a long, long time. I love trading. I love shorting. I love making money. Okay. I love when we win. I hate to lose. And I even love teaching. Now, again, it's something that I only do once a month, but I do love doing it, But the nice thing about trading is I'm done quick and early in the day, and I can go out and I can do whatever I want the rest of the day. Go shopping, go for a walk. I'm here today doing a webinar with you. It's a nice lifestyle if you can invest the time and money and energy into learning how to do it and to take it seriously. But you've got to get value out of your education. Again, if you want to come, you will learn the points from me. You'll learn the entries and the exits, and you can empower yourself today. But it's a whole system. It's not just one thing. It's all the pieces of the puzzle together. Like if you go, I bought my grandmother a puzzle essential part for Christmas. It was a little bit smaller pieces than I thought when I got it for her. She's working on it. She's got it about halfway done, she told me. It's a picture of Central Park ice skaters in the park at winter. You don't know what the puzzle looks like until you have the puzzle done. And that's the whole point. We're trying to predict that the stock's going to go here. That's the genius in the system, but you have to do it and learn it and go through the process. So the class is called the Golden Gap course. It's a full 2-day course on how to strategically find stocks that are professional bearish gaps. Class is online. The March class is early because of the fact of Easter, March 16th, 17th. And then, of course, I know basketball. Class tuition is $69.99. Class is online. Combo includes the trends, which is $74.99. And I'm doing a leap year special. The leap year special is going on through Sunday, March 3rd. If you want to sign up, you can get the trading room free and the options newsletter free to the end of this year. And again, this is going on through Sunday. I don't know if anyone has any questions. I think I'm done on time. Any more questions?
Yeah, I have a comment and a question. We'll do them real quick. So Fred wants to know, Kumar says, with good risk and trade management and your brain, Melissa's gap option is very profitable. That's my current experience. So thank you for that, Kumar.
Who said that? But thank you. Who said that?
Kumar.
Oh, Kumar, there he is.
Fred says, is the 26-point checklist done manually on each stock that you're looking at?
Yes, it is. Because again, your best thing is your brain. Now, again, Jeff has scanners and this thing and that thing. If you want to try to put something in a scanner, you can. But I got to be honest with you, you are going to have to think through all the points anyways. The scanner helps you find a group of gaps. But as far as using your brain to go through it manually, you're doing it on the daily chart. And yeah, you got to go through each one consecutively. But I'm not rating 10,000 things every morning. Like I said, I'm going through and making a small watch list, and then I'm pairing them out. And the better you get, the easier you get, the faster you get at doing it. It doesn't take you that long to go through and rate them.
All right. I've put the email address in the chat. Also, YouTube is going to put that in the chat as well. Melissa, thank you very much for coming and joining us and spending some time with us.
Thanks for having me. Have a great day.
Thank you. All right, and let's do this. We'll just go ahead and change over. The email for that is melissa@thestockswoosh.com. So thank you very much again, Melissa. While we kind of get shifted over here, go ahead and make myself the presenter. I'll go ahead and show my screen. We're going to try to move quickly into the next presenter. We're kind of going on time. So we're running a little bit late. I do want to spend a minute to say thank you to our sponsors, Stocks and Commodities Magazine, CMT Association, and AAII. All of them great organizations for what they do. CMT, if you're interested in working for a bank, or if you have a job with a bank, or you want more assets under management and you do work for a bank, all that kind of stuff, CMT is a very good accreditation organization. CMT stands for Chartered Market Technicians Association. You should look into it. If that sounds like something you'd be interested in, cmtassociation.org. Okay. Now, in the interest of keeping things on track, I've already asked for some numbers. I already had many of you give me numbers, so I appreciate that. That helps a lot. Just to kind of go through the process real quick without kind of belaboring it. If you're watching us on YouTube, hey, it's good to see you. We're MetaStock. What I would recommend that you do is if you want to be eligible to win some of the prizes we're giving away today, register. You can go to metastock.com/traders-conference. MetaStock's going to put that in the chat link right now. If you do that, you can get eligible to be on my list. So Jan, Tim, me, Tavonda, thanks for giving numbers. The numbers that we are going to go with today is 6391 from Jan. So 6391, that's actually, I looked at this a second ago, a Warren M from Australia with a Gmail address. All of you guys have Gmail addresses. So Warren, you're going to win a prize. If you're watching this right now, you should probably go to bed. I think it's like 12:30 in the morning probably where you're at. But if you're watching this now, say hi in the chats because you just won a prize. Now, you might be interested what prize you won. that's one thing I need to look at. So let me go to the prize list here, and we'll just pick out a prize for you too. I think what I'm going to do for you this time, Larry McMillan came in earlier this week. Very, very good option strategies. What a lot of people consider the Bible. I don't remember the name of the book right offhand, but don't tell him I said that. His book is really, really good on options and option strategies. Runs some advisory services, runs a newsletter. What you're going to get is subscription to all three of McMillan's time-tested advisory service. This would be the option strategist, the daily strategist, and the daily volume alerts. This includes analysis, commentary, education, specific trading alerts. All of that stuff's going to be included for you. A great prize, 12 months of access. Thanks, Larry, for giving away that prize. Appreciate it. Also, thanks for being part of the conference. So congratulations, you won. All right. We, of course, are MetaStock. We can help you scan markets, test ideas, forecasts. We've talked all kinds of, we can scan for gaps in MetaStock. It's easy. Like everything that we're kind of doing, you can do so much in MetaStock. So the offer that we're doing today is if you try a month of MetaStock, we'll give you the second and third month for free. We'll go into all of the pricing right now, but that can be as low as $23 a month. It's not expensive. And if you'd like to try it out, go to metastock.com/conf-promo, scan my fancy little QR code right there in the corner, or go to metastock.com/sales-chat. If you have questions, if you want to talk to somebody, if you want to get that white glove installation service appointment set up right away, 800-882-3040. These sales guys will do a great job of taking care of you. So with that being said, I hope you're enjoying the conference. I hope it's been helpful for you. Appreciate your being here, and I appreciate all of our great guests. Our next guest is Alex Cole. We're going to go ahead and kind of spin it over to him. Alex has been working with us for a number of years. He's presented a lot of time. He's going to help you understand when to go on a chart, when to not go on a chart, and more importantly, he's going to tell you when to go fishing. So let's go ahead and bring you on here, Alex. How are you doing?
Hey, Jeff.
Hey, how are you?
Good. How are you?
I'm good.
Good.
I thought I'd figure it. I'd try a bit of a different way to introduce you. So let's do that. I just sent the presentation over to you. I'll let you know when I can see everything.
All right. 1 second. Okay. Let me know if you can see that.
I can see trend identification. And I'm going to get out of the way right now. Your turn.
All right. Thank you, Jeff. Hi, everyone. So welcome. And my presentation today is just me. Often I work with Tyler, but he is traveling all over the world in Dubai, actually doing a lot of work with the CMT this week. There's a big conference out there. But we're going to take a little bit of a step back today, and hopefully if you have some time to just sort of think about how to analyze the markets. This is not a system, or we're not going to talk about trying to find those magical situations. We're going to talk about using technical analysis to understand the markets and to understand what the technical analysis is telling you about whatever market you're following. And we'll run through some examples, and we'll look at the GoNoGo charts, which is what I've created to help me do just that. But this should be a learning environment, hopefully, where we can really break down technical analysis and understand why it's so valuable, but also what are some of the pitfalls and how we can try to avoid those. So we're going to spend a lot of time today trying to make sure that we are disciplined in our approach, so that we don't get caught up in some of the emotional biases that is so prevalent in trading and technical analysis. So I like to start with this quote, and this quote says that if you take emotion, the would be, the could be, the should be out of it, and look at what actually is and quantify it, you have a big advantage over most human beings. And so that was coined by John Henry. And if you know John Henry at all, if you're familiar with the publication Moneyball, or you know that he bought the Liverpool Football Club, or you know that he also owned the Boston Red Sox, what he is famous for doing with his ownership of these sports teams is taking analysis and bringing it to something that is subjective. So a scout in the past, if we're talking baseball, of course, me being British talking baseball, but stay with me. You may look at a pitcher and see his arm strength, or you see the speed of his pitches, or you may think, okay, I like the way this athlete plays the game. But he brought the analysis and said, well, that might, you might think that, but here are the numbers. And so he's very, very successful with that. And I think that this should help us understand how we can have that same kind of disciplined approach to technical analysis. We don't want to be hopeful. We want to know that we have set the odds in our favor. Now, one thing we like to talk about is the expectancy formula. And what we want to understand is how to make profit, or how to be sensible with our trading, how to sensibly understand what we're looking at. And when we follow trends, we know that it's okay to be wrong a lot, right? And what we need to be able to do is allow ourselves to be wrong, to accept our losses, and to move on. So we know from human emotional bias and from some of our behavioral research that's been done that it is much more painful for us to lock in losses than it is a happy thing for us to lock in gains. So what we will do is take gains quickly, but we will let losers run, hoping that they come back to profitable situations. And that's, of course, the exact opposite of what we really want to do. We want to cut our losses short and let our winners run. So we know that this is how we're set up as human beings. We don't like to lose, and so we turn trades into investments. We're like, well, I'm going to wait till it comes back to break even. But we know that that might not happen, right? And we're just taking bigger losses. And we want to let our winners run. We want to stay with trends when they are really, really significant moves. To do that, we need a system. We need a checklist of a sensible system that will allow us to understand the technical environment so that we can make good decisions. And if we do that, then we will be able to shift our spot on this curve here. This is sort of the break-even frontier. And we can see really easily that if we are right half of the time, as long as we allow our winners to run, we can be profitable. Now, we know people, the major trend followers of our time, Paul Tudor Jones and others, who are quite happy being right only 35% of the time because their wins are so much more than their losses. Now, as a technical analyst, we believe that it does give us an edge, right? So we know that if you have a good trading system, you can be right more than 50% of the time. But if you also manage those trades well, that's when you can see some really intelligent use of technical analysis and charting. So we're going to go through that now and see how we might do that. When we learn about technical analysis, I was, of course, guilty of this, as so many people are, that we get absolutely enamored with indicators and with the value that is in the discipline of technical analysis. And so we want to add more and more to our chart. I've taught technical analysis and I've learned as much as I can. And I love knowing what RSI is doing on a chart. I love knowing where price is relative to a moving average. I like to look for support and resistance levels. I like to use Fibonacci retracements. And the more that you add to your chart, the more the chart becomes crowded. And this is where we've seen a problem over the years. And working in institutional finance, we've seen problems with new people into the industry where they build charts that are very, very sensible, but become complicated and hard to understand. We also see, working with sell-side research, they may have a very, very good checklist of tools to use to allow them to come to an informed decision, but find it difficult to explain that process to the buy side because of the complication or the number of things on the chart. So we've all ended up, I'm sure, with charts that are problem charts that lead to some sort of analysis paralysis. It's very, very common across our industry, all kinds of different players, from new people to, like I said, those that have been in the industry for a long time. We tend to overwhelm our thought process and make our charts complicated. So while we don't want to do that, we do want a strong checklist that will allow us to have confidence in our decision making. And if you've seen me present before, we talk about how pilots have a checklist to make sure that they're safe up in thousands of feet above the ground. Lately, I've been talking a lot about my son because he's 17 and he's been learning to drive. And we need to have checklists in place to make sure that he's safe. He needs to buckle his seatbelt. He needs to make sure he signals when he pulls into the road. He needs to make sure that he checks his mirrors. And all of these things, step by step, will make him a better driver, will make him safer, and hopefully help him avoid the big mistake on the road. And that's the same thing with technical analysis and trend identification. We want a solid checklist that will allow us to identify the trend so that we can trade in that direction. So we believe that trend identification is the most important skill we can learn, because if we can identify a trend in price action, we can profit on the majority of the move. We like to say that it's simple, but it's not easy. Very difficult in practice. And so we need a method, or we need a way to consistently apply our checklist to help us understand where prices are headed. So the first thing we might do, we're going to step through a very typical process. The first thing we might do is just eyeball the chart. We know as technicians that a trend is a series of highs and lows. An uptrend is a series of higher highs and higher lows. If we can see that happening on the chart, then we can identify a trend. Now, of course, the difficult thing is that it's easy to do in hindsight, but as the chart is building, at what point do we feel confident that we're recognizing these higher highs and higher lows? So we want to automate that process to remove subjectivity, as I mentioned before. And so we might look to something like the Donchian channels. If you're familiar with the turtle trader experiment, Richard Dennis in Chicago in the 80s decided he could grow traders just like they were growing throughout his travels. He would see farms growing turtles, and he thought he could teach traders to trade. And so that was why it was called the turtle trader experiment. And one of their main entries was using Donchian channels. Donchian channels is an indicator that plots highs and lows. So what it does is it will look back at a certain period and ask the question, is price the high or the low for that look back period? And if it is, then it will move that line with it. So if you can see this red line over here on the left side of the chart, when it starts to move higher, that's because Donchian channels is recognizing that price is the highest price it's been for that 20 period look back. And so as that then increases, you'll see the Donchian channels rise, and also the lows rise as those lows rise. So you'll be able to identify now automatically when prices are making higher highs and higher lows. Now, from there, you might say, okay, well, let me get an understanding of how significant the movement in price is. Bollinger Bands is a very, very popular indicator and a fantastic piece of work, of course, created by John Bollinger. And that is an indicator that uses bands on standard deviations. So if you think back, for me, it's a while ago, had a birthday recently, so a little bit longer ago now. But if you think back to those math classes, we know that 2 standard deviations around a mean should encompass about 95% of the data. So anytime there is data outside of those 2 standard deviations, that's significant. Of course, we know that financial data sets are not normally distributed, but anytime price is up and out or down and out of those bands, that's quite important for us to recognize and to see. It's a significant moment. And those are the moments we're looking for, because often those come at the beginning of a trend. Moving averages. If you've done any kind of charting, you'll have moving averages on your chart at some point. When we were working in the industry and we were working in product development, we didn't even really count moving averages as technical analysis in the case of trying to identify technical analysis users, because it's so prevalent that you would find people that say, yeah, I don't believe in technical, or I don't use technical analysis, I'm a fundamentals guy, and then you would say, oh, well, I noticed you have a moving average on your chart. Almost everybody looks at moving averages because they're so powerful, and understanding where price is relative to a moving average is incredibly important. If you think about what you're actually saying or observing when you see price above a moving average, you're saying that price is higher than it has been over its recent history, depending on how long that average is. And so that's inherently bullish. Price is trading higher than it has done over its past. And depending on the length of the average, of course, that's more and more sensitive to price movements. But of course, if you've got one moving average, then two moving averages could be better, right? Some people use all kinds of moving average envelopes because now you can look at the interaction between those moving averages, and you can see that when a shorter term moving average crosses above a long term, you can say, okay, well, we now know that in the short term, prices are moving higher than they have been over the long term. And that's a little bit different, and some say a little bit more valuable than just using price, because the first average does some kind of smoothing to that price, so it reduces the whipsaws that you might see just using price and a moving average. So we will want to see on our chart the interaction between those moving averages. And you can see now, again, on the left side, that the short moving average moves above the long. You can see Donchian channels is making a higher high. You can see that we're trading up to the top of a Bollinger Band. So now we're starting to build the case for a new trend in the upward direction. And you could keep going. We'll just add a couple more on here, but volume has been around since the very beginnings of technical analysis in the West. Charles Dow talked about volume as being the first of the confirmatory indicators, meaning that it's not price-based, but it can confirm what you're seeing in price action. And so when you see price make a new high, when you see moving average crosses, when you see a breakout of a Bollinger Band, you might want to look for volume to see, is the market participating in the move that you're seeing in price? If you saw something significant happening in price, but very low volume, you might say, hey, then there's not a lot of enthusiasm behind that. There's not a lot of market participation. So we might want to have a look at volume and see what that's telling us while we stack up the weight of the evidence on our chart. And then we'll put something on the lower panel because we haven't done that yet. And here we'll throw MACD on here, one of the most used indicators as well. MACD, moving average convergence divergence indicator, has some elements of trend and momentum in that it's the difference between two moving averages. The MACD, that is itself, is the difference between two moving averages, and those moving averages are exponential moving averages. And so there's also a signal line on there which allows you to look for those crosses. But if you're thinking about the difference between two moving averages, you can look for moments when that value is positive, right? Because that tells us, again, that price is higher in the short term than the long term. And the use of exponential moving averages makes it react a little quicker to price. So again, we're looking towards the left side of the chart. We're seeing MACD is above the signal. We're seeing it's above zero. New highs from Donchian channels, volume increasing. Somewhere in this area between February and March, we could become quite confident that there has been a move that could kickstart a new trend in the upward direction. So the question then becomes, when are we able to confidently make that claim? And so that's checklist that we just walked through, if we go back to it, is an example of a very simple method of understanding trend. And you'll know from working in technical analysis or using charts yourself that this is about as simple as it gets. And when we work with professionals in the industry, their method or their process could be far more thorough than this, and you could end up with 3 or 4 panels below price, many more things on top of price. But you can see already that the complication is there. It's built into this chart. At what point do we decide that we're confident in a new trend? At what point do we say, well, enough of my criteria being hit? Do I wait for them all? Are any of them contradictory, right? Sometimes we put too many things on the chart. Some of them are contradictory or at least confusing. So at some point in here, we think, yes, we're seeing a trend, but it becomes complicated. So we'll talk about GoNoGo trend, which is available for everybody on MetaStock. So, check it out. What we wanted to do with GoNoGo the concept of GoNoGo is do that checklist in the background. Like, I'm a big technician. I'm a believer in technical analysis. So I want the information from that checklist because that gives me an intelligent framework within which to invest. But I don't want to complicate my chart. I'm a simple, sometimes I believe the simple things are the best. And so for me, I want to be able to see areas of support and resistance that pop up on a chart. I mean, one of my favorite technical books was the Edwards McGee book, written in the 40s, and that is pattern analysis. Pattern analysis is a method that is allowed that is able to be seen on a chart because of the market dynamics underneath. So if you're seeing price run up against resistance at a certain level, and you're seeing buyers coming in more aggressively though, and meaning those highs are rising, you've got an ascending triangle, and just understanding those market dynamics is very, very important. And so we wanted to be able to have a chart that keeps price as the focus. So that's what we tried to do with the GoNoGo trend. Like I said, that's on MetaStock. Just apply the template and find the GoNoGo trend. And what I just would love is if people could give feedback. We love getting feedback. It helps us know that what we're doing is helpful. So info@gonogocharts.com. If you use the GoNoGo trend, if you find that it does a good job of pulling the trend out from price action and showing you where we are in the trend. So we're going to go through this now a little bit and talk about how the different stages of the trend are represented by the colors and how it can give you a sense of what's happening. This quote is one of my absolute favorites, and what this quote says is that ultimately it is the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down, and that consensus is revealed by analyzing price. So to me, that's technical analysis. Everything is in the price, right? We're not saying as technicians that fundamental factors don't drive price trends, but what we do know is that price is agreed upon by market participants. And so that's not restated. It's not an estimate. The price at the end of the day is what the market is prepared to pay for that security. And that could be because it's baked in future expectations of earnings. It could be because there's been some news that's come out around management. Whatever it is, that is the price that people are prepared to pay. So that's the dollar-weighted opinion of market participants. So we don't want to lose the focus on price. We want to keep the chart free of clutter so that we can look at price and we can understand what happens when price is running up against some overhead supply. Why does it fall away at the same level? There are market agreed upon levels that price will trade at. And so we want to be able to see that. So we're going to consider the trend. We've got 5 colors: blue, aqua, amber, pink, and purple. Blue and aqua being the strong and weak form of the bullish environments. Pink and purple being the strong and weak form of the bearish no-go environments, and amber being our neutral color. That tells me when there's a bar painted amber on the chart, it says that there's not enough criteria being met in either direction, go or no go, to paint one of the trending colors. And so we are going to therefore paint the bar amber, and we're going to call that a go fish bar. So we've got go, no go, and go fish. Of course, Jesse Livermore said there's a time to go long, a time to go short, and a time to go fishing. So if the market isn't giving you a clear sense of direction, then we're going to paint those bars amber. And that'll often happen in transition periods between trends. It'll happen in choppy markets when the trend indicator is trying to identify trend and there's choppiness. We'll see a lot of those amber bars. So let's just have a look at a couple. We'll use the S&P as our primary example here. And right away, we can say that we are in a strong go on the daily chart. So what does that mean? That's telling us that the criteria or the checklist in the background has been calculated and is telling us that we are in a strong bullish environment. And so you can see that as the market moves through the trends, those colors paint the strength of the trend for you. So when you've got strong blue, that's the strongest form. When you see some of the corrections in the trend, you can see that those are painted weaker aqua color. That's important for us to see some weakness when in trend, because it allows us to get ready for whatever might happen next. You can see that when we're in a no-go period here, earlier in this chart, we were seeing pinks and purples and some amber bars when the market was uncertain and wasn't sure whether we were going to reverse back to go colors or whether we were going to stay in a no-go trend. And you can see again, like I said, that amber bar in that transition period between no-go and go. So that's the S&P, SPY using the ETF as a proxy is in a strong go trend. And that will then influence your decision making. We want to trade in the direction of the trend, like I said, using the members of the S&P 500, look for securities that are in favorable environments as well, knowing that the S&P is in a strong go trend. If we now talk about multiple timeframes, this is very, very important because we need a market bias. Now, just to note, your timeframes can be different based on your horizons, your risk horizons, and what you do in the industry. If I'm working with a trader, they may be looking at 5-minute bars, 1-minute bars. If there's, let's say, a trader working for a PM, the PM might be focused on daily and weekly charts. The trader may be looking at intraday charts to get good entries. And so for you, let's say you're the trader in that situation, your long-term chart may be the daily chart, and then you may use hourly charts and shorter time frame charts for the multi-time frame analysis. If you're a PM or if you're a long-only mutual fund holder, you may be looking at daily, weekly, and monthly charts. So the point is, technical analysis is fractal, and good technical analysis should be able to be applied to any time frame on any security. And so why is it important to look at multiple time frames? Well, Charles Dow, again, came up with the concept of looking at the markets this way, and he used the idea of the waters of the world to help us understand what the different time frames mean. If you are looking at the primary time frame, that's the inviolate long-term trend, that's that first largest time frame. And that one is what's driven by all of those sort of fundamental factors. That's sometimes multiple years. These are the regimes that we see where it's really hard to shift, to change the long-term trend until something structural changes. Then there's the secondary trends, which are moving around that primary trend. And those trends are often where a lot of technicians will live, right? Trying to understand how to get good entries around the primary trend. And he would talk about those as the waves of the ocean if the primary trend was the tide. And then the shorter, the tertiary trend or the minor trend, those are the daily fluctuations in his estimation. And of course, like I said, if you're a shorter term trader, these could be very, very short fluctuations indeed. And he said that in the shorter time frame, this is where it's really difficult. This is just sentiment, and it's hard to really be effective here because there's a lot of noise and it's reactionary. But of course, it depends again on your time horizons that you're trading. So given that we just looked at the daily chart, we knew we were in a strong go. Let's go up a time frame. What does the weekly chart say? The weekly chart tells us that we are also in a strong go. Of course, we all know we're at all-time highs. So we are in a strong go as well on the weekly chart. Now, we have had months of strong blue go weekly bars. So very, very strong go trend. You can see that the correction in the end of last year was highlighted by those aqua bars, and then we resumed the go trend with strong blue bars, and into this year we've been very, very strong as well. If we drop down a time frame, we can look at a 60-minute chart, and you could be now thinking in terms of that triple threat of using your time frames to allow you to make sensible decisions. So we could say to ourselves now, okay, we know the large trend, the long-term bias is a go. We saw that on the weekly. We dropped down to the daily, also a strong go. So now on the intraday chart, we would most likely be looking for only go conditions. We want to trade in the direction of the trends that we're seeing. So if we look at a 60-minute chart, we might be looking at these periods of go trends on a 60-minute chart. So that's how we might look at multi-time frame analysis. Now, there's not just multiple time frames, but multiple asset classes. And that's very, very important as well for us because it gives us an understanding of what might affect the markets that we trade. John Murphy, the sort of original teachers of this idea talked about intermarket analysis, and then others have built on that work. People like Marcus Katsanos, who've taken it a little further to understand how do these asset classes relate to each other, and if we get a good understanding of them, how can it affect our decisions that we make in our asset class? So you can do something like this very easily in MetaStock. You can create multi-chart layouts, and you can get a real sense of where the trends are around the asset classes. And so that's really important, especially today with the ETF, the ease of investing, the ease of diversification, maybe I should say. You can be, if there is no trend in equities, right, or if you are long only and there's not a go trend in equities, then where are the go trends? We can find them, and we can look at how they are taking shape. So just really quickly, just to give you a sense of how quickly you can go through the asset classes and get a sense of trend. Equities, we talked about in a strong go. U.S. Treasury bond prices, that second one, are in a no-go, but that's painted a weaker bar when I pulled the chart this morning. And we know that, of course, is inverse to rates. Rates and prices move inversely. So if that is a no-go in prices, then a probable go in rates, but there's some weakness there in Treasury bond prices. What is U.S. oil? U.S. oil is in a strong go. We can see that using the ETF USO. Bitcoin, amazing couple of days, absolutely amazing couple of days. Strong go trend. We've been in a really good trend in Bitcoin. This is, of course, the daily chart, really nice go trend. Then we saw a deeper correction through January, and then the go resumed in February and has really taken off. This week's been incredible with the Coinbase having to freeze or losing connectivity because of the amount of movement and volume in Bitcoin. Crazy week. So that's a strong go trend. Gold has been chopping around. You can see how many amber bars have been over the last couple of months as it tries to find direction. We thought we had a strong no-go, quickly reversed and took us out of that back into amber bars, and then now a weak go trend in gold. And if you know what's happening with gold, there's a multi-year, over a decade long attempt for gold to break to all-time highs, and that looks a lot like a cup and handle pattern, where we are really trying hard on the long term to get higher for gold, and we really keep failing. But if it ever happens, the gold bulls are talking about how much higher that could go, because like I said, it's like a 13-14 year attempt to break above resistance. So we're going to keep an eye on gold, of course, as well. And then the dollar on the bottom right, the dollar is in a weak go trend. We can see how the go trend in the dollar last summer into the end of the year was a nice strong move higher. Then we saw the no-go move down through into the beginning of this year, and now the go trend back in place, but painting weaker bars for the dollar. So you can get a sense really quickly using trend identification to give you a good understanding of what the technical analysis is saying in terms of where a security is in its trend, and that can then really help inform your decisions. And that, like I said, you can apply that template on MetaStock to get that GoNoGo trend indicator and have a real play with it, and hopefully it can give you some peace of mind. Like even from the standpoint of you want to make a trade, let's at least have a look and see if the trend is favorable, and maybe perhaps will you wait if the trend is a no-go. Okay, so for the next 20 minutes or so, there is more to the GoNoGo suite of tools, and so the trend is the core concept, and that's what's available for everyone. The complete solution, though, takes us through the missing pieces then of that complete understanding of technical analysis. We want to understand trend, we want to understand momentum, we want to understand volume and volatility. And if we can get a sense of that, then we can have a good understanding of the technical analysis at any time. This is really a sort of a need for me working in the industry. Depending on who I was talking to, I could be talking to a commodity trader in the morning, I could be talking to a mutual fund long only manager in the afternoon, I could be talking to a foreign exchange person the next day. So I wanted a way to be able to have a competent discussion around the technical analysis on anything any time frame, any security. And the way to do that is to get a complete overview, and hopefully to do it in a way that is really simple and doesn't complicate the issue with the long, well thought out checklist that we need. So we've talked about the trend, how it blends the foundational concepts of a good checklist together to identify the trend. And then what we're going to talk about now is the oscillator, which takes the same approach to momentum. And then we're going to talk about the icons, which is a data visualization that helps us understand the interaction between trend and momentum. And then we're going to talk about the squeeze, which is our attempt to identify important areas based on volatility. So let's talk about momentum quickly. I'm a car nut. Being from the UK, it's all Formula One and World Rally Championships. Formula One season is just starting this weekend, so that's exciting. And I know Formula One is really, really huge here now because of Netflix. But these are not obviously European or British cars. But the reason I talk about cars when I teach momentum is that I like to compare momentum to acceleration. And so when we can measure the rate of change of price, then it helps us understand the strength or the velocity of price movement. So if you think in terms of acceleration and cars, imagine you are driving onto a highway and trying to get to highway speed, which around here in New Jersey is about 50 miles an hour for most of our highways. As you go through the acceleration to get onto the highway, you're going to go quickly. You're going to go from 10 to 20 to 30 to 40, maybe at the same rate. The time it takes you to go from 10 to 20, 20 to 30 might be the same. But as you get closer to the highway speed, your rate of acceleration is going to slow down. You'll still be getting faster, but now over that time period, you might go from 40 to 45, 45 to 48, 48 to 50. So the increments of your increased speed are falling. And that's what we're looking for with momentum. Price may well be going higher, but it's going higher less quickly, right? Or it's going higher with less in velocity or enthusiasm behind it. And the reason that's important, and I go back to the car example here, what's going to happen when I hit 50 miles an hour and I'm on the highway? I'm unlikely to go faster unless I want to get a ticket, right? So as I saw that slowing down of acceleration, I know that that's my top in terms of speed. And the most likely thing then for me eventually is to make a turn off the highway and slow down. So when I see that slowing of rate of acceleration, I know that I'm approaching my top speed. And that's what we're thinking about in terms of price momentum as well. When we see slowing momentum, we can think that perhaps price is going to struggle to go higher in the short term. And so it's that idea of price going higher, but going higher more slowly, the car getting faster, but faster more slowly. And if you can understand that concept, now we know what we're looking for when we look for momentum analysis. We're looking for divergence. We're looking for lower highs in momentum. And this is just a slide on here to show you that if I now went through the same process with momentum analysis that I did with trend identification and got all of that valuable information from multiple indicators that I've grown to love from researching and learning about them, I'm going to complicate my chart even more, because now if I'm imagine putting these 4 or 5 panels below price after building that trend identification checklist that we did at the beginning, now we've got a complicated chart that's hard to read. But it's very important that we understand price swings, we understand divergence from price, and we understand how to use momentum analysis when securities are trending. So how do we get all of that information but keep the chart simple? Well, we take the same approach that we took for the trend, and we blend all of those inputs that we've worked with technicians in the institutional space for years and years. Think the big things like RSI, we put those momentum tools, we blend them together into one indicator that can give us still the same understanding of momentum analysis. So what do we want to look for when we use momentum? We want to look for extremes of overbought and oversold. An extreme high in momentum should line up with a high in price. A low in momentum should line up with a low in price. We want to find that information. We want to look for divergence, a higher high in price, but on a lower high in momentum. That's a warning sign, right? That's that idea of momentum of that slowing down of price acceleration. And that could lead to a move in the other direction. And we also wanted to put volume into our oscillator as well. And the way we've done that in the MetaStock implementation is with the ribbon along the bottom that turns blue when volume is heavier than its average. So now we can sort of put that all together and get a sense of, okay, we're seeing this higher high in price. We're seeing strong momentum on that high. We're seeing volume increase. Now we're starting to get a sense of the technical picture. The other important reason for using momentum, though, is when we are in a trend. Momentum indicators, most of them were designed in the 70s when markets were range bound. And the idea was, okay, if you sell the high in momentum and buy the low, then you're going to be buying at the top and bottom of a price channel. And that's how the market was. But when the market trends, there's also a ton of value to be got from momentum indicators. And there's been a lot of research done there. People like Connie Brown have written good works about it. What we find is that momentum tends to range when securities are in a trend. So when an uptrend is in place, something like an RSI will go overbought, and then it will come back into neutral territory. It'll go overbought and it'll come back to neutral territory every time price moves up through its trend. So what we need to then do is identify that range. And a lot of people have tried to use ranges when using momentum to buy back into trends that are likely to continue. But that brings back subjectivity. It means that we aren't able to be quite as confident in what we're doing, because if you know a momentum oscillator is very, very choppy, and how do we determine what that range is? I know some people in FX have used different ranges from people in equities. I know that some people are hard and fast about their rules. Let's say you use 40 as the low for RSI and 80 for the high. Well, what if RSI drops to 42? Does that count as a touch of support? What if it drops to 39? Does that count as a break of support, or is that close enough to 40 for it to be okay? You become subjective again. So what we wanted to do with the GoNoGo oscillator was calculate it in a way that causes the indicator to fall to 0 when all of those inputs, remember the oscillator is a blended oscillator of many momentum inputs. When all of those inputs are in their respective neutral territory, the oscillator will hit 0. So now think about that. You can use that in either direction. If you're in an uptrend, then the oscillator will go into positive territory, and then it will come back to 0. And we can look at that objective level of 0 to see support if in an uptrend or resistance in a downtrend. So you can see here that every time price moves higher and then momentum cools, the oscillator comes back to 0. If it finds support, we know that the trend is likely to continue. So that allows us to stay with the trend. And if you think all the way back to the beginning of this, that allows us to have those wins that outpace our losses, right? So we can be cutting our losers short, but if we stay with the trend for these big moves, that's what helps us out. So what else can we put on this chart without making it complicated? Well, I'm a big fan of data visualization. I believe that data visualization helps democratize data. And so we want to draw our eyes to important moments using these icons that are on the price chart. So we've got two icons. One are the trend continuation icons. And what these do is highlight the return of momentum in the direction of the trend. That's what we were just talking about with the 0 line. Every time trend is in place and the oscillator finds support at 0, we're going to be able to say that that is an example of trend continuation, and price is likely to move further in the direction of the trend because momentum is resurging in the direction of the underlying trend. The other type of icon that we're going to put on the chart are counter trend correction icons, and those are because we also believe in the value of using momentum in its traditional sense. So whenever a security goes overbought or oversold and comes back, we're going to highlight those with arrows on the chart, which mark counter trend corrections, short-term corrections that may cause the security to struggle to continue in the short term. So those are our two icons. And then the last piece of the puzzle for me was understanding volatility. If I could go and talk to somebody in any industry, in any role about trend, volume, volatility, and momentum, then I had that complete picture. And so our squeeze comes out of understanding the importance of the zero line. We just talked about how valuable that is to have an objective level of support. When the I'll say it one more time, when the momentum indicators are in their respective neutral territories, the oscillator will hit zero. So what does it mean then when the oscillator is at zero for an extended period of time? That tells us that there's been very little directional momentum. So if we have our oscillator staying at the zero line, we allow the grid of the GoNoGo squeeze to climb to its max. And when we see that squeeze in place, now we look for the break. Will that squeeze be broken into positive territory in this, as it is in this case, or in negative territory, which would tell us that the trend down would be likely to continue. So visualizing reduced volatility is incredibly important, because if you think about what comes after reduced volatility, it's likelier that you're going to see increased volatility. If you think about, I was always taught squeezing a tube of toothpaste till the cap blows off, right? As you squeeze price action until you may see an ensuing moment of higher volatility. So that's what we're looking for with squeezes. We want to embrace low volatility and find those high volatility moments, because they often can be the beginnings of trend or strong continuations in the direction of the trend that we're in. Okay, so that is the hopefully you can see how by using all the technical analysis that we found valuable, but putting it into a behind the scenes calculation and then displaying it in a way that you can still see what's happening, has some efficacy, hopefully, in understanding the markets that you look at. And we can boil it down to three things. This is, again, it came out of my need to be able to talk to anybody in the industry. And so if I could understand trend, if I knew what was happening with the oscillator, and if I could answer the question of whether or not anything interesting is happening around the zero line, I can talk about the technical analysis on any chart that we're looking at. So let's do a couple of these. Let's look at that SPY chart that we talked about before, but let's do it from a complete perspective now. Let's answer those three questions. What's the trend? Well, the trend is a strong go. We know that because it's painting bright blue bars. So we're in a strong uptrend. What's the value of the oscillator? The oscillator is at a value of 3. So we're in positive territory, but not yet overbought. And is there anything happening around the zero line that is important? Well, right now we are away from the zero line, but we can see that we have recently found support again. And that gave us that green circle, that trend continuation icon that we see on the chart, which told us prices would be likely to continue higher in the near future. So that's the S&P using the complete chart. NVIDIA's been in the news a lot lately as well. Let's do the same thing with NVIDIA. What's the trend? The trend is a strong go. We're seeing bright blue bars, oscillator again at the value of 3 in positive territory. And volume is heavy. You can see that from this blue bar along the bottom. So on this recent trend, you can see what strong market participation has been with heavier than average volume for a lot of the time. And so that bodes well for the strength of NVIDIA's trend. And we'll get to some more examples in a minute, but I wanted to talk quickly about our research. We put out research, weekly research that talks about, from a large top-down perspective, where the trends are, what you might be looking to understand going into the trading week. Goes out Monday morning. We also put out a chart pack, which is sort of a throwback to when I used to be on the bus or the train home from the city, and you print out a whole load of charts to go through your charts over the weekend so that you knew what was going on again for the week ahead. So those two come out once a week. And then on a daily basis, we have daily GoNoGo setups that are just individual securities that I've found interesting that I send out. So for example, this is one that went out a couple of weeks ago. EFX, Equifax sees Go trend return as it tests prior highs. So that's just an example of how you can still use basic technical analysis, like resistance levels, horizontal resistance level here, that was at the same time as the Go trend returned. And so you can see that here on this chart, as it broke through that resistance, a Go trend returned. We then saw multiple trend continuation icons and prices move to new highs. So where are we now? Strong Go. Oscillator is in overbought territory at a value of 5. And there's been strong volume on that recent move. But let's take a quick pause because I was trying to catch up a little bit to make sure I finished on time. There is some really good functionality within MetaStock that allows for the best sort of use of the GoNoGo tools. One of them I love is the expert commentary. And what that does is on any bar, you can hover on any bar, you can click on any bar, and it'll give you the GoNoGo information or the GoNoGo interpretation. And it's basically like having somebody there to answer those three questions. What's the trend? Where's the oscillator? Is there anything important happening around the zero line? And you can see that it will tell you whether the trend is a go or a no-go, what the color is, where the oscillator is, whether or not there's an icon on the current bar and what that means, and whether or not there's any volatility compression going on at the moment. So any security, any bar, you can be given that interpretation from the GoNoGo perspective of the technical analysis. And then, of course, the other thing, and we've just updated these screens, so there's actually a lot more of them now, but you can scan for any of these situations. So show me all the goes, the new goes, show me securities that are in a max squeeze, show me the go trend continuation icons. All of the things we talked about, you can scan for in the MetaStock explorations. And so that also is very, very powerful and of course, a big time saver. But I'm going to run through a couple of current charts now as well, just to give you a sense of how we might look through these. We have a few minutes. I'll just go through 2 or 3 charts really quickly. Marathon Oil came across my screen about a week ago because of the new go trend that we saw. We'd seen this no-go trend in place. And I'm going to take a second here to highlight the fact that technical analysis can be used in uptrends, it can be used in downtrends. So all of the information we discussed can be used in a no-go environment. So if you look at this no-go movement in Marathon, whenever the oscillator rises now to the zero line and finds that to be an objective level of resistance, then we get red circles, which are the no-go trend continuation icons. Whenever the oscillator goes over sold and comes back, then we see these counter trend correction arrows that are green. So you can continue to step through the trend and use the icons and use all of the information in a no-go trend just as you can a go trend. So MRO came across because it was a new go trend emerging out of this no-go trend. It started off painting weaker aqua bars as the oscillator broke out of the squeeze and found support at zero. Volume was heavy as price rallied off those lows. And where are we now? We're in a strong go. Momentum is positive and volume is heavy. So Marathon Oil coming into a go trend and starting to strengthen. Another one that we liked about a week ago was General Motors because it was in a go trend and had made a series of higher highs and higher lows. It gapped higher, found support at the bottom of that gap. Now, this is all traditional technical analysis, which we can do because the price chart is not complicated with multiple indicators. You can see that gap higher on a new go. You can see how we found support at the top end of the gap. And then we turn our eye to the oscillator. We can see that it found support at zero. That gave us that clustering of go trend continuation icons, those green circles, and that allowed price to make the push it needed to get to new highs. So where are we now? GM, strong go trend oscillator at an extreme of overbought. And so we will look to see if we get another counter trend correction arrow that'll show us perhaps short-term correction, but a strong go trend in place for Marathon Oil. And then the one that I just wanted to throw in here because, it's just what a week. Bitcoin. If you're playing along at home, shout it out with me. What's the trend? Trend's a strong go because we see those blue bars. Interestingly, when it made that rally earlier in February, it moved sideways. We saw the weakness with those aqua bars. We saw a counter trend correction arrow saying prices may struggle to go higher in the short term, which they did for about a week. And then we looked to the zero line to see, will we find support? We did. Go trend continuation, heavy volume. And now, of course, price up over, I haven't checked obviously in the last couple of hours, but price up over 62,000. So an incredible move in Bitcoin. Oscillator at 6, as I said, and momentum has moved into overbought territory after finding support at 0 and volume is heavy. So with stepping through those 3 things, you can get a complete overview of the technical analysis on any security that you're looking at on any time frame. So hopefully This was an educational hour. Hopefully, we've understood a little bit about the importance of using a discipline checklist to understand what we're looking at. But whether it's with GoNoGo or with anything else, if we can try to find a way to keep our charts simple so that we can see breakouts to new highs, so that we can see trend lines, so that we can see, all of the things that we do with traditional technical analysis. Let's try to keep our charts simple. And Jeff, I think that's it for me.
Yeah.
Thank you very much.
Great job. Do you have time for 2 quick questions?
Yeah, of course.
Okay. Kenneth says, I love the GoNoGo studies. However, do you look at higher level market cycle analysis, or is that not a focus of your work?
If I'm interpreting the question correctly, higher level as in larger time frame cycle analysis, or cycle analysis specifically, that's 2 different things. But yes, we do, because we work with people in all different areas of the industry. So we will look at monthly charts, which is a much higher level time frame, to then start that process of, okay, well, where are we on a monthly time frame? Like if you look at the monthly chart of Apple, it's absolutely remarkable how the technical analysis has held to form for decades. Every time a new high is made and we break out, then the previous highs become support. And the technical analysis on the monthly Apple chart is fantastic. So knowing that, when we get lows on a weekly chart, or when we see emergent trends coming out of no-goes on the daily, we know that larger time frame is held for decades. Then that's important information. In terms of cycle analysis, I've done some work in that. It's not incorporated specifically into the GoNoGo charts. If I've interpreted the question correctly.
Cool. I think you did fine. I didn't know the answer either. So in terms of like what exactly the question was. Kenneth does also ask, do you use the GoNoGo oscillator as a divergence signal to look for reversions to the mean?
Yeah, so divergence is a hugely important concept. And yes, and in the section we talked about there today, that we want to use momentum analysis in its traditional sense. So the importance of the zero line for us with the oscillator is obviously a key piece, but using momentum to find areas of extreme overbought and oversold and to find divergence, critically important. And you can do that with the oscillator as well. Whenever you see divergence, a lower high on the oscillator, let's say with higher high in price, that becomes important. Divergence, though, as trend followers, can be tricky because in any strong trend, there will be areas of divergence. So short-term reversions to the mean, yes, absolutely, but just know that divergence doesn't always mean trend reversal.
All right. Thank you very much, Alex. I appreciate your coming in and sharing that with us. And I'll see you again soon.
You're welcome. Thanks, Jeff.
All right. Here we go. Also, we do, of course, have some stuff to talk about. So here, let me go ahead and do this. As I said, kind of in the chat, but I wanted to kind of reiterate this. If you want to use GoNoGo, the trend identification in your charts, it's available. If you have MetaStock 18, just apply the template. It's called GoNoGo. One of the things that's been very, you should be able to see my screen now. One of the things I would recommend is our GoNoGo Complete. So with that, you get all the trend identification that Alex talked about. You get his oscillator, you get his icons, you get the squeeze, you get the commentary. I've talked ad nauseum about how much I like the ability to actually scan for and identify signals and how I use it scanning every day. And of course, you're going to get that. As Alex kind of alluded to, he just went in and updated the scans to include a lot more things that you can scan for. And so this is a really, really good package. We are going to, of course, offer you a special as part of the conference today. What we're going to do is it's $149 a month. If you pay for a month, we'll give you the second and the third month for free. That's going to include bootcamp training that we put together for it. They actually just recorded a little 6-video starter course that they've been providing for free to anybody, even if you don't have the program. So if you want to grab that and you want to look at that, you can actually get in touch with sales and we'll actually kind of send it to you. but it's just a 6-video course that's available for you. If you don't have MetaStock, you should get MetaStock. It's been rated #1 31 years in a row. We'll include a free trial to MetaStock as part of that just to make it easier. And you can do that if you give us a call, 800-882-3040. You can go online with us and chat at metastock.com/saleschat. And you can also visit us at metastock.com/GoNoGoA. Or you can scan this fancy little QR code right here if you've got your phone out. So let me go ahead and put that in the chat, metastock.com/GoNoGoA. If you have questions, where's the chat? Okay. If you have questions that we forgot to, or that we didn't get the chance to answer, get in touch with our sales guys. They will be more than happy. I know that Christopher wanted us to kind of pull up an E-mini 1-minute chart. They'll send you any chart you want. So you can get in touch with them at metastock.com/saleschat. There it is in the chat. Or if you prefer to talk to somebody in person and not type, that's the way I like to do it, 800-882-3040. So there you go. Okay. Now, in the interest of keeping things, before we do that, do want to say thank you to one of our sponsors, AAII.com. Been doing nonprofit work. It's called the American Association of Individual Investors. I think it was the 70s that they got started. Millions of people. Great organization. If you've heard about the investor sentiment survey or all this kind of stuff, they do a lot of market research, market analytics, and make it available. If you want to find out more about this nonprofit, go to AAII.com. Absolutely been fantastic to work with. We appreciate all the work that they've done, and we appreciate their support of the event as well. So I did, just in the interest of kind of keeping things moving smoothly today, I did actually already have you guys do a prize winner. The winner of the next prize is Edgar N. in the USA. And thank you for everybody that participated and gave me numbers. Edgar N. is going to get the Vince Voris Trading Winds Elite service, 1 month of it. It's a service that's $97 a month. It includes daily emails, Sunday through Thursday. It includes a couple of, I think it's 1 Zoom call and a video market recap every week. It's normally $97 a month. You're going to get it for free, and that will be delivered to you next week. So thank you for that. Moving straight on to our next presenter is Peter Dalal. Peter's been a long-term partner of MetaStock. We love having Peter on. He created one of our most successful subscription add-ons of all time. It's called Forex Traders Advantage. Today, he's going to talk about the ingredients that he uses for a successful trade. So without further ado, let's go ahead and get him on here. Peter, how you doing today? Oh, hey, Peter.
All right, how are you?
Perfect, I can hear you.
All right, can you see my screen?
I can see your screen. I can see.
All right, so let's get started. We got to catch up a lot of time, I guess.
Okay, it's all you. Take your time.
All right, fine. So thanks for having me. We're going to get started. All right, so everybody can hear me?
Yes, sir. We can hear you.
All right, thank you. All right, before we get started, thank you for coming today in a busy day today. In New York, we have a little bit cold weather here, but not bad like yesterday. It was very cold. So people around the world, hopefully you have a good weather, and we are in New York, so we get used to all these things. All right, so my name is Peter Dalal. We're going to talk a little bit about the topics we're going to cover today. All right, so sorry about this fancy color. My daughters like to help me, so they think they're so cute. So there are a couple of things we're going to talk about. Disclaimer, because we are regulated, so we have a lot of things to put it out there. I'll be quick, so we don't waste much time, but important points. And Jeff can make these slides available. Slides means disclaimers part, and it's on our website, themagictrader.com, as well as we could also send it to you if you want. But there are a couple of important things, such as we're going to talk about more or less options, which is the topic we are long due to talk, right? But we have a lot going on here. And this time we decided means we, means MetaStock and I, that we focus on our options, which I've been trading for God knows how many years. In 90s, I started, right, earlier 90s with a company called Painweber, now it's UBS, and I was lucky to have two good brokers. I learned from practical point of view, and I had a good time. So then I moved on an institutional side. So basically, we're going to talk a little bit about the magic trader, but more or less, I want to focus on options and how we could trade options with magic trader. And this software has been around since 2006. That means I started working on as soon as my first product was released. And uh, we basically dealt with institution because that was my passion, and I traded with them not as a broker, as a partner, right? So much technical, but it's still based on technical. So I just want to be clear, I'm not a too much fundamental guy. Okay, so uh, basically uh, we use some of the ingredients, and you will see how it is easy when you apply those one of or few of the ingredients which we've been speaking since last 2 3 years, but now we're moving on to more deeper applications. So for new guys, there are so many available there, so you could go and uh, get it from MetaStock. So we get a basic idea. So I will spend some time, but not much time. And also, what I did it one step beyond, but I want to tell you in a front because I'm regulated. Everything we talk about, the results are all stimulated, whether it's real or hypothecated, or but it falls in one category, which is falls in the hypothecated results. So basically, we cannot guarantee you any future results will be like that. But this is based on my trading, and I first time screenshotted the broker platform, and you're going to see it, which is shocking to Jeff because I first time I'm doing in more than 25 years because I'm regulated. So we got to do what they're asking us to do, but putting too many disclaimers. That's how they want us to do. So long story short, let's get these disclaimers out of the way. Couple of changes I made it. So Jeff, I'll send you these slides. I didn't get a chance to send it to you, but I yellow it. So basically, trading is risky, including me. Nobody can guarantee profit or losses, uh, and past performance is not guaranteed for future results. And we have many versions. Metastock promotes elite version, but we have about 19 different versions of Magic Trader. But sometimes you will see things not available in different versions. But idea here is the core strength is the same, but we pull out some features which may not be part of the elite, but eventually Metastock will make it available, but there is no guarantee. And I kept it what is available, but I'm going to show you a couple of things because it has everything to do with options. So I will make you glance a little bit if I have a time, which Jeff will be not happy, but it is going to be there because it is in a queue. But this is very powerful. Okay, so as we are regulated, CFTC rule 4.41, based on that, we put it out there, this disclaimer. So everything is simulated according to regulated or hypothetical and is not typical. So don't expect the same results, and we cannot guarantee you your success. I could trade, we had 100 out of 100 trade, but next day I could do only 90 trades. So we are traders, emotional. So we cannot guarantee you anything. This is for education purpose only. That's the best I could tell you. And basically, the full disclaimer in detail is on our CFTC side. You could retrieve it, but the abstracts are here. Then this is the main topic, and I want you to pay attention. You could get free education for options with this site, right? And you could call them up. It's next. There is no comparison. What they teach is they are taught by best people in the world, and it is a good resource free of charge. Please take advantage of that. Now I want to tell you, later on I'm going to explain to you, and I pull out actual site and show you the risk combination based on not all the expert we have, but based on what I'm using right now for to show to you. There are 51 symbols for puts and call options, and there are 11 highlights, means different color candles. If you put on a permutation and combination, you will be surprised how many risk clusters are there. So this, based on these, right, a couple of other things, we wind up having multiple claims in a pattern, and we granted patterns too. So it is totally different than normal way of doing things in a trading. And we've been around since 2006, so we are there, but I keep low profile. Jeff will tell you, I don't like too much publicity, but that's the way we built biggest company in New York City. So basically, their permutation and combination is the part of the reason why people don't have enough success, right? They come close, but not enough, because lack of all this recognition of different risks. So this is based on a risk, right? And options are also part of the victimization of those. So I try to find which one are the best out of the best, but there is still better things are available, because out of trillions, how many things you could do. So just think about it. It is not just kind of giving, you will see the calculations yourself. Okay, my company is registered with CFTC. Later on, we're going to tell you my NFID number, and we took the exemption for time being so I could do education, right? And I stopped managing people's money. I don't do any brokerage anymore, so I had nothing conflicting anywhere, and I could devote my time to take the responsibility. I took it with MetaStock to put it out there, this software. Now, as I told you, I have a lot of patent claims and a lot of trademarks, service mark, you name it, including educational side also. So we try to keep it in a way that people don't abuse intellectual property, including copyrights, and because it's a streaming, right? MetaStock streams all these things. So it falls under this particular slide. And this is our NFID number. I'm going to stay away from the securities to show you which I'm in trade. So this way I have least amount of exposure, right? And basically, I wish I could do all these things, what I want. Hands are tied. And they are tied for many, many years from SEC and CFTC. And I don't have Series 764 because I am getting old and I have a lot of health issues. So I can't do too much compliance anymore, too much work. So basically, they even made me take out all my testimonial from my first product. Otherwise, they told me in a nice way, we'll come after you. All right, this is one of the things I discovered. We won't have much time to talk about it, but I do use it, and people who are in my alert room, they are loving it, because drawdowns, right, including options, we try to fight it out in a way that we have zero drawdown or very minimal drawdown, and it is working for all these years, and hopefully I could teach people one day, and people in alert room do know how to do it. Okay, so today we're going to teach you how to trade option strategy with Magic Trader, how to make it use simple strategy, and you're going to be shocked. The same things you saw it over and over again, how I'm going to trade options with that and with a broker, some screenshot, but it's all hypothetical. The compliance people, including regulator, they want us to put everywhere simulated and hypothetical performance. So this way, your limitations are there that you can't just take it for granted. It is going to work for you, right? And the best option opportunity in minutes is MetaStock. Thank God these scanners are there. I love it. I use nonstop. They're pretty good. So we're going to show you a couple of them. Then you will get your confidence boost when I show you the strategy today. Very simple, but my goal is to show you, because most of the things lacking the broker side, because you learn here and you can apply. So I took all these things to make it simple for you. So you're going to have this recording. So what I would suggest, you go back, slow it down, and especially broker platform, it is not all I could do. There's a much more in that, but the basics. So that will give you confidence of pulling trigger and what to look for. say for an what do you call, couple of Greeks. Not all of them are important. So we're going to talk in a minute. So basically, you have see this slide, but this is storytelling. And uh, okay, I made some changes to the point what we're going to talk about. First of all, this was there, but I want to pay attention. So if you want to buy the calls, you could scan it and you could look for those symbols on a chart, right? So this has a also, right, what do you call forecasting feature, but this is also risk. How much is the risk on a scale 1 to 6? They also teach you that, and we teach you all this thing in trainings. That this is the most important thing, and which will be also very helpful to pull the trigger. It's a YB4. It's a multiple time frames. So 4 is 15 minutes when things are lined up, right? It brings it to daily chart right here. So that means the conditions to get option order place, we don't have to look for 15 minutes. It is coming right into daily chart, and we have all time frames like all over to weekly, daily, 60 minute. The symbol comes in a different time period. You could choose and what you call opt out from the expert also. If you want to do only daily signals like that, you could do it, which will be what you call different symbol here. And manual has all which symbol going where. So yellow bar is our invention, and that is low risk entry. That doesn't mean you cannot enter earlier, but you do. But usually we have seen results over and over again how powerful it is, and plus plus sign has a strength. So we don't have to do technical analysis of order flow and this flow and that flow. It doesn't need to. So pay attention to those yellow bars. Those have been proven over and over again. And opposite is indigo bar, also proven over and over again. But we cannot guarantee your success. Plus, it has inheritance of forecasting. So when the number 3 comes in, that means it's forecasting, we're going to go higher. No guarantee. But we've been seeing it many, many years, same thing. So that tells you but what we need to do. So also it tells you buy the call option. So what are you waiting for? Right? And there is more into you need training, right? But this is the simplest it gets. What I added today that we talk about 5 ingredients, and Jeff, this is surprise for you, right? I didn't discuss with Jeff what we're going to talk, right? It has a new squares, and that tells you numbers. So in this case, what we're going to do today, we're going to trade from spike to spike, right? Or you could do in a reverse way, 1 to 2 means in this case we're going down, in this case 1 to 2, which is yet to come on this particular chart. So you could trade in between, you could wait until last moment, right? So it depends upon your tolerance. And I'll show you the trades from Thinkorswim platform. So that will give you a little bit idea how we could use these patterns in a magic trader, which are very simple to recognize. So on a chart, in this particular case, what we're going to do, you could learn these other things to save my time and your time from the other videos. There are tons of information out there, right? And we're going to pick up these 2 spikes. The one is for green, which is going bullish, and we tag it here as a number 2. And same thing we're going to be using today. Number 1, which is a bearish thing. So we're going from bearish, right? And eventually we're going to turn around to go to bullish. That's what in simple language. So we're going to put them side by side and then going to use them in our trading. So this is the green spike. So that's number 2. So what we're doing is we're going long, and eventually we got to get out because we have on the chart this spike showed up. Right? We don't have to wait until last one. But what I did is I tried to stay close to the spike. So this way you get a full extend. Even though we didn't get out earlier, we could still make some good trades and no guarantee. We could turn around next morning because somebody said so. You know, when analyst says, oh, this stock is not good, we're dumping it. We downgrade, everything changes. Then you will see rate spike all of a sudden. So this is the nature of the business. All right, that's why we have stops or mental stops. So basically, an opposite to what I said, if you see red spike, right, that means we're shorting or we're buying put option, something like that. So that's where I make it simple for people, new people. When you see number one and number two, and this will not show up on a chart, but when you see red spike, and then we're going short, and then when this spike comes in, you could get out. When you see this spike, even though halfway it shows up on your scanner, you could get out, or you could use a couple of symbols to get out. So we're going to show you a couple of possibilities. So I did shortlisted. We have 39 some scanners. So these are the scanners more or less I'm using. But sometimes I can find something I could. There are 39. Almost everything is covered. So it doesn't have to have option kind of telling you puts or call. There are trainings we do it like this is advanced price perceptors, right? I use them too. And there is an advanced perceptor with a option symbol. But I know because I designed it, there are institutions buying it because I was one of the guy, right? So basically, I will look at those symbols, even though there is no call symbol. But for you, stick it with the option symbol. So it will make it simple. But people who are in my room, right, they know they're not going to wait for this thing to show up with the option. They will get in there because they know it is going to still better than before. As I told you, I took this calculator, right, out of 102 symbols. I only selected 51, which all shows different puts and call the what do you call the symbols different. That means there are 51 different ways. And believe me or not, when I counted, right, there are more on a put side than call side. You're not going to believe because those conditions are repeat. So people, right, using more some reason to when it is reality. When you buy, somebody has to hedge it, and those are the institution hedging it. Either they do with the futures or they short the stock or whatever they're doing it, right? So or they buy index and hedge it, or now famous gamma, which we've been talking for years, the gamma. And I write often about gamma and delta, and you're going to see delta today, at least much talk about it, how I exploit that. Okay, so now these are those three same yellow bars, but you could see here YB4, they all look same, but on a chart, and I've been criticized, oh, too many symbols, complicated. No, but it tells you the story. So which poison you want to drink or which sweet you want to eat. Suppose one chart says YB4, one says YB4 cost plus, and YB4, which one you supposed to do? YB4, because that has a more strength. That's why it says a big bull here. So people need to get out of the traditional thinking and go out of the box, and you will do better than normal trader. All right, I cannot guarantee, but they tell you what is happening. So this is one of the biggest problem I had it on Wall Street, right? That how I know? Oh, simple buy and sell. Oh, we all use MACD and this and that, RSI, and any program will show you right 80 RSI and whatever RSI. But what happened in between? All this opportunity, and we were disciplined by trading in a Wall Street. If you miss the entry, you don't enter. I said, that's BS. Sorry, excuse me. Because I'm losing all the opportunity. I like this security because it has a potential. So how I get in there? Oh, on a pullback. But before pullback, there are many opportunity. The problem we have multiple opportunity in any market, whether it's going to sideways, this way, doesn't matter. Software finds on average, and I'm telling you very conservative. And people in my room, if they are here, they could put a comment, and Jeff is nice enough to read it later. We don't have problem finding these setups. Only problem we have is too much. So you pick your battles. And I like to take challenges, new thing to, experiment, right? Because unique conditions, and that makes you a different trader. Now you could see here how many combinations are there of 51 symbols and 11 highlight. There is nothing I had to convince you more than that. It's in trillions. And each of the, and Jeff knows each of the symbols, how many formulas deep it has gone through to find them. Believe me or not, we need a quantum computer. And it is true. And Dell, Intel, NVIDIA are working with Dell for so many years for my case to optimize so we could do more calculations, right? You're talking about GeoForce, all these things, high end. I've been spending that money for years. So I'm ahead of everybody and I get the best out of the best. So you could do the same thing. If you don't have money, don't worry because we have a lot of room for that. Now, what I did it out of 51, these are normally comes in most of the time. So I shortlisted them and try to tell you how many different clusters are there. You you tell me I'm going to only use entry and exit and in between. Suppose it shows up this one. Do you think I'm going to stop not taking the position? Yes, of course I'm going to take it. So this is what is missing. Right? Excuse me for all these people who has only buy and sell arrow. I'm not trying to tell you your system is bad or good, but it is honest truth. We're losing a lot of opportunity. And chart tells you this story. And I'm taking advantage. People around me taking advantage. After you see yellow bar, and then this showed up. I'm going there because institutions are buying it. This color belongs to the institution. This is the lowest risk entry for them because we used to do that. So basically, I try to be more practical, the reality than I could be because I was the one getting frustrated, and I'm not working for a broker. I'm a LLC partner with them. And it was a publicly traded company, right? So this is what I was frustrated with. I got to find a way I could make more money. So basically, very little time I'm going to spend. You have all the information from thousands of sources, including the source I gave you for option 800 number. But these are important. All right. So we're going to talk a little bit on a practical side, not a theoretical side much, what I use it and why it is important. So you could get 10,000 places to get a call up application, but I'm keeping here so I could talk other things and you could later on read this definition, what is option, right? It's a contract, right? On both sides, either you want to go long or a short, or you want to buy put or a call, right? The contracts are there, so it's a binding on a both side, and they have risk and rewards. What I did it, I later on I made for you guys a table which will show you risk and reward very simple way, and I also did out of the money in the money because this is the biggest pain for new people getting lost reading 10,000 different resources. I took a pain and I want to give it to you as a gift today. And it's no charge, no kind of gimmick, but this is the practical way. You could now look at that table and see what is the going on with the delta and what is important, right? And you could take example very easily to analyze. All right. So now I put delta and gamma. We're not going to talk about gamma much, but I practice living with this gamma for years. And now it's becoming popular. Do you think Wall Street did not knew? We knew back in 90s, right? It is one of the Greek, but the application. Now you're going to talk, everybody you're going to hear JP Morgan, right? They're working on this delta and this gamma, and now it become popular. So pay attention to those two guys. Everything else is important. Theta is important. Those are the Greeks. But the biggest thing is delta because that's where the hedging taking place. The condition we are today for last 2-3 years is part of this is the hedging. And my life started with one of the only biggest hedging firm in a country when I went to prop trading, right? And I got trained, right, which was called overnight, right? Hedging equally on a both side. So I could sleep well, and they had a proprietary method to hedge the market and select the security a day before the market close and get out before 10:30. And that's how we used to do that. So one of these days I'll teach you all. And I had nothing but good to say about that firm. And then it was bought out with a very big price tag back in days by one of the largest publicly traded company, and I wound up with them. Okay, so this is for call options. The important stuff is when you want to go long, when you think is going long, you're going to get a green spike, and that is going bullish. So it's going to be what do you call that symbols, and we're going to repeat it again. So basically, we are betting that we're going to go long. So we buy call option a contract that at a strike price, right, which is in the money, out of the money, and we're going to talk a little bit about on the table. So this is the thing called swim platform. One of them I'm using since I met, I think Jeff was there, one of the event. I met this original owner, Tom, right? He has a name I still cannot pronounce well, Snowhoff or whatever, right? That guy changed my life. And he was in very earlier stages, right? And he said, "Don't worry, Peter, I'm going to help you. Whatever question." That's what I want to hear. The guy's in to stay in the business, and look what is happening to him. He sold it company twice, kind of thing, and become billionaire. But that guy is still good and is still one of the nicest guy in the country and the world. So now what is important? Delta, right? Then gamma, I did not put it because we're going to talk separately, but for you, theta. And we're going to talk what is that theta doing to you and your position. And this is very, very important. That's your enemy. All right. When you go long or a short, theta is your enemy. That means this is your risk factor. And you got to learn every single thing about this characteristic of the option. That's why I'm pointing out on a platform so you don't have to go too far. Second thing is the date of the contract. Because once its expiry date goes, you go. So in this case, there were only 5 days left. So now you weekly option trading, right? And you know the theta is going to be on your neck, breathing on your neck, right? And as the days are coming next to your expiration, if it is not in the money, right, you're going to be having problem. And I want you to know about it. So this is becoming more important. Strike price, of course, is important. Selection of the strike price is very, very important. And I'm going to show you a couple of things, right, which can help you. Now, as the call option important, I do the screenshot. You could read every single thing at your own. And this is for the put. And again, delta is important. I'm going to give you a little bit Greek why I'm looking for that and why I'm looking for theta. So we could spend 2 days and it will not be enough here. But this is just to get started, right? You don't need to be an expert about it. We're going to trade with a simple strategy, buying calls and buying put here. But the other thing, Greeks are more important. And it will create your bottom line negative or positive if you don't know what you're doing. So pay attention to that. So what I did, risk and reward, simple way. If I buy the call option, what is my risk? Whatever you paid for the option is your risk. What is the reward? Unlimited. So people intend to be buying calls, right? That's what the bullish mentality we're seeing for last 2-3 years at least, not the previous administration. Continue. We're going to the moon kind of story. Now, selling the call, I use that, right, in my vertical spread. And it is true, Paine Weber, it took me 3.5 years conservative. I was early a little bit. They allowed me to sell naked calls. But it is also true, you need a couple of $1 million account. Otherwise, forget about it. And they restrict you. You cannot do this. Every day they bother you that you going over the limit, you got to liquidate it. So I don't do that anymore. I'm old now. I have 2 lives given out of 9 lives, I guess, of my life-threatening situation. So I do not take those heart attacks anymore. But it is true. The stocks what I wanted to acquire, I did naked puts for those and acquired them too in the past. But now no more. Please do not trade those strategy. This is a risk. So this one use for conservative way. if you buy a call and sell a call, it becomes a spread. And if you do a loan, it's unlimited risk. Stay out of that, and you making the only this premium collected. So I used to use for the stocks like back in days, okay, not now. IBM was my favorite. It's a good company, whatever, right? AOL, I got hurt with AOL taking too much positions, right? And mistakes I did it. Overall, I made money, but I was a crazy risk taker, no more, right? So every trader goes through this, right? When they are young and get beat up a couple of times. I didn't blow up my account, but I got hurt. That I agree. So I wanted to find something I could trust on. All the traditional stuff, I said, there got to be another way. Okay, so buying a put option is a good thing to hedge it. So many times, right, I do married puts, which also I'm practicing also because I don't want to babysit much and it's a long-term good. And I do lips, right? So this way I could hedge for a while and I don't have to babysit much, but that's keeping my skill alive. But I like to do vertical spread, right? And later I'm going to show you. I'm going to go very fast because we don't have much time. But later on, I'm going to show you vertical spread, the screenshot. And I do a lot of vertical spread as a scalp swing or a scalping. And there is not too many people talk about it. And I will show you some documentation, right? That's a part of our software, exploiting it. So for new people, to use this table to your advantage and especially your risk reward business. So now theta, which is my favorite one. So I'll give you practical example. Say for instance, we were doing this option, whatever the strike price is 405. So theta was 20, means 0.20, right? So what does that means? So suppose the option price, ask price, or we got this price, say 703. So you spent $703 to buy that call option. So what happens, because theta is 0.2 and each contract is equivalent to 100 shares of the security, that means 100 times 0.2 is $20. So next day, your option is worth how much? $683. This is as simple as that. So now, instead of making money, especially on this FANG stock or mixed, whatever 7 is, you could get into this situation big time. There, theta could be dollars. So that means you're losing $100 a day. And if you did not pick up the right direction, you're on a hook, losing the account or losing what you invested. So delta becomes very, very important. And theta also very important. We're going to go on a delta in a minute. But theta is important. And last few days, it goes very negative. Negative means price, right? Your security price gets affected very well because you lose faster. Now we're going to talk about delta, which is my favorite. Delta is equivalent to stock, right? So equivalent to stock means market makers or dealers, what they do when you buy stock or buy out of the money calls, what they do, they have to buy either futures or they have to buy equivalent of delta value. Say for instance, equivalent of delta here is 70.74 times 100. So they have to buy 74 stocks, right, in order to hedge because you're buying out of the money call. All right. So at that time, that table will be helpful to you on a put side or on a call side. And this becomes really a storytelling for your success. So you want the out of money call because it's cheap. But if your delta is not going from 0.74 to 100, then you got a problem because it's not going to be in the money. Then you wind up losing money. So if you're going on the opposite direction, you have a problem. So you need to pay attention to that. And delta also minus, if you are in a put side, it has to go from minus 0.26 to 0.8. Minus 0.8, that means delta expansions on a bearish side. So that means you got to make money. Otherwise, it goes on the opposite side, you lose money. So you got to look at the broker platform. What is it doing, right? All the way going into the expiration. Now, this is that table I'm talking about. I copyrighted, but you could open up the video We don't like people to distribute it. It says clearly here because lawyers want us to put it there, and we also told MetaStock in writing nobody can take it out, and it is all copyrighted. We need to stop the abuse. That's why we put that. But I wanted to help people. You could open up a video and look at it as many times you want to look at it. So now I'm going to show you. So this is the security price. This was for Apple on I think 24 or 25th, whatever was that. I took it right, all the data right before this webinar. So it is latest one. Right now you could compare these values for the current options, right? So this way you're going to get an idea. And I don't remember the strike price, but it was around 182. So it's a 182.5 strike price. That's what I selected. So you could find these values. All right. And there is a two symbol, time value and extrinsic value. Only thing out of the money calls is these two values, because out of the money usually expires worthless, so all the people lose money. But this is very important. If you think that is bullish, you need to pay attention to these values. All right. And I wrote down here a couple of things. Right. The holder can buy security with a cheaper price because you're paying for premium, and security price went up. So please self-study it, and you will be happy that you have this table and use it as much as you want to use it. But it is still our copyrighted material. Now, I put overall all these square boxes. That means they are important. The most important thing is I want to have people look at that. Volume and open interest. One day I'll teach you that. We don't have time, but I just want to show you. My mind, however, is like a sharp eye. So in this case, most of them did not have this disparity. So in this case, volume exceeded previous open interest. So suppose 5 days open interest was 415. That day when I screenshot, right, whatever the time was, it had open vertical interest exceeded by volume. So what it means is value is more. That means people are putting money. So indirectly it's telling you where people are going, right? So they're betting to, in this case, going higher. So in the put side, look at this here on, I think this is QQQ, right? I remember that, looking at it. So QQQ had also 378 open interest, and as soon as this happened, it has 481. So that is a put side. More people are buying puts. That's what I got it out of that. So I'm very careful, right? And I will also make practical decision. So this is one of the most important observation I want you to do on a regular basis. There are more things like this. Once you learn the option, I'm passionate about options since 90s, right? And that's how I got my Series 7. I'll be very honest with you. I had a 10 days to pass Series 7 because of the structuring I was doing for now called City Group, right? And they put me against wall that if you don't get Series 7, we'll sponsor you, we'll get you in a window open. Otherwise, you won't get a dime. I said, excuse me? I didn't know that. Go and get your, it's a big story. I got yelled at after I got more marks because they said you should pay attention to business instead of being academic. I said, you told me to pass it. So they had a sense of humor, I guess. So what I did it, these are strategy we're discussing in alert room. Not at all as it comes, I will pull it out and say, okay, we're doing credit spare, vertical butterfly or whatever, wide wing butterfly. So these are the strategy. One thing is not known industry or don't unspeakable is depends upon vertical months and strike price, right? There is a 1 month to 4 months the window, or 1 to 4 different strike price. There are 144, 45 combination, and you could practically trade with a thing called swim platform. And most of the people ignore it, and there are a lot of hidden gems there. How I know? Because I was trading in the institution side. So I know all these tricks, right? But do I have to practice all? No. Keep it simple. Call and put. That's it. Right now for you guys, okay? I do crazy things sometimes. Okay, now what you see, I made it simple and I make it on option side. The same spikes the red spike to green spike, this is tagged as a number 1, number 2. What you got to remember, red is a bearish, is hurting more, so I put it as a priority, right? Because if you're on the wrong side in the bull market, it hurts, right? So you got to pay attention. Go on the other side, right? Don't worry about it, right? So 1 to 2 means we were shorting or we buying a put, and eventually we got to buy it back, right? So sell the put. Listen, and you will have this thing. So anytime you got a software, when the red spike comes in, of course you got to look at around, but we're going down, so we're buying put. So don't short it or sell the put. I made all these mistakes, trust me. Then I got to figure out how I'm going to get out. I'm in the wrong trend. So platform practice is very important. Same thing, suppose you are bullish, local, we are all bullish, right? Including today, right after PCE results, right? So we want to go long as much as we can. And I cannot give you buy and hold recommendation, but if I have a time, let me do it anyway before I go further, because I may not have a chance to do it, right? You will not have the delta, but the power of delta on a gamma, I want to show it to you, right? Look at this here. You will not get this thing until we roll it out. But just want to tell you, when you have it, what will happen to you, right? Look at this here. This came in and what happened? This is a gamma squeeze, right? It works on every damn time frame. And you got yellow bar, which we're going to talk about, and you got a delta, earlier entries. That means institutions covering up, right? They have to buy, equivalent delta. So that creates, and if you are short securities, then you got to, you be kidding if you stay in there, right? You got to get out and go on the other side. And bunch of other ones which also you could look at, right? Let me see, I made some notes to no buy and sell recommendation. And this is one of these things, CELH. I'm not in that security, but I just wanted to show you how long it's been going. And then I will change it because I got to finish it up. I get in trouble for MetaStock. Going over the time, we are already late. So Jab, be generous, okay? Okay, look here. I just want to show you the power of this software. Yellow bar, which we could scan it. Why before you just learn it is good, right? There is a spike there. Don't worry about everything else. Look at here. It is coincident? No, it is not coincident. They were short, now they're running for their life, right? And it is keep on going, keep on going. Look at this here. This is not the entry singular, but they are switching the gears. I want to know. They switch the gears here. I want to know. All right. This is the power of this. And this was invented in a frustration a couple of years ago because I cannot retrieve the data from Reuters platform. Right. I cannot blame Jeff, but I was so frustrated. I told Jeff, I'm going to figure it out mathematically. And you're talking about artificial intelligence. We don't talk about it. But this forecaster here, this was in place, in work since 2006. How this software know we're going to go higher? Go and figure that. Here it knows we're going to go higher. Come on, right? I could brag whole day long about artificial intelligence. So what it is? So I have no option data, and Jeff will testify here that he did not give me the access to that because he doesn't have one, right? And I wanted to know artificially. So I wrote something mathematical formula, right? I'm an engineer. I'm not talking about me, but it is a necessity. Otherwise, this luxury, we won't have it today. I want to help traders. That's the whole intention of doing it. From institution to, and people around me knows that I help more to people who has no money than people who has money. Because and this is one of the things I hated when I learned a lot of things done on institution side. They want to just hurt people. Greed. And now imagine in the future, and a lot of them, I'm giving them this thing, including this morning, right? All these things, this is what is happening. I cannot recommend somebody, but this is happening. You want to see more, right? I'll give it to you because I'm in a good mood today because Jeff is nice to me. So Jeff, give me some extra time so I could help people here. Look at here. Look at here. And this is my signature candle. All good and best institution lines up. We have proof, right, from a dark pool, from CBOE, and a lot of institutional communications. And look at this forecasting here. It was telling we're going to go to the moon. When? Which was here. And some of them moved to the extended limits, right? I won't buy here because it's too, I don't take risk, you know that. Now here, look how far it go. So here, but look, it tells you to go in here. I like to go in when the fresh blood comes in, right? When institution put in more money, right? Look at here. Even on a smaller time frame, 2 minutes. So people who are doing scalping, oh my God, they will be happy to do it, right? So if you don't have it, I send it to you in a text messages on a WhatsApp. All right, so that's it. So now you got a little bit glimpse about this software. If you don't have time later, we could do it. So let's stick with the fundamental, how to get these securities on your side. And we'll have to go, I'm looking at the watch here. Jeff is going to kill me. All right, so this is the scanner. I use Go. So that's the one. I don't need a put option. And look what happened here. So I entered here. All right, this is the put. You have the screenshot. This is from Think or Swim, right? Make believe is everything is hypothetical or simulated trading, but it is there. We bought this call, put options at 447, and I got out a little bit earlier than the spike because it's a counter cycle. I could have got out here also, but from the experience, Magic clients, I could stay in there, right? And it's a horizontal time risk, so I got to take profit. But it was very close when half of the spike was forming, so we got out, right? And we'll show you the math, right? And people who knows the trading or new people, you don't have to be a scientist to figure it out, right? This is my favorite one, right? There's another one. They're telling you constantly, buy the put, buy the put. So results are very obvious. Now, what I did it for your knowledge, so for a skeptic, this is the time, actual delta, right? And this is the price I believe I paid. Sometimes I get better feel. And this was the delta. And it is self-explanation here. And this was the current price. So I bought it, the security at 434 strike price at the money. It is called at the money, right? Because I want to get the delta at least around 45 to 50. So delta was 45. I don't like too cheap option. I pay, and if I can't afford it, as far as risk is concerned, I do vertical spread. So I want to give you some hints here and there. So what I did it, I screenshot exit and entry, both of them, for people to go and study that, right? So all these circles here or squares has got to do with that, your understanding. So here the delta was 0.45 and delta become 1.0. That means you are making dollar to dollar move of the security, right? I'm not greedy. You could go to moon, I don't care, but I decided to get out. It was the entry price at the security was 434 and it became 413. 13 days the option expiration was, which is good enough for me because I'm going to get out earlier or at the last day sometime. So day before I got out, delta was, in this particular case, because we're shorting it. Also, excuse me, I'm sorry, it was -1. Probably I did not spoke about it. It's a very small. You could enlarge it later. It's a -45 to -1. It's a delta negative expansion. So delta positive, I showed to you. Eventually, we'll have delta negative, right? When people are selling off. So basically, we bought the put option at 447, and we exited at 2074. This is straight from the platform, and we have to put the disclaimer. The regulator said every time you talk about this thing, you have to put it in. So what I did it, I did actual executed trades and screenshot them, right? The portion of them, so you could pinpoint and skeptics. So I wrote it as swinged. It's not swing trade. Swing means I did the trade, right? Scalped. Right. So in this case, I put only on two sides because to keep it simple, the trade we just show it 1 and 2. So that tells you that I got out at the B and I entered at A, I paid 447, which already see it on a chart, and we exited at 20, whatever the dollars are, right? And multiply by 100. So I did the calculation, which you could also know it, and I put the profit for that particular trade. So people want to understand whether it worked or not. Now here is the proof, right? And you have to consider as a simulated regulator don't want us to talk about live trade. And people who are doing it, God bless them. I don't make complaints about others because that's good karma. No, it's not good karma. Let them make millions. I don't care. But I go by what regulators telling me to do it because we need their agreement to even show you. Okay, so now you could see here 434 was the strike price. We limit order, I put it, sometimes I get better prices. Look, I put limit order 474 and I got feel better than I expected, right? So nothing I could do. I got blessed, I guess, right? So basically 9 trading days, right? What is the output? So in this case, profit per day, right, was $174. Hard to believe. Divide 1,566 divided by 9 trading days, whether I go in the morning or I consider as a trading days, not calendar days. That is also missed. When I went on Wall Street, this is how they do it. Trading days, when market is active and breathing. For greedy people, they will tell you, oh, what do you call, you got to do. Yes, it is true, but how many days you trade? So that's your actual performance in trading days. So you could manipulate and bring it down, doesn't matter. But it is there. 38.92% is good, too good to be true, but it is in front of you. So this is why I was not talking about options all these years. Now, Jeff and Kelly got and I told them I'm going to do something which I never did, right? Because people will be skill skeptic, God bless them. Right? I don't have to prove anybody. Let me put you this way. Since 2006, what the hell I'm doing? I spent more than $150,000 in various patents and trademark and maintaining them. How many people do it? And I don't borrow one penny from anybody. Neither I took money from MetaStock. Oh, give me $10,000 for this. Everything is renewed worldwide, right? So basically, it's a lot of pain I have gone through to come to this stage. And I'm not a perfect trader. I'm not a genius. I did it for me. And I want to do for little guys now, right? And hell with all the big shark tanks. Now, this is what I did in opposite because we don't have much time, but the idea is the same. I told you don't need yellow bar to be successful. You have this thing on those scanner. Google it, not Google. Use Explorer. All right. So again, same concept. We buying the call and selling the call when we see spike or just near to the spike. We teach you all this thing, how to be safe, right? And you will be surprised how easy it is. So this is the chart you could see. So we went short and I screenshotted here. So I put some levels here. The question is where we should take or add the lots or whatever it is on a traditional way, right? So we don't need to do technical analysis. Software does for you, and I'll show you in a minute. So this is the invention. You're not going to believe. On 10/24, the software forecasted all these levels, and we executed trades when? Few months later, 11/1. It is hard to believe. It is happening every day, and I will show you the proof in a minute, right? Proof is right here. 10/24, the software forecasted all these levels. We call them magic zone levels. So one of these claim we got it because I proved that Fibonacci's are great, but they are not dynamically acting. They are not adaptive. They are not forecasting. I figured out a way to do all three functions, and way earlier I want to know. And this is itself is an invention. And multiple time frame, you get the different zone levels, you got to learn how to pick one. My idea is I won't even wait for zone levels to cross. I take my money out and go back again. It's cheap to place an order. So this is the time we bought the call are based off the symbols. So when people are saying, oh, we don't need those symbols, yeah, then why you are in here? And you're going to see why we were there. This was the biggest trend. It was developed from that point for days. So that's why it's not everybody's wrong. They've been doing. If they were not there, I won't be here. I was one of them, following what they teach us, all right? And I wound up teaching all over the world because that's what they taught me. And me, Jeff, were hanging out everywhere, cities after cities, many weeks in a row. It was funny. Right now, this is the proof that on 1024, the magic zone lines created this level and stabilized from that point, right? And not every zone level did it. So there is a mathematics behind it. So this is big. I don't brag here. This is the reality. And there is a nuances to learn it. They're all not same. They tell you stories about. Let me tell you something. In Chicago, I spoke openly. I told them the Dow is going to crash from $29,000 prices to 18,000 and some change. I showed the calculation based on what? These different magic zone lines and my software forecasting capability. So if somebody has to take credit, I should be taking. What is this? It's part of artificial intelligence, but mathematically, not guessing based on previous whatever, right? Data collection. This is happening as it is showing as it's happening. So I need to be ahead of everybody. That was all my I wanted to do it. So I could make more money. This is the end of the day. All this information is here. You could dissect whatever you want to do it, right? And this is the strategy we're following. From here to here, we did it. Now we're going from here to there, right? So let's go. So now this is the total picture. If I did not take the trade here on that day, how much I missed it. But Magic Trader is smart. He even give you signal here, signal here. This is the pullback, so I could go back in here. Many traders will tell you, I will buy at, even though Wall Street, it closed below open, right? So you should not take that. I was one of them who was taught that. No. Institutions are buying in the weakness. So I'm going there. And next day, look what happened. Going to the moon, right? In here, right, it achieved that level 459. I still trade, what you can say in a trade to show you, right? And I did the calculation somewhere here. The calculation means exited here on this date, 12/5, which is here, right? I could have bragged, oh, I reached my level. I said, let's see spike to spike. What are you going to go through? And here, if I wanted, I could have gone where? Going down, right? So, and there is a nuances I prefer. It closed below, but I will look at the counter cycles as well as I will look at the smaller time frame. I'm giving you the hint along the discussion. Now look here, we bought it at 8,011 cents. Don't be afraid. If you can't afford it, buy the spread, put spread. So this will come down to $200, right? And you make less money. So what? You did a positive trade. And along the line, if you collecting money, so you could add some more. So here we don't have to worry about it. But I am worried about it when it goes below this magic lines. And magic lines are not your traditional lines. Every single time frame has its own magic lines. So in normal circumstances, you use those lines, which I don't want to talk about it, to create more controversy, right? You don't need to put different those lines in different time frame, because what I learned, the risks are different. So it has to be custom made, and I drew MetaStock stop crazy. But I was trading that way. I knew there is something wrong, so I had to do better job. So here are the results from Think or Swing platform, and all these calculations are here. The bottom line for you guys, how much we're making per day? $102 per day, no problem. How much percentage per day on the risk of 811? Suppose you did vertical spread, you got to do calculation different way. 12% per day. Too good to be true. Just go and do it then. You want to make half of that, you are doing good. Now this is how I feel. And this is one of the reasons I don't want to talk, because there are people skeptic. I don't have time for them. And I don't have to prove anybody. I'm in a business since 2006. What the hell I'm doing here? I have a health issue, so it affecting my really trading, right? So I have a broker's trained too, so they pull triggers for me, right? They know magic trader because I give them parameters. This is what it is, and I just tell them, hey, now the red spike is firing. Take your profit. Sometimes they don't listen. I'm going to fire one, right? So I let them win, give them ropes to hang themselves because I'm lucky to be alive. People around me knows how bad it was last 4 or 5 years. I was told by doctors I'm not going to make it. 7 specialists. I will die. How do you feel about it? And I did not tell my wife or children. 7 people telling me if I don't do this surgery, I will die. How do you feel about it? So you want to trade? I still was functioning 5 hours later of my surgery, which I'm supposed to take 8 months really risk. I have never taken that risk. God has given me all the energy to help little guys. Now, skeptics, these are the trades doing scalping. In and out. You could see whatever the evaluation you want to do, go ahead and do it. Still, I have to tell you, it's all hypothetical, stimulated trade, right? So this way, I don't have to worry about skeptics. And regulators are happy with me that I'm telling you everything cannot work tomorrow, but trade after trade. And I don't want to brag. People around me knows, right? I went on a rampage, right, recently, do a few hundred trades, and I will tell you, I had 7 trades losing, but it is my stupidity, right? Because sometimes I go crazy from one side to another side, and I copy the same before, and I had minus $10 loss on 2 of them, and one the rest of them out of 7, I had a minus $1, $2, and $3 loss. That's it. After paying all this commission, calculation, whatever, or make believe it was not true, but it is true. People have got my record, right? I am not giving because these are the people who signed their life for me, confidentiality. All right. So now you don't have to believe anything, but it is happening right in front of you. So these are the swings. We just talk about it. And this is one thing good about scalp swing. So I had an opportunity scalping on a QQQ base than what I showed to you. So what I did it, I did a quick trade on a QQQ while I was what do you call in the trade. So I collected, I think $20, $30, right? To pay or $30, something like that. You do the math here. I don't have time. So in and out for QQQ and grab some money, and just in case I have a drawdown, I feel better. Or if I have to take a loss or break even, I have less money, what do you call pain. So I do that all the time. So that thank God to my method, right? So scalp swing is the way to go, and I had a trademark on that, so nobody can do that. So little bit about my daughter, which I take pride of her. She works now. She got married, working for one of the largest company in the world, and I did not help her to get a job. In fact, they eliminated few months their due diligence process and investigation because it's one of the largest, right? For 3 to 4 months, she interviewed today. She got a phone call same day. We want you to start ASAP and give us this document. We don't need more investigation on you. They got shocked what she has to offer them. She knew more about them, the people who were interviewing them. And they call upper management, this call is beyond our expectation. We don't want to lose her. I take pride of my children because this is what you put it in. If you put garbage, you get garbage out, right? They may not be brightest in the world, but they keep low profile, do what they're supposed to do, just like what I teach and my wife teach them. And they have multiple talents. All this what you see, my daughter got involved since 9 years old kid, helped me and grow out of it. And I take a minute to acknowledge that I'm proud of her. And this is the best gift. I even text her this morning that you are the best gift God ever gave it to me. And I'm proud of saying publicly. All the parents are there and they are proud of their children, right? Because they do things not to make money only, but be a good person. And this is what my daughter is, right? and I'm take proud of. I'll tell a little bit about about my Series 763. I don't have it. Too much pressure on me. I still have 3 and 34. Took exemption, right? And I've been involved on all aspects in Wall Street, private equity, hedge funds, all kind of things behind the scene, mergers, acquisition. But it's not important. You are important for me. But I wrote today a new slogan, not good enough, on my spiritual followers. Not good enough, that's what you need to feel about it. And this is the results of not good enough. I pushed her to the limits, and now she become good for Goldman or whatever the companies she worked with. She worked with all good companies. This is what I'm going to do for people who register today, because we need them to sign some papers, because I'm regulators. They have to go on my website, do whatever they have to do it. I'm going to give them actual PDF for that, right? And this had gain per day 21%. So what is happening? Securities after security. Same thing. I got out earlier a little bit, right? So I got out here after my turquoise bar, and that has its own functionality. So when you turquoise bar, I'm giving hit, get the hell out of it, right? So I still let it finish its job. Next day morning, I got out, right? I don't have all the other things because we're running out of time. So Jeff, I do believe floor is yours because we're running out of time. We started late. All right. Okay, so go ahead.
Let's go ahead and do this. Hold on just a second. Let me go ahead and make me the presenter. I'll show my screen. Thank you very much, Pedro. I do want to say with this, we are running a bit late, but Magic Trader Elite is a very, very nice add-on. It includes quite a number of indicators, some templates, explorations, expert advisors, scanners, everything that you might need to be able to run it. In addition to that, part of the package we're going to do today, the offer that we're going to do today, which I'm going to go very quickly through, is 20 hours of recording of the fundamentals of Magic Trader. We had a comment in the chat for John that said, oh, well, where did it go exactly? It said, Dalal's programs are excellent if you take the time to learn them. One of the things that Peter does a very, very good job of is actually providing a lot of great training. So we've got the 20 hours of fundamentals of Magic Trader that's included as part of it. And we even have also a basic boot camp. Yes. Oh, here. I'm sorry. I get a little bit stressed out when we get a little bit late. Let me go ahead and share my. Yeah, okay, here we go. Let's see. Can you see it now? Okay. Yeah, it should be loading in. All right, all right. Oh, no problem. Thank you. I appreciate you letting me know there's a problem. So as I said, there's a huge amount of indicators. You get all of the training modules, over 20 hours of recording that's included. You get the consulting. Well, we're going to offer you a special on his consulting and education room. And you can kind of get an idea of the concepts that are in there as well. So in addition to that, there's some more things that they talk about in the alert room. The alert room, they sit down and they meet weekly. He'll send alerts through that talk about kind of the service that he offers. Here are the some of the other added benefits of magictrader.com and the Facebook group. The pricing that we're going to do, his elite room, or the Magic Trader Elite, is normally $199 or $597 would be the cost of it for 3 months. In addition to that, you're going to get the option equity trading educational alert room. They meet a few times a week. They talk about kind of what's going on in the market. Peter will send you alerts in terms of things that he's looking at, and 20 hours of recorded Magic Trader Elite training called the Fundamentals of Magic Trader Elite. So the total value of this is $2,493. The special that we're going to offer as of today, this is available for 1 week. You need to get it. You can get 3 months of the Magic Trader Elite, the equity trading educational alert room, 3 months of that, the recorded fundamental of Magic Trader Elite training, and all of that will be $997. So if you want to take advantage of that, give us a call. You can call us at 800-882-3040. you can go to metastock.com/sales-chat to take advantage of it. Great service. Dakari kind of said in here that he just loves being part of the room. He loves getting all the market messages. We really appreciate all of your time. I know you really, really like the room. So there you go. Lada, yes, Rob Booker is coming right up. And there you go. All right. 800-882-3040, metastock.com/sales-chat. We'll get you there. And then you can also go to this, I can also give us a call, 800-882-3040. Thank you again, Peter, for that. John Martin said in the chat, the spike is his go-to signal. So there you go. All right. Right before we started, I want to say thank you to CMT Association. Also want to say, also kind of just put this screen up for a second. Right before the chat said, I said, hey, what's your favorite indicator and why? And the person I'm going to give the prize away for this time around is John Martin. John, in the YouTube chat, thank you for participating with it. Thanks for using MetaStock. I'm going to give you high profit candlestick patterns, eliminating emotions, and this mouse pad, all by Steve Bigelow. And I'll reach out to you and get the information from you that I need. So without further ado, let me go ahead and kind of get over to the next slide. Okay. All right, our next guest is Rob Booker. Rob's been a presenter in the MetaStock room before. We love having him. He always does a really, really good job. Let's go ahead and get you started, Rob. How are you doing today?
Hey there. Can you hear me okay?
I can. You're coming through good.
All right, great. I'm going to try to share my camera. There we go. Hey, everybody.
Yeah, we can see you.
Yeah, it's a cold day here in Austin, Texas. Hopefully you can see me okay. It looks like it froze. Oh, my whole thing froze here. So hold on. There we go. I changed
the presenter, and that caused kind of a little bit of a change real quick.
All right. So you should. Oh, wow. The screen sharing is working. Everything is. What? How is it possible that everything is working from the get-go? It's amazing.
Well, when I made you the presenter, it stopped sharing your screen or your camera. I don't know if you want to turn it back on or not, but that's up to you. Everything else is working great.
Hi, everybody. It's good to see you.
All right. It's all you, Rob. I'm going to get out of the way.
All right. How's it going, everybody? Good to see you. My name is Rob. I'm just very excited to be here with you. I absolutely love Jeffrey and MetaStock. Jeffrey, if you went to work for North Korea, I would do a webinar for you guys. I just would, thank goodness you're not, because I really don't want to have to do that. But thank you so much for having me here today. What a pleasure to be here with everybody. We'll have some time for questions. I'm going to finish on time here in about 40 minutes. So everybody, we're gonna stay on schedule here. And if you've got some questions, you can pop them in along the way, but especially at the end. Remember that trading involves a substantial risk of loss and is not suitable for all people. Some people really shouldn't be trading. Some people should just be maybe drinking or something. I don't know. This isn't just a disclaimer that I read because it's required, because actually it's not required. I don't manage money or anything like that, and I'm not here to sell you anything, but it's just important to remind you, just be careful, lower your trade size. It takes years to become successful for some people, and the name of the game is survivability. If you can survive, you possibly and probably will be able to trade. Also, I'm not here to sell you anything. My results are not typical. You're gonna see my live account. The results are not hypothetical. I'm not going to show you any hypothetical trading. I'm going to show you my actual trades and my live account and whatever else. I'm not here to sell you anything. I've got something free for you at the end. And I do have an indicator built for the MetaStock platform, which I love. And Jeffrey, at the end, if you want to put a link to that up also, that's fine too. But just most importantly, I'm just here to help out. And I've been trading for 24 years. We'll talk about that in a minute. But most of all, today we're going to talk about pivots. And of course, it's all based on that wonderful episode of Friends where Ross is trying to carry a couch upstairs. If you didn't see that episode, it's hilarious for those of us that use pivot points because he's just screaming pivot during the episode. So thank you again to MetaStock, and thank you to you for being here. The most important person here on this webinar today is you. And I'm here to help you. I'm here to serve you. I work for you right now. And I just want to help you out. And I want to share as much information as I can that will help maybe move things forward for you. All right. My name is Rob Booker. I'm here in Austin, Texas. A little bit about me. I'm a dad. It's my favorite thing. I'm a trader. That's my second favorite thing. I've been trading for 24 years now. I got started in the year 2000 in the currency market. And I have loved and hated trading. I love it more than hate it, but there are those days, and you know what I'm talking about. I do two things in my trading. I short stocks. That's primarily the way that I generate gains and grow an account. And then I do long-term investing with the profits. And today you'll see my shorting account and you'll see my long-term account. I started the first podcast for traders in the year 2003 as an internet radio show. I sold the podcast in 2019. You can still find it on Spotify, I think. It's the Traders Podcast. I also created a daily planner for traders that has shockingly been a pretty big hit. And we'll take a look at that in just a moment. So this is my live account on Robinhood. These are my open trades right now. You can see the expiration dates on those options. You can see that today was a $1,996.91 day. I have a call on the UVXY. I was expecting maybe a little bit of volatility here. I only did 5 of those trades, and those options were 12 cents each or 11 cents each. I sold some puts on Kohl's. I sold some puts on Futu. I have a call on MDLS that I sold. Kroger, I sold some puts. I'm trying to get assigned some Kroger stock. I own thousands of shares of Occidental Petroleum, and you can see my open trades here. These are my open shares. I own 1,000 shares of Altria. I own 2,100 shares of Occidental Petroleum together with Warren Buffett. I own 1,900 shares of Walgreens Boots Alliance. I would love to dump this and pick up some Kroger instead. And then I own 800 shares of Mondelez. They make Oreo cookies. That's not why I own the stock. This is my short selling account. I'll show you that account live in just a second here. I only show this to you. My results are not necessarily typical, although on the shorting side, they are typical actually. Everybody that shorts stocks with me, this is a very typical performance. I can actually show you a couple of things here. I'll show you, first of all, I'll show you the group that I trade with. This is not a sales pitch. It's not for sale. Actually, I don't have anything for sale. So these are the overnight holds for my friend E. And we publish all of our account statements and all of our trades publicly here, every one of us, every day. And we trade charts, and there's Samuel's trades. And then I just wanted to show you a couple more. So these are typical results. This is what I'm trying to say here is this is what we do. We're pretty good at shorting stocks, and shorting stocks is, in my opinion, the fastest way to grow a small account. It's not a popular opinion, and a lot of people think that shorting stocks is super dangerous. I don't believe that that's the case. I believe that all trading is dangerous and all trading is risky and all trading needs to have stop losses. So, all right. Let's just make sure everything's going here. I saw this pop up. Okay, it looks like everything is working. So that's my account. We can dive more into that later. I only show that to you for one reason, which is if someone's going to teach you how to trade or acts like they're going to teach you how to trade, they should be showing you their trading. And everybody can trade a demo account. Everybody knows how to do that. That's easy, right? You just hold your trades forever and it's fake money. But you can't buy a demo car and you can't eat a demo lunch. So paper trading is interesting and important for those people starting out because they need to be able to learn how to use the buttons on their platform and get around the platform really quickly. But I only show this to you just to say I do trade. I'm not the best trader in the world. I do have losses. I do have stop outs. But I just show this to you because I'm really using the stuff that I'm about to show you. Those are my last few short selling trades that were open. My account is connected to KINFO, Kinfo. Profitable in the last month, profitable in the last 3 months, profitable in the last year, blah, 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 blah. All right, this is the daily planner for traders. I built this daily planner so that you could use GoodNotes or another note-taking application on your iPad or your computer. You can actually plan out your day as a trader and plan out your webinars, do your to-do list, list out your trading lesson of the day, and so much more. And if we have a few minutes at the end, I'll show you a little bit more of this. This is not a sales pitch. In fact, if you would like, I will send you a copy of the March planner for free. So all the days in March for free. I don't charge anything for the planner right now. And I just want you to be more successful, and I just want you to have a good experience in your trading, and I want you to be organized. So a little bit later on, I'll give you a link. And if you request all the free stuff, I will send you the March planner for free. And it's not, it's no big deal if you don't like it. If you don't want to use it, that's fine too. But I'll set you up with all that stuff in just a bit. Now, everybody wants high probability entries, right? That's what we want. We want high probability trades. The human mind craves certainty. What that means is the human mind wants to be sure of what it's doing. And so we crave certainty, and we don't like feeling uncertain. Do you remember back in college or high school when you were hoping that somebody would call you and you were wondering if they were going to call you back or whatever? And that nervous feeling you had when you didn't know what was going to happen next? Well, that's what everybody wants to avoid. And the unfortunate truth of trading is that there is no certainty, and anything can happen at any time, good or bad. And so while everyone craves certainty, the best that we can do is high probability. And past performance is not necessarily indicative of future results, but it's the best thing that we have to go on, right? So we can't know the future. So the best thing that we can do is we can look at the past, and we can analyze some data, and then we can come up with the best statistical likelihood possible. But that's never a guarantee. Now, I'm going to say something here, and it's not going to come as a surprise to anybody, but the forcefulness with which I say it may come as a surprise. The market is going to crash. NVIDIA is going to go back to $500 or $400 or even $200. Apple's already dropping off. The market will crash. That is not me speaking as a perennial bear or a pessimist. It's me speaking as a realist. The history of the stock market is it goes up, it creates a bubble, and then it crashes. And we are in the midst right now of a run-up based on artificial intelligence, and that will end. So everything I'm about to show you looks like a perpetual upward trend that will last forever. It's not going to end pretty. And it will probably end sometime this year, and we'll go through a bit of a dip. And that will be a great buying opportunity for Amazon and Apple and some other stocks that are really great long-term trades. Today, though, because the market is up, and it has been up, and it probably for a little while longer will continue to be up, we'll probably look at a lot of buy trade possibilities. But I think you should have some risk parameters in your trading. I think you should either be a long-term investor that's going to hold stocks like Occidental Petroleum or Coca-Cola forever, or you should be a short-term trader with stop losses, and you shouldn't hold on to losing trades because it can get really ugly. And NVIDIA isn't going to $50,000 a share. It's probably going to $1,000 a share or close to it, but it's not going to go to $1 million a share. So please temper all that enthusiasm and just kind of live in the present moment, but be ready for the market to crash. And at the end, I'll give you an idea on a financial instrument that you can own forever, and you can just keep buying calls on very inexpensively that will hedge a little bit of your portfolio and get you ready so you're not caught off guard. The biggest trade I ever had was a trade on UVXY at the beginning of the COVID problem and the pandemic or whatever they're joking about now. That was the biggest trade I ever had, was just a hedge against a market drop-off that I always had. And it just paid off big time on one day. Kind of called fat tail trading. We don't want to we don't want to overemphasize the fact that the market may crash, but we want to be realistic about it. So what about high probability exits? That's what we really want to do, right? We're not just interested in exiting a trade. We're interested in getting out of a trade with a high probability exit. So we're going to talk about the fact that sometimes where a stock is going will tell you what stock to buy. Think about this for a minute. Most of us are looking for entries, right? Most of us are obsessed by entries. What's the best entry and where should I get in? And we want to know, is that a good trade right now? And should I trade NVIDIA before earnings? And me and our group, we actually did trade NVIDIA before earnings, but not because of the entry. We did it because of where it was probably going based on what I'm going to show you today. The exit, in other words, determines the entry. I'll show you what I mean by that. So here are monthly pivots with me, Rob Booker. I'm so happy to be here with you. So what is a monthly pivot? Well, a pivot point is an average of last month's price action. We'll dive deeper into the actual calculation in just a moment, but it's basically just an average. It's a horizontal line on your charts that never moves once it's placed. It's a fixed level on your charts, and it acts as a magnet for price. Now, here's how to set up monthly pivots in MetaStock. All right, so here's MetaStock. Love the platform. And I've known Jeffrey. I don't know Jeffrey. I've probably known you, a long time. We've been working together for a while. It's so nice to be back in a webinar for you guys. It's so pleasant to be here. And by the way, everybody that works together with me that's here today, thanks so much for stopping by. That makes me so happy to see your bright and shining faces. All right, here's how to load pivots in MetaStock. If you go to the Insert menu, and you click on Indicators, you can actually just type in pivot. You could do that, and you'll see pivots monthly right here. Whoops. There you go. So pivots monthly, inner window, OK, and then it will pop up on your screen. Now, what we're going to do is remove value 1, value 2, and value 3. We're going to remove value 5, 6, and 7. These are extra lines that are unnecessary, and we only need value 4. It's the middle pivot. It's the middle level. It will show up on your screen as a set of lines that look like this and are stair-stepping upward or downward. Now, I already have this loaded in my default template, so I can remove these, and I can just apply my template, and they should pop up. There they go. Okay. Now, we'll come back to this in just a moment, but that's how to get them on your screen. Now, they're just horizontal lines that are connected with an upward or downward line just to keep it congruent. That's just based on, that's the way that MetaStock draws levels on your charts. All right. So that's how we do that. And for further information and lessons on setting up this indicator, I have 3 materials with no credit card required. There's no upsell. There's no also, do you want to add this $1 million product so I can buy a jet helicopter, which I do want to buy actually. And I want to just fly it over and land it on the Fairmont Hotel over there and just go back and forth. But not from you. I'm not trying to make any money off of you. So just so you know. So that's how to set those up. Now let's get back here. So that's what they look like. This is Carnival Cruise Lines. Now, what you'll notice about Carnival, well, there's a few things to notice. And so what I'm going to do is I'm going to pull up my drawing stuff. I'm going to make sure that this works. And it'll just take me a moment to make sure this is work. Screen brush, because I want to be able to draw on the screen here. And did it pop up? There it is. Okay, so I should be able to present and then show screen brush. There we go. All right, this horizontal level right there is a pivot point. This is a pivot point. This thing right here is just connecting them. That's all it's doing. This line here is just connecting those levels. And here's another one, and here's another one, and here's another one. All right. When Carnival Cruise Lines was rising up here in June of 2023, it was jumping upward. And this is the monthly pivot, or MP for short. I know this really looks simple. I realize now that my charts don't look complicated. Sometimes, Jeffrey, I just realize, boy, I don't complicate this enough. I should probably make this more complicated. Anyway, the point is, it was rising and rising and rising. Meanwhile, over here, Mr. Booker, I'm thinking to myself, wow, it can't rise forever. Anytime that it fails to touch its monthly pivot point as it is rising, no candles touched it, and then it did it again in this month here, it usually will reverse and go back down to that level or toward that level. And if it misses a pivot on the way down, it will usually rise back up and hit it. What I mean to say is this. The exit or the target matters as much or more than the entry. Let's say, for instance, that you believe Carnival Cruise Lines is a great company. Let's say you just love it. You love the earnings. You love that it's a giant floating petri dish. You love being trapped on a boat with people from Orlando. I don't know, whatever it is that you're into. And let's say you just love being cramped in a small cabin with someone that you've been married to for 50 years. All right, good for you. You love Carnival for whatever reason. And you see Carnival dropping. That's not going to scare you. That's going to excite you because you love Carnival. So if you do the first part of the analysis, and we'll actually talk about this in a moment, how to analyze a stock. But if you just love Carnival Cruise Lines, you love that it's falling. And the very first time it misses a pivot point, so you can see here as it was dropping, it failed to hit the September 2023 pivot. The second that month is over, I'm going to buy a little bit of that stock. And I'm going to start to accumulate shares of that stock because I'm an investor in this scenario. You can also be a trader in this scenario. We'll talk about that in a moment also. And then at the end of the next month after, it failed to touch the monthly pivot. So now, why did we do that? First of all, we did it because we like Carnival Cruise Lines. We love the giant floating petri dish. I don't actually love Carnival Cruise Lines. I'm using this as an example. So we've decided we liked it ahead of time. And if you like the stock, my recommendation to you as an investor is stop trying to find the perfect entry and just buy some of the stock at the end of the month because you want to hold it. And it is going to very likely rise up to hit these levels. And yes, you could buy a call option with a 90-day expiration window that is in the money or at the money. And you can then hold on and wait. Now, the opposite is also true. What if you hate Carnival Cruise Lines? What a garbage company. Maybe they lose money. Maybe you know something from your analysis deep within their debt holdings or something like that. Or maybe you just saw one of their boats tipping to one side. I don't know. As it was rising, there's no perfect entry, but you could see here it missed the June 2023 pivot point. And then it failed to hit the July 2023 pivot point. So at the end of June and the end of July, you might buy a put. And you might buy an at the money or in the money put with a 90-day expiration. And you might just enjoy the ride down. All of this assumes that you're going to do your homework first and you're going to figure out what stocks you like and don't like first. Here's an example with Apple. So Apple went through a recent decline. And as it declined, you might have decided, I like Apple. It was supposed to hit this pivot. It was supposed to hit this one. It was supposed to hit this one. So at the end of each of these months, you might buy a call option with a 90-day expiration. And you might, because it's a high probability trade, you might ride that thing upward. And when it hits the pivot that was missed last, you might start to exit or scale out of your trade. You might not even hang on for the ride. Now, Apple's missing this one right here, right now. If you like Apple, if you love Apple and you want to wear those funky goggles around town, we're on the day. This is the day, February 29th. So you might buy some of that stock, or you might buy a call option with a March, April, May regular monthly expiration call option at the $181 or $180 strike. There you go. So let's move on. Let's move a little bit further. Let's look at this again. Maybe you like Netflix. Maybe you love Netflix. Maybe you think Netflix, what a great company. Well, Netflix did it too. Netflix missed this one right here. So as it was dropping, the end of this month, the end of this month, maybe you bought a call option and you rode that thing up. Now, if it's a profitable company, my recommendation is, if it's a profitable company, if it generates revenues and cash flow, I would prefer to buy it than sell it. So a Netflix or a Meta or a Google, I'm going to look to buy call options when it has declined. And for a garbage company like Carvana, for example, which loses money on every car it sells, I might look to buy puts as it's rising, which Carvana did. And I am absolutely doing that trade, and I'll do that trade while we are here together today. I will do that trade. We'll talk about Carvana in a bit. So this is Tesla. Now Tesla's a company that either you love it or you hate it, but it hasn't been a consistent performer lately. So I'm going to just assume that you might go either direction on Tesla. You might actually think, well, no, I'm going to do either way, or maybe whatever it is. In this month here, let's just change this around. There we go. The May 2023 pivot was missed. The June 2023 pivot was missed. Buy a put here, buy a put here, and then you wait for it to drop. Now, you're going to need more than 90 days for that. Why? Because Tesla actually, even if you hate them, it makes money. So it's harder for this stock to drop quickly, and it's easier for it to rise quickly. So you might have seen Tesla miss and not touch the October 2023 pivot. And at the end of October, you would buy a call option with a 90-day expiration at or in the money. And you're going to watch that call option appreciate in value. That call option is going to double in value. That's what you're looking for. You're looking for 100% return, and then you're going to exit the trade regardless of the time. So here's a more precise definition of what a pivot is. The calculation is the high of last month plus the low of last month plus the close of last month divided by 3. Last month's high plus the low from last month plus the close from last month, add it all together and then divided by 3. In simpler terms, it's just an average of last month's price. So effective. And as you can see here, I mean, if you believe that in order to be successful at trading, it needs to be complicated, we're not a good fit for each other. I'm not smart enough to make this really that complicated. I'm looking for high quality companies to drop, and then I'm looking to buy call options or even just buy the stock. And I'm looking for low quality companies to jump, and then I'm going to buy puts or short the stock. And the pivot is where it is going. And where it is going is more important than where it is now. If you're Warren Buffett, where Coca-Cola is right now in price is not as relevant as where you believe Coca-Cola is going. And that's the difference between long-term successful and short-term unsuccessful traders. People are obsessed by, is this a good price? And they're not as obsessed by, is this a good company? That's what we need to focus on. Now, almost all pivots are touched by price. You'll see a candle overlapping that horizontal line in the month they are created. Take Alphabet, for example. Still call it Google, can't get away from that. Almost every month, price will touch and hit the pivot point. In 2008, a hedge fund manager at Julius Baer, who managed a portfolio manager at Julius Baer, flew out to my office outside of Pittsburgh, Pennsylvania. And we spent 3 days eating pizza, never left the office. And all we did was download Bloomberg data. And what we wanted to know was the answer to a question. How often is a monthly pivot touched by price in the month that it was created? And I even imagined creating a television show called Touched by a Pivot, starring Angela Lansbury. And it would be a show about how an angel comes down and tells you when a pivot has been touched. Anyway, that really was an actual joke that I'd made. But most pivots, in fact, 85% of them are touched in the month they're created. But every once in a while, a pivot is not touched by price, and that creates an opportunity. Take, for example, Macy's. Macy's is actually a profitable company. It's kind of, you'd think of it as a dying industry or whatever. Macy's just announced they're going to close 150 stores to save money, and they're actually going to earn $600 to $700 million selling off those assets because they're in really, really valuable locations in some cases. And they're going to invest that money in opening stores like Bloomingdale's, which they actually own. And so they can open high profitability stores in their place. Okay, with that said, Macy's, a reasonably high quality company that makes money and has cash flow, was dropping in the middle of last year. And every month, after month, after month, you could, if you wanted, buy Macy's or sell puts, get assigned to the stock, hold on, and you could wait for it to come back. Now, if you do a 90-day expiration, some of those are going to expire worthless, and then eventually that trade's going to come roaring back. And then when there was an acquisition offer to buy Macy's at $21 a share, Macy's just blew up and took off. But that wasn't a surprise to any of us. And it certainly wasn't a surprise that it went to $20 because that was an old pivot. An example of this is the $34 level on AI, C3.ai, a money-losing artificial intelligence company with the greatest stock symbol of all time, AI. It just rose and hit $34 a share. It was in basically a multi-month downtrend, and not, for the record, not a really high probability, not a really high quality company that makes money. It just hit $34 a share, which was an old missed pivot point, just like this. Where it was going was more important than how bad it was doing at the time. I can't emphasize that enough. Here's Mara, the Bitcoin stock. So Mara missed a pivot, September 2023. It missed this one. It didn't hit it. I have a bunch of friends who bought call options on Mara. They bought it was here, it's $7. They bought the $8 call options that expired in December, and this thing just started ripping upward. That's what we're doing. Where the stock is going is more important than where it is now. At the start of the month, and this is really applicable, the other strategy is that stocks will attempt to move toward their new monthly pivot. So take this, for example. This is Macy's. In the midst of this whole business with Macy's that I was just talking about, Macy's, at the start of a new month, jumped up, but then fell and tagged exactly the monthly pivot point and then took off. It's another chance to get in on that same trade. At the beginning of the month, stocks want to move toward their monthly pivots. They don't do it every single time, but they want to fall to or rise to their pivots. It is such a high probability trade. Apple and Microsoft and Meta and Alphabet, they're probably going to move up or down toward their pivots. NVIDIA is probably going to drop to the March monthly pivot starting today or tomorrow. I don't know what NVIDIA is doing today. I don't look at NVIDIA every day. Here's Snowflake. I don't even know what this company is. At the beginning of the month, it made a move down to hit its monthly pivot. And not every month will it do this. So this is a little bit less reliable. Now, there are also weekly and daily and even intraday pivots, but that's not our focus right now. But all of the same things that I'm talking about here apply to those pivots as well, because those are much more for shorter term trading than I want to talk about today. Now, another strategy with monthly pivots is mean reversion. You can also trade the bounce off the monthly pivot. The key is to do your analysis ahead of time and buy high quality companies, or buy calls, or short low quality companies, or buy puts. So let's do a quick scan. We're going to have to do a really quick one here. We're going to go to FinViz. So FinViz, I'm not going to brag or anything, but I have an elite account at FinViz. That's just me joking around. anybody, it's just a $24 a month subscription, so I avoid all the ads. Here's the screener. So I go to all, and I'm going to show you some things that I focus on when I'm thinking about a high quality company that might be a good buy. So I'm going to look here at a few different things. Performance. All right, performance, I want the stock to be down for the quarter. Maybe at least 10% or more. That narrows it down to 1,281 stocks. Now, I want the price to earnings ratio to be under 50. So it's kind of a reasonably high quality company. 262 stocks fit that description. And I want there to be earnings growth this year. That's going to take it down to 105 stocks. I want it to have a return on assets and a return on investment that is positive. That takes it down to 102. And we can do a quarter down by 20%. Let's even make it worse. Now there's 31 stocks. And now I'm going to sort by volume. And we're going to look at the top volume stocks. IQ, EQX, ACB, Vivid Seats, Amoresco, and down the list. Now, on this list, there will be companies that are pure garbage, but there will also be companies that make a profit, but they've been falling. That's what we want. We want high quality companies that have been falling. And you might say, well, what if something's wrong with those companies? If the company's Occidental Petroleum and it's falling, that's just on people selling it off. It's not because the company's bad. You have to differentiate between value and current market movement. Just because something is falling doesn't mean it's immediately something you should avoid. You have to kind of break out of the cycle of feeling that way. So here's a beginning of the month hit of the pivot. There's another beginning of the month hit of the pivot. And this is the one I wanted to look at. This is Amazon. So when do you buy a stock like this? At the beginning of the month, the other way to do it is Amazon will drop to and hit its monthly pivot and bounce. You could buy a call option when it bounces off the monthly pivot. And at the money, in the money, 60 to 90-day expiration, hold it until it makes 100%. And I'll put a stop loss at 50%. So a possible gain of 100 and a possible risk of 50%. If that's too much, then you can adjust your trade sizes accordingly. Here's Apple. Apple started the month off. It bounced off of and jumped off of the monthly pivot there. This is Citigroup. It dropped to and bounced off of the monthly pivot. This happens all the time. Happens every single month. 10 or 20 stocks that are super high quality companies will bounce off of a pivot, and it'll be a great time to buy an option. You can also, if you want, if you're wild like I am, you can also buy puts on companies that rise up to and bounce off of the underside of a monthly pivot. But I prefer in these examples here, since most of you are have bought stocks. Meta, for example, 2 months in a row, December and January, bounced off of their monthly pivot. They dropped to and printed a green candle and bounced off of the monthly pivot. So here's the question. I hope the answer to this is yes. Would anyone like some free stuff? Would you like some free stuff? I've got a link here, and I'll post it for my friend Jeffrey. And Jeff.
Hey, I got it, man.
Oh, you got it. Okay. So he's going to post in there. There is nothing for sale there.
Well, I will in a minute. I mean,
yeah, I'm not worried about selling anything. I'm just saying for just as we get to know each other, there's nothing for sale here, and you can go through the pivot point course at your leisure, and you can sort of learn how to do and set up and maybe take some trades based on this. That's a totally 100% free pivot point course. Whew, Jeffrey, I think we kind of finished on time here. We have time for a couple of questions here if people want to ask a few things. I just wanted to make sure we finished on time.
Yeah, no, you didn't need to do that. I know we started you tremendously late, so. But let me make sure I got the URL right. It was, I only put it in panelizers, panels and organizers. It's robbiebooker.com/pivot points, right?
Yes, that's correct.
All right, I'm gonna send that to the entire audience. Chat wants to know, what does exactly shorting a stock mean?
Shorting a stock is when you are making a bet that the stock will drop. So Carvana, for example, Carvana is a money-losing company. Just check the stuff. And it has been rising. So that's weird, but it does happen. And it's probably not sustainable. So you can make a bet that Carvana will fall. So you can, if you learn how to do it, you can press the sell button first. And if the company's stock falls, you make money. I have an entire short selling course and a whole bunch of other stuff. And for those of you that request the Pivot Point course for free, I will also include a short selling course for you also for free, and you can learn more about it there.
All right, very cool. Chet also wants to know, are you trading on margin?
I don't. I do have margin accounts, but I don't actually use margin, which sounds weird. These short selling trades. So I do $200 to $300 to $400 a day shorting stocks right now. I grow $5,000 accounts into 10, take the money out, put it in my long-term account. This time around, I'm growing this into 100 or more. And so as my account grows, I'm increasing my position size and stuff. But I'm only using right now $1,000 of my account's value. I have an $11,000 account here for shorting stocks. I'm only using $1,000 of it. I'm not even close to using any margin here. And I don't need to. I can make a good return without using margin. So I'm not a fan of margin. I prefer not to use a margin account. Just, preference, personal preference.
All right, sounds good. Any more questions for Rob? Rob, how did you get into trading?
So in the year 2000, my business partner had fled the country. I had $200,000 in debt between the business that he abandoned and my law school loans. And I had to make a lot of money fast. I had gone to law school in the San Francisco Bay Area, and I worked at Montgomery Securities as an intern in the compliance department during law school. And I watched Netscape go public, so I caught the bug of stock trading. And so in the year 2000, when I needed to make some money, I started trading currencies, quite unsuccessfully, I might add. And then stumbled across a mentor, paid the mentor $10,000, changed my life forever. And I got organized. I got set up, I got a system, I got a method, I got just fully organized, and that just changed my life forever. And then I blew everything. I lost everything in 2009, but not really because of the market crash or even my trading accounts, just some personal stuff. So, and then now I'm just haven't blown my accounts up for 15 years now. So hoping that stays the same as long as I stay away from margin.
Cool. And then the last question, what's your favorite indicator and why?
What's my favorite indicator?
Yeah.
That's a great
question. Ooh, sorry,
that's a great question. I like, okay, so I built an indicator for MetaStock, which is Knoxville divergence. I was driving across the country when I did a radio show on AM Business Talk Radio. I told my listeners across the United States, I was on for an hour before Dave Ramsey, so I had a great time slot. Dave Ramsey did not like me, by the way. But anyway, the point is, I said, I will stay overnight at your house. And I thought, I don't know, maybe 50 people will respond. Like 2,000 people responded. And I drove across the country. And while I was in Knoxville, Tennessee, I built an indicator, which is available in MetaStock. I think it's an add-on or whatever. That's probably my favorite indicator. Yeah.
Yeah, the Knoxville divergence. Yeah, we do have that.
That's great.
Okay. Thanks, Rob.
Thank you so much, everybody.
All right. We'll talk to you again soon. All right. And then in case you are interested, let me go ahead and kind of switch this over to me real quick. if you are interested in the Knoxville divergence, that's an indicator and a scan. It looks to find things that are really, really compressed. And it's $50. You can get it if you give us a call, 800-882-3040, metastock.com/saleschat, or metastock.com/promo. Want to say thank you to Stocks and Commodities for sponsoring the event today. And you can find more out about them at traders.com. Before we get going with the next presenter, what is your favorite indicator? And put that in the comments. The next person to answer is going to win the final prize of the day. So go ahead and get that typed in. It's an audience participation question. What's your favorite indicator? Tell me right now in the chats. So, and while we do that, hold on just a second. I'm missing a slide, but I know where to find it. So let's go ahead and go right here. If you're not familiar with MetaStock, MetaStock 1, Bollinger Bands. All right, if you're not familiar with MetaStock, MetaStock can help you scan the market, test trading ideas, find statistically probable price movements, give you real-time alerts, commentary, signals. It's one best in its price category for 31 years in a row. Pricing for MetaStock starts at $60 per month. And you can actually get a 3-month trial if you want. Go to metastock.com/promo or give us a call at metastock.com/saleschat. So let's see. I'm going to I have this sorted a little bit weird. Let me show this as the unanswered questions. The first question that wasn't MetaStock said Bollinger Bands. He can't win though. So the first person that answered was Bill Adams in GoToWebinar. So Bill Adams answered with RSI. We also had Matt D from Neil, ATR with RSI, but the first one was William Adams. So William, what you're going to win is you're going to win 3 months of MetaStock. We're going to give you 3 months of our real-time MetaStock program. We're going to give you 3 months of data and unlimited access to our tech support, hand-holding call, where we actually will go in and say, what do you want to do with it? Do you want to scan? What do you want to find? Help you do all that kind of good stuff. 3 months of MetaStock. So I'll go ahead and make a note of that. Thank you for all of the answers and all of the participation. It's appreciated. And what I'm going to do next is we're going to talk about Jerry Allison. So the white glove treatment. Thank you, MetaStock. You're welcome. You're welcome. Jerry Allison is going to talk about traders' tax accounting. Is it beneficial for you?
Hey Jeff, how are you doing?
To trade as a business. He's going to talk about that. He's going to talk about all the rules. He's going to answer your questions about taxes. Jerry, how you doing? I can hear you.
Doing fine. How are you doing, Jeff?
I'm good. I'm good. Losing my ability to speak English. It's been a big, long week so far.
I bet it has for you. We're pretty busy ourselves right now. So tax returns and everything going on.
Yeah, right?
Yeah, it's crazy. So very exciting time of the year.
Let me go ahead and make you the presenter.
Sure, absolutely.
Oh, oops. I turned off your webcam on it.
I got it.
Let me make you the presenter here. I'll make sure we can see your screen. You look good.
Yeah, thank you.
Okay. Do I remember correctly, you're down in Arizona?
Actually, Traders and Accounting is in Arizona. I happen to be in North Carolina.
All right. Okay. Awesome.
We're kind of spread out over the U.S.
Yeah, I can see you. I can see your screen. I can hear you. I'm going to let you go. It's your turn.
All righty. Thank you, Jeff. Appreciate it. And hello, everybody. It was nice to be with you today. And what we are going to be doing today is we're going to be presenting trading in 2024 tax strategies for you. What we're going to be covering is how to actually use the IRS tax code for your benefit. Traders have strategies for trading, but a lot of times they don't have any strategies for keeping the money at all. It eludes them. And I don't mean losing it in the market, but they end up paying taxes they don't need to do or other things. And so we're going to cover some of that today and just kind of hopefully put some things in your mind so that you can be thinking about them, particularly as we're getting ready to do our tax returns if you haven't done yours yet. But now is the time to start trading for 2024. So we're going to get into this thing, but before I do, we got to make the lawyers happy. And so our disclaimer, to best of our knowledge, the information given here is accurate as of the presentation date. I have gone through this recently and made sure everything is accurate. Tax changes do happen constantly. So the IRS has leverage to change certain things, how things are reported. So you do need to check with a tax professional. And I will advise you that some of the stuff that we're talking about is not super common knowledge. I can't tell you how many times I've heard a client say, you know, I went to my local CPA and talked to them about this, and they don't know anything. That happens all the time. This is a niche area, so please make sure that if you get somebody to talk to, they know what they're talking about. This presentation does not establish a professional or confidential relationship between you and myself or Traders Accounting. And finally, Traders Accounting is not a law firm, so the information provided here should not be construed as legal advice. So here's our contact information. I will come back to this towards the end of the presentation here. Our website is www.tradersaccounting.com/MetaStock. Now we have a special link here just for the MetaStock viewers today, that if you go to that website, and there is a free ebook that you can download that will talk about taxing of trading for traders, and it gives you a lot of options, including entities, and there's a lot of things that we're going to cover today that are in that book. So certainly avail yourself of that. www.tradersaccounting.com, MetaStock, get that free ebook and just read through it. That'll give you some ideas on maybe how to save some money. Our phone number is 800-938-9513. We do consulting for traders. We do tax returns for traders. We also set up entities, and we do a lot of things that are specifically geared for people who trade in the markets. And of course, if you want to email us, it's learn@tradersaccounting.com. So I want to start off here. And it's going to seem like strange to some people. Well, we're going to kind of start off with a business 101 session. If you're serious about trading, you really need to treat it like a business. And if you read through the IRS tax code, particularly like Publication 550, that's kind of our go-to manual for taxation at the IRS. And if you want that publication, certainly you can just go to the IRS website. In their search bar, type in Publication 550, and it will bring it up. You can download it to your computer. I've got it downloaded to mine, or you can just read it online if you want. But that is our go-to IRS manual for trading. It's got everything. I mean, you name it, it's in there. So, but one of the things that it talks about in there, that if you're serious about trading, you really have to treat it like a business. If you want to deduct expenses, if you want to elect certain things to get away from, let's say, wash sales that we're going to talk about later. If you want to do those things, then you have to be serious about this and treat it like a business. So we are going to actually kind of forward with that and kind of look at our mindset to make sure that we are looking at trading as if we're setting up another business and treat it like that. Now, there's 2 points here that I do want to make sure that we understand in our Business 101 mini course here. First of all, in a business, I don't care what business it is, you need to be concerned about cash flow. It's great to have money coming in. And I've known businesses that have tons of money coming in, but it's also leaking out the holes. I've got a client or somebody that I know actually back in the Midwest, and he's got tons of money coming in, but he doesn't know where it's all going. And so traders also need to be like-minded. You could be making $1 million a year, but if it's leaving you in taxes or some other way, that's a very big problem. So my point is there's two different strategies, two sides to this strategy. There's obviously the making of the gains in the market, which you guys have been watching all around this week, I'm sure. But also, you've got to be concerned about the money going out. It's very important to actually be conscious of that money going out. And so you have to have a plan for that as well. Second of all, and this is a common mistake I see people making, make financial decisions based upon your business needs, not the tax code. And I'm going to give you a couple of examples here. I had a client a few years ago, before I was with Traders Accounting, and he was a automobile repair mechanic. And we were coming up on the end of the year, and he wanted to buy a tire machine because he wanted the write-off. I said, okay, well, how much is it going to cost? He said, okay, $20,000 for this machine. And so I did some calculations and said, okay, you'll save about $6,000 on your taxes. So, you know, you're laying out eventually basically $14,000. And I said, great. And I asked him, how often are you going to use the tire machine? He said, once or twice a year. And I looked at him and said, how is this thing going to pay for itself? Because anything you buy for a business needs to pay for itself, ultimately. And so in a trading business, you obviously buy a computer because that's going to help pay for itself, because you maybe a faster computer or one with more memory or whatever, that'll pay for itself. But like an airplane, it's not going to pay for itself in a trading business. And so any business asset you need to have pay for itself. The other reason I bring this up is I cannot tell you how many times I've heard people say, oh, I'm trading and I'm making money and it's starting to affect my taxes, so I need to change my strategy, or I even need to stop trading because I'm going to owe too much taxes. That's ludicrous. That's absolutely ludicrous. Is they're making decisions based on the tax code rather than following their strategies. And many of you know that you get a strategy that you follow, and all these sessions have been about some type of strategy, that you follow that strategy and you don't let the emotional stuff get in. Well, the tax code is partly emotional, and you don't want that to get into your trading either. So this is why I'm saying you treat it like a business. You lay a plan out of what you're going to do, and then you run with that plan. You don't just haphazardly do things and be reactive to the tax code. So those are the two criteria for our Business 101 course. Now, here's what we're going to do in this presentation. I want to make you aware of all your tax and protection options, so that you can actually think about this stuff. And I don't want you just to believe me. I want you to go out and do your research, do your reading, talk to other people, and find out what's going on out there. Because it's very important that when you lay out a plan and you have, let's say you're going to set up an entity, you want to be very comfortable with that. Not do it because somebody told you to. As a matter of fact, I've run into clients, some outfit out there has sold them a package of setting up, multiple entities and all this stuff, and they really don't need it. And they got pressured into actually doing the plan that this company offered. No, don't do it. Be aware of what you're doing, be comfortable with it, and know what you're doing before you do it. So first of all, we are going to talk about trader tax status. And this is for all traders. It doesn't matter whether you're trading stocks, options, futures, crypto, Forex, what it is, it doesn't matter. This is for all traders, and it's allowing you to deduct your trading expenses on your tax return. Well, what kind of trading expenses? Well, we could be talking about the fees for MetaStock. We could be talking about education. We could be talking about data feeds and software subscriptions and all that stuff. And that stuff gets pricey after a while. So we're going to talk about how to get that deducted on your tax return and get a refund back so that the government basically pays for some of it. Then we're going to jump into entities. How do entities help a trader? What can they do to, what about setting up an LLC or a corporation? Does that help at all? Well, we're going to answer some of those questions in a little bit. And then when we start to close out this presentation, we're going to talk about the mark-to-market election. Now, this is only for stock and options traders. And by the way, SPX and some of the other ETFs do not apply to this either. I'll bring that up because they're traded in Chicago and they're more like, they're treated like futures. But anyway, we'll talk about the mark-to-market election. So what we're going to do is we're going to get going into all of this. If you've got any questions, feel free to put them in the chat and we'll try to address those here towards the end of the presentation. All right, trader tax status. First of all, trader tax status is a choice. Yes, I said choice that allows any entity, including an individual, to deduct trading expenses provided the criteria are met. So you want to deduct your trading expenses, you want to deduct your MetaStock fees, you want to deduct software fees, you want to deduct margin interest, all that stuff you want to write off your computer. You can do that under certain conditions. And this is where Publication 550 does come into play a little bit. Because when you read the criteria for Publication 550, it's very vague. It's very general. And so you don't get anything. But the one thing you do get out of Publication 550 is that in order to deduct expenses on your tax return, you have to be treating this like a business. And just think of it like you were owning a restaurant or you had a grocery store or a gas station or something like that. You're not going to take months off at a time. You're going to be continually working that thing, not necessarily 365 days a year, but you'll take a little bit of time off, but it's something you have to put time into. And that's what the IRS wants to see. Some more exact criteria that we have found come out of court cases. And these have come out of cases where the IRS has tried to say, nope, you're not going to be able to deduct your expenses. The person has taken it to court, and the court has shown that these criteria will allow you to do that. So we know what would happen if you meet these three criteria. First criteria, you have to have 720 or more trades in a year. So some people have that in a month easily, and some people struggle to get that in a year, but that's still the criteria. We don't know what would happen if you have less than that, because that has not gone to court. But we do know that this has gone to court and a taxpayer has won. The second criteria, there has to be trading at over 75% of the trading days per year. Remember what I said about treating this like a business, that you can't take a significant amount of time off? Well, that's what they're saying right here. You need to be involved in trading 3/4 of the trading days. So that's about, you need to be trading 188 or 189 days out of the year. And so you can't be taking half a year off and just be, doing whatever and then trade for half a year, because it shows that you're not taking it seriously. So that's the second criteria. Our third criteria is that there are over 500 hours in trading, research, and education. So this usually isn't too difficult to come up with. Trading, you're actually executing trades. Research, you're researching the stock. You're using software to research, whatever. And education, hey, you're doing it right now. You've been doing it all week with some of these webinars. If you go online and you watch a video, or if you just read something, record it. And that qualifies as time for education. Now, you may be wondering, well, how do I prove these things? Or do I have to show the IRS any of this evidence? Well, directly, no, because if you meet these three criteria, then you can go ahead and deduct your expenses on your taxes. You can go back to 2023 if you want. If you didn't deduct your expenses in 2022, you could go back and amend your return. And even 2021, that statute of limitations has not run out yet. So if you meet the criteria, you could do this anytime. You don't have to let the IRS know. However, if they do come in, you've got to be able to prove these things. Now, the first two are fairly easily provable. Just hand them your monthly the IRS examiner, your monthly statements, say, here, you count them up. So see if there's 720 trades, see if, count the number of trading days. The last one is a little more difficult because you're not going to get that off of the trading statements. So this one, we suggest that you keep some type of a log book. Now, it can be electronic on your computer in a spreadsheet, or if you want to a database, or if you want to do it on paper and pencil. There's no real format to this, just as long as you're making an effort to record how much time you're doing things, and that time adds up to more than 500 hours in a year. So those are our criteria for deducting expenses on your tax return. Now, let me add this though. The tax savings depend upon your current tax bracket. So if you're deducting expenses and you're in the 35% tax bracket, you're saving 35 cents for every dollar you write off. But if you're only in the 20% tax bracket, you're only saving $20 per dollar you write off. So it does vary based upon your tax bracket. Now, that may sound wonderful, that great, I can deduct expenses, I meet those criteria, but let me give you a warning first. Because as with anything in the tax code, it's very easy to step in something you don't want to step into. And this is one of them. It's just a possible problem here. A person, an individual, not talking about business, but an individual deducting their trading expenses on their personal return must use a Schedule C. And on that Schedule C, you're deducting only the expenses. The gains and losses still go on Schedule D or 4797, wherever else they go, but they're not on Schedule C. But because you're using a Schedule C, there are several things that can occur. First of all, your audit risk is increased, and this is a big one. I've been doing this 35 years or so. Every audit I've ever dealt with, except for one, has dealt with a Schedule C. And it's not because of traders, it's because Schedule C is a bunch of numbers that the IRS itself cannot verify. And so people have abused that over the decades, quite frankly. And so it just kind of automatically raises the risk of being audited, because that if any place on your return is going to get audited, that's the one. It's that Schedule C. So you do have that audit risk. Number two, with a Schedule C, there are severe limitations to the home office deduction. In short, you have to be making money in order to really write anything off on your home office deduction. It's severely limited. Now, hang on to that one, because I've got a solution to that one in a little bit. Number three, there's really no asset protection if you trade as an individual. So if somebody gets on your yard and gets hurt, or you have a car accident and they sue and the insurance doesn't take care of all of it, well, now they've got access to all your property, including your trading assets. So that may be something you want to rectify. And finally, and this is something with the IRS, it's difficult to justify having a W-2 job and being an active trader for whatever reason. The IRS doesn't really like it when you're trying to work a full-time job and say you're actively trading. Now, all of you, like myself, we've worked multiple jobs at certain times of the year, for our lives rather, and sometimes having 3, 4 jobs at once. We can do that. Why the IRS doesn't like this, I don't know. So these are all problems when you start deducting those expenses on your tax return, your personal tax return. So this doesn't apply to businesses, and we'll get into that a little bit. So what is the cure for this? Are there any remedies for this to mitigate some of this? Well, that actually can occur with entities. Now, there's several different types of entities. Sole proprietorship, single member LLC, general partnership, and all these things, corporations, LLC corporations, things like that. I'm not going to read through the whole list. We're going to narrow this down because some of these are really, quite frankly, worthless. First of all, a sole proprietorship is really when you deduct your personal expenses on Schedule C, your trading expenses on Schedule C. It's what we were just talking about. That's a sole proprietorship. A single member LLC is pretty much the same thing. Matter of fact, the sole proprietorship and the single member LLC don't do much for a trader. I'll be upfront with honest with you. Even the single member LLC puts it right back on your Schedule C of your tax return. And you still have the same problems with one exception. In the single member LLC, you do have some asset protection. So those two are really, we don't recommend those for traders. Now, the others, general partnerships, there's no asset protection there. Limited partnership, there can be some asset protection, but not for the general partners. We generally gravitate towards LLCs because what an LLC is it's a legal shell, basically, that puts kind of an umbrella around the business. And it gives you asset protection. But it also does some other things here. And we're going to talk about some of the benefits of these other LLCs here in a second. But I do want to mention this, that the type of entity that's right for you depends upon your situation. Now, what I'm going to do here coming up is talk to you about the most commonly recommended type that we recommend to our clients, because it is a very easy type to work with. It's very general. It's user-friendly, and you don't have to worry about payroll or anything like that. So we'll talk about that here in a second. However, that may not be right for you. There may be certain things in your life that you need, or there's certain characteristics of what's going on in your trading that this might not be appropriate. So there might be another entity that's appropriate for you. So we're going to get into this, and the most commonly one we recommend is a multi-member LLC or an LLC partnership. Now, an LLC partnership, you're thinking, okay, 2 people. So I got to have 2 people. Well, husband and wives are common for our clients, and one of the spouses doesn't even trade. It's fine. You can have that's a partnership right there. Some of our clients, they take like a 99% stake, and they have another family member that takes 1%. That's a possibility. And it doesn't even have to be a person. We can set up like an irrevocable trust, which is basically like on paper, it's a paper savings fund where you're still getting 99% of the returns, and this trust is getting 1%. And what it's doing on paper is building up a little savings account, if you will, again on paper. And then when something happens to you, it's paid to the beneficiary, whether it's one of your kids, it could be a niece or nephew, it could even be a charity if you want it to be. So that's a irrevocable trust. Some of you out there already have an entity like an S corporation or another LLC or single member LLC. That can be a partner. So there's a lot of ways to create a partnership. Even if you're the only person you know and you don't know anybody else, we can still make it happen. There are ways to make this happen. Now, before we get into the benefits of a multi-member LLC, I'm the kind of guy who's going to tell you the cons of this thing too. So before I get into the pros, here's the cons. In most states, you have an LLC fee to pay each year. Now that's true with a single member LLC as well as a multiple member LLC. There are a few states, handful of states, that when you pay to originally have the LLC set up, and then you never have to pay again. Arizona is one of them, but there's a couple other states. But most states, you have to pay every year in order to keep the LLC registered with the Secretary of State's office. That is a drawback. There's also a tax prep fee because this is now a partnership. And so now you have to file a Form 1065, which is a partnership tax return. And so that's a separate tax return. It's a pass-through entity, so everything passes back through to the personal returns. The partnership itself doesn't pay taxes. Everything passes back to the original partners, but you do have to have the partnership return filled out. So somebody's got to do that for you. And so that's an extra fee. And then there also is a potential for increased broker fees. For whatever reason, when you go to a broker, well, when you start an LLC, or any business, you really need to start up, well, you have to start up a new brokerage account underneath the EIN of the business because it's got to be identified with that business. You can't just trade under your social security number and then say, hey, I'm going to put this under my business. You can't do that. It's not going to work. So you have to create brand new brokerage accounts, and then you move cash over from your personal account. But because for whatever reason, the broker's saying, oh, this is a business setting up, so we're going to increase their fees. That is a slight problem. And then what a lot of clients of ours tell us is that I just keep my personal account open and then use the free stuff like the real-time quotes on the personal side, and then do the trading on the business side. That seems to work out. Excuse me. So there's ways around that. Now, let's get into the pros of this thing. So there's a couple extra fees here that you do have to come up with, but don't be alarmed at that. I'm going to come back to it in a minute. So the pros. First pro is you get asset protection. Like I said a little bit ago, an LLC is an umbrella or a shell around the business and the trading assets particularly, so that any lawsuit can't get in there, or if there's something that happens inside the LLC, it doesn't get out. So it really protects the assets, and your trading assets usually are one of the biggest assets you've got. And so we put them in there to make sure that they're locked up and they're protected. Second of all, most people don't realize this. When you form an LLC, you get to choose how it's going to be taxed, and you can change it later. For example, we recommend people start off with a multi-member LLC, basically, and that's to be taxed as a partnership. Now, later on, we say, okay, if you're making a lot of money and things are going really well, we can file an election with the IRS, and that's all it is. It's a piece of paper to be taxed as an S corp. And then you can change back later if you want to. You can also elect to be taxed as a C corp and then change back later. So there's some flexibility here. I wouldn't recommend changing every year, but it is possible to change. And as tax laws change, you have the ability with an LLC to change how you're going to be taxed. Same thing with a single member LLC. You're either taxed as a disregarded entity, which is a Schedule C. You can be taxed as a S corporation, or you can be taxed as a C corporation. We generally don't recommend that you do that route and any of those until we know that you're making a lot of money. I won't go into the criteria right now because it's very important that you have a good base there for an S corp. And we generally don't recommend C corps at all, quite frankly. Number 3, there's a reduction in IRS scrutiny. Remember I said a little bit ago that if you put the Schedule C on your personal tax return, there's a good chance that eventually they're going to look at it. They're going to want to look at it. And so getting it off of your personal return onto this partnership return or even an S corp return, that has a tendency to get the IRS scrutiny definitely off your personal return, and they seem to leave the business returns alone, pretty much. So there is a reduction in that IRS scrutiny. Now, I hear clients say all the time that, oh, well, I don't care about the Schedule C because I can defend myself in an audit, everything's good, and there's no problems there. And that's fine. But the time it takes you to defend that audit is time that you could be trading. It's time that you could be researching. It's time you could be doing other things. And so what we're doing here is not just reducing the IRS scrutiny, but we're also taking out some insurance on reducing the time of a potential audit. Number 4, I mentioned I'd come back to this one, the home office deduction. When you form a multi-member LLC as a partnership or as an S corp for that matter, the home office deduction opens up wide open. There are no limitations anymore. I mentioned earlier that if you're trying to take the home office deduction on a Schedule C, that can become severely limited. You really have to make a profit to get much out of it at all. And then it's just really complicated. In a partnership or an S corp, it doesn't matter if you're making a profit. You can take the whole home office deduction and you're fine. Number 5, it solves the W-2 trading issue. Remember I mentioned a little bit ago that if you're trading on your personal return and you've got a W-2 job and you're trying to do the Schedule C and be an active trader and all that, the IRS doesn't like that. Well, getting this trading off into this partnership really separates the W-2 and it separates the trading. And so the IRS doesn't have a problem with that anymore. And now the income still flows back through to your personal return. It goes on to Schedule E rather than Schedule C, but it looks like you're investing in this business, and they're perfectly fine with that. So it kind of resolves that issue. There is one other issue that setting up a multi-member LLC resolves, and we haven't talked about this yet. I'm going to give you a brief preview, and we'll talk about it in a little bit. But it solves the mark-to-market long-term, short-term dilemma. The one thing for mark-to-market is when we get into it, you do not want long-term holdings, like anything you're going to hold for longer than a year. You don't want that even close to the mark-to-market election. And so what we recommend is that your long-term holdings, that stuff you're keeping for investments, keep that on your personal side. And then move any short-term day trading or swing trading off into the LLC so that you can do all the short-term stuff there under mark-to-market, and you don't have to worry about losing the long-term capital gains rates or anything like that. So in other words, this is giving us two different venues to put two different trading styles, if you will, long-term versus short-term, and get the maximum benefit out of both. And so we'll kind of talk about the mark-to-market stuff here in a little bit. And then, of course, the tax savings here can help pay for the multi-member LLC. And this is kind of a surprising one for some people. Said, how is that going to pay for my LLC? Remember I said there's extra fees there? You got the yearly LLC fee, you got to pay the state, you got the tax prep fee. How am I going to get the tax savings to pay for that? Let me show you. You're going to get the government to pay for your multi-member LLC. If you already have yearly trading expenses, the refund that you get from deducting those expenses could pay for that LLC fee and the tax prep fee. You could get back enough in refunds to make the LLC exist for free, basically. For example, let's say a person lives in Illinois. The yearly LLC fee is $75 a year. So every year, this person has to pay $75 to keep the LLC going and just registered with the state. You know, they want their money. And let's assume the tax prep fee is $600 per year. I'm just pulling that number out of the air. It's going to be different anywhere you go. So let's just assume it's 600 right now. So there's a total in $675 of extra LLC expenses that have to be paid. And some people look at that and say, hey, that's a lot of money I've got to come up with every year just to have this LLC. And getting rid of the IRS scrutiny is just probably not enough worth it. Well, let me show you how to get the government to pay for it. Let's also assume the person's in the 35% tax bracket. Now, this changes depending on which tax bracket you're in, so we're going to look at one. So if they're in the 35% tax bracket and there's a 4.95% flat tax in Illinois, so that's a total of 39.95% in income taxes. So for every dollar you make in trading, you've got to pay almost 40 cents to the government. All right, but similarly, every dollar you save, you get to save almost 40 cents and refund. So here's what happens. This person needs at least $1,015 in trading expenses to get the government to pay for the LLC. Now that doesn't seem right, but it is. It's just $1,000 in trading expenses. And remember, I'm going to show you how to do this, because remember, when you have a Schedule C, the home office deduction gets limited. Let's come back and look at that in a second. So let's prove this. First of all, our traders got $675 in LLC expenses that just exist because the LLC is there, and a tax rate of almost 40%. So if we calculate there's $1,015, let's assume that that is just home office deduction that you couldn't take on the Schedule C of your return. It's very possible, because the average home office deduction I'm seeing is at least $1,200. And some of our clients are getting higher than that. Now, it depends upon their mortgage interest and the real estate taxes and the property insurance and utilities and all that stuff. There's a lot of things that go into the home office deduction. But when you have a percentage of that going off or being written off for your home office, you can easily get $1,000. And so that alone will pay for the LLC. And here's the math behind it. Take your total deductible expenses, the $675. Now the tax prep fee is deductible for an LLC. It is not deductible for you personally. So if you trade on a Schedule C, that is part of your personal return, and those tax prep fees are not deductible. So now your tax prep fee for the partnership becomes deductible. The $75 you pay to have the LLC registered with the state is now deductible. And then you've got this extra $1,000, let's say home office deduction. And so you have $1,690 in extra expenses here. And if you multiply that by the tax rate of almost 40%, you get a refund of $675, which is the LLC expenses. Now, most people have more expenses than that, particularly home office deduction. So what my point in this is, you can easily get enough refund from the government to pay for the LLC. And we can show you how to do that. It's not really difficult at all. Okay, so far in this presentation, we've talked about trader tax status, the ability to deduct expenses on your tax return. And you can do that either through on your personal return, or you can do it through an entity. And we've talked about entities and how they can help you actually get into saving some money and structuring things properly. Now, one thing that I will mention here, LLCs and S corporations, they don't change your tax brackets. There is no tax bracket change there. But what you do is you pick up these extra expenses and the ability to deduct things, as well as eliminate the IRS scrutiny. So those are the benefits. So let's turn to our final topic, the mark-to-market election. Now, the mark-to-market election is an election with the IRS for only stocks and options traders, and it's for most stocks and options. This does not apply to certain ETFs like SPX, IDX, NDX, and there's like 4 others. There's not very many, but those are the big 3, because those are traded in Chicago on the Mercantile Exchange, and they're treated like futures contracts or 1256 contracts. So mark-to-market does not pertain to those. Now, any business entity or person can make this election provided your trader tax status qualifications are met. So this goes back to trader tax status. You have to meet those qualifications. You've got to be able to deduct expenses on your tax return before you can make the mark-to-market election. So those 3 qualifications, about 720 trades a year, trading in 75% of the trading days, 500 hours in trading research, you've got to have those in order to make the mark-to-market election. Now, but this is an election, and it does have to go to the IRS. I'll talk about that in a little bit. But what it does, this election eliminates wash sale losses, and you pay tax on what you actually earn. Now, if you're not familiar with wash sales, the IRS has this funky little rule that if you're trading in a security, it doesn't matter whether it's a stock or an option, and you sell it and you have a loss, and then you immediately get back into the same ticker symbol. It does not have to be the same security. It could be an option with a different strike price. It could be an option with a different expiration date. Just as long as the ticker symbol is the same, that loss on the first sale moves to the second transaction. So now you've got these losses moving in time. And when you do a bunch of those losses can move further and further in time, and eventually some of them cross December 31st and move into the next year. What does that mean for your taxes? It means you end up paying taxes on stuff you actually lost money on this year and hoping to get that loss back next year. And it's really it's a goofy system, but that's the way it is under normal accounting. With mark-to-market, you do not have to worry about wash sales anymore. The mark-to-market election is actually a holistic way of looking at your account. It really looks at the beginning value of your account and the ending value of your account. We don't even care what happens, the transactions that happen in between. It doesn't matter. But the idea is to get you to pay tax on what you actually earned in the account. The other thing the mark-to-market election does, it gets around the $3,000 loss limitation. Under current regular cash accounting with stocks or options, if you have a losing year, let's say I add up all my gains and all my losses, and I lost a total $20,000 in the year, under normal accounting, I can only write off $3,000 on my return, and the remaining $17,000 has to move to next year. So then I can use that against future capital gains, or I can just write another $3,000 off and keep it going forward. Mark-to-market doesn't allow, it gets rid of that $3,000 limitation. If you lose $20,000 in a year, you write all $20,000 off. Why is that important? Because you get that information or that money back to you right away in refunds, so that you can take it and you can reinvest it, or you can use it for your family, or whatever it is. It has to do with time value of money. Keep that in mind, because the idea is to get as much money back now so you can reinvest it and use it. Now, this is an election. Remember, I talked about trader tax status. That's a choice. You can do that anytime, and if they ever come in, you just got to prove that you meet the criteria. This one is an election. You have to make this election with the IRS. And right now, we still have opportunities to do that for 2024. For individuals and C corporations who are on a fiscal or on a calendar year, you can make the mark-to-market election by April 15th of this year. For S corps and partnerships, you have to make the election by March 15th of this year. Now, there is one exception to this. New entities can make the election immediately. So, for example, if I set up an entity in July, I can still make the mark-to-market election for that entity because I can do that immediately. But it is something that has to go to the IRS. Again, publication 550 talks about this. You can read about it. And right now, it's a letter that goes to the IRS and with certain information about it. And you can read about that in publication 550. But this, I think, is an extremely important item for stock and options traders. Because what it does, it allows you to pay tax on what you actually earned rather than having all this deferred loss stuff. And if you have a loss or losing year, you get to deduct it right away. It's extremely important. It really cleans up things immensely. And it's not just for individuals. Any business entity can make this thing. And so what we generally recommend to our clients who are stock and options traders, set up a multi-member LLC. And then we can set up the mark-to-market election for you. And then once you start trading under that entity, you're really set, and things work out really, really well. So let me summarize where we've been so far. And then I want to actually bring up some things to watch out for. First of all, trader tax status. We talked about how that allows you to deduct trading expenses if you qualify. You've got to have 720 trades per year. You've got to have be trading at 75% of the trading days per year, and you should have 500 hours of trading research and education. And if you meet those qualifications, you can deduct the expenses on your personal tax return. Now, one other advantage of partnerships and S corporations, this rule seems to be more relaxed, if not eliminated, if you have a partnership or an S corporation. So just kind of keep that little bug in your ear right now. Then we talked about forming entities. Particularly, I mentioned a multi-member LLC as a partnership so that you can use that for asset protection. You can also use that for decreased audit scrutiny if you're worried about the IRS looking into things. And you can make it free. And so it really has a lot of benefits and really could pay for itself. It's really a great vehicle to do that. And then the mark-to-market election allows stocks and option traders to pay tax on what they actually earned, or write off a loss, the whole loss of the year. I've done returns where I've lost, written off, not me, but for clients who've written off over $200,000 in a year. Now, nobody wants to lose that much, but it is possible. There's no limitation here. And so it's very advantageous to get that money back from the government and be able to use it. Now, as I read through this, this is our summary. I want you to research this. I want you to think about this, and I want you to get counsel on it. Don't just take my word for it. I want you to go in and be comfortable with what you want to do and set up a plan for yourself. Because remember, the whole gist of this presentation was for you to get a plan, not just for trading, but for taxes as well. And so that you set the plan down and you don't have to worry about it. And it doesn't affect your trading. And I would suggest also for those of you who are making money, put some money back for taxes. Don't keep gambling it and then losing it, because just kind of a little idea here. Back in 2021, I think it was at the end, we had the AMC GameStop debacle. And a lot of people were making fortunes and they didn't put money back for taxes. And then in January, they lost everything. They still had the tax bill, though in December they had to pay. IRS wasn't going to forgive them for that, but they didn't have any money to pay it. And so what I'm telling you is kind of an added bonus here is if you're making money, put a little bit back for taxes so you don't get caught flat. Now, some things to watch out for. And these are things that have come up as issues with our clients recently. And so we want to make sure that you're aware of them and can either adapt or avoid them. One, a prop firm changes everything. Now, if you're not familiar with prop firms, there are companies out there where you can go through and pass challenges and tests basically to prove that you're a decent trader, and you put some of your money in there and they give you money of theirs to trade. And then on the profits that you make, you get some returns. One of the things that's not widely known is the money you get back from them when you because it's very tempting to say, hey, I've got this pool of money, I can invest it, and then I get big returns. But what they don't tell you is that's paid back as an independent contractor. You are not getting gains or losses as an investor. You are now an independent contractor working for them, which means that this is not only subject to income tax, you now have self-employment tax, which is an additional 15.3%. So this thing changes everything. And so if you're going to be trading at a prop firm, you need to talk to somebody about this, because everything we've talked about earlier can shift a little bit because you actually have that extra tax burden. Some options, I've already mentioned this, like SPX, are treated like futures contracts. And I want to make you aware of that. Every year we have clients that get their 1099s from their brokers, and we prepare their tax return. They say, well, I thought I was mark to market. What's going on here? And they were trading SPX, and it's counted like futures contracts, which doesn't fall under mark to market. It falls under the 60-40 split rule. And so that is something you have to watch out for. Be aware of what you're trading and know how it's going to be taxed. Here's one that we keep running into quite frequently is trading other people's money or even giving them advice can create major problems. For example, right now, if I told you to go invest in alpha, beta, gamma stock, and I made that up because I know there's not a company out there, and I just use Greek letters because I don't want to accidentally come up with something that does exist. But if I said, recommended you trade that, I would be considered an advisor, and I would have to get licensing by the SEC. Even if you tell somebody, I think you should trade in this, or I think you should do this, you become an investment advisor. And then if you start moving into trading other people's money, it gets worse. So we generally try to get people to avoid trading other people's money, because then the SEC gets involved. There's other federal regulations, and you've got state regulations where you are, state regulations where the other person may be. So there's a lot of things that are going on that have legal issues. So we recommend you stay away from trading other people's money. Definitely don't give them advice. Now, what you can do, it's with family members, if you form like a family partnership or something and you all get together and trade together so that everybody has some input, then you've got, then that eases things a lot. But if it looks like somebody's just giving you money and you're trading it, you could very well get in trouble with the SEC. We've had clients get in trouble like that before. So it's something that we definitely would like you to avoid. All right, let's go back to this slide as promised. Our contact information, a website, www.tradersaccounting.com/MetaStock. We do have a free ebook there. You can download it, read it. It's got a lot of the stuff I talked about today. And certainly do your own research as well. Don't just take my word for anything. Just go do your research, feel comfortable with whatever you're doing. If you're interested in our services, again, we do consulting. We do have bookkeeping that we could keep track of what's going on in your trading business and kind of alleviate the financial strain off of you so we can put the numbers together. Tax services, we can set up the entities for you. We can set up those irrevocable trusts that I mentioned as a second partner. We can do a lot of that. Give us a call at 800-938-9513. Or if you just want us to consult with us, if you want to say, am I doing this right? Or am I going down the right road? I think that is even if you don't do it with us, find somebody. Because we have a lot of clients that we have to come back and we have to fix things for them, which is fine. We get things fixed. But it's much better that you get advice before you do something. And before you get it set up, because it can be more expensive to actually change it later. And then, of course, our email address is learn@tradersaccounting.com. So what I'm going to do now is I'm going to leave this up for a little bit, and then I'm going to have Jeff come back in, and we're going to take any questions
I'm
that
ready.
you
have. I'm ready.
Okay, Jeff.
Yeah. Also, I put all the information up on the chats.
Fantastic.
MetaStock, or Greg is going to actually put it. Greg helps me with all the YouTube stuff. He's going to put it in the YouTube chat. First question we have comes from Linda. She wants to know, don't you need to turn a profit 3 of the last 5 years to maintain your LLC status?
That is not true with a partnership or an S corporation. That 3-year rule actually is with Schedule Cs. And I'm glad you brought that up because that can create a problem. When you set up a small business and you run it on a Schedule C, the IRS wants you turning a profit very quickly, obviously within the 3 years. For a trader, though, when you're reporting on a Schedule C, all you're reporting are expenses, which means you always show a loss. So it's more possible, even as a trader, you could get the IRS involved if you're doing a Schedule C. But that criteria is not true if you're doing a partnership or an S corporation. So you've got it off your personal return, and they tend to leave you alone.
Oh, William has a really good one. I want to hear the answer to this. If you do a butterfly trade with 3 legs, does it count as 3 or 1 trade?
That would be 3 trades.
That's what I thought. Interesting. Let's see. Merchant Sailor in YouTube wants to know, what is the 60-40 rule when it comes to SPX trading?
Great question. I'm glad you brought that up because I kind of glossed over that. Futures contracts and SPX and the other few ETFs there are, what happens is that no matter how long you keep that thing, you buy SPX and keep it for 30 seconds, 60% of your profit actually becomes a long-term capital gain and 40% becomes a short-term capital gain. Now that's significant because the long-term capital gains rate is capped at 20%. And most people will fall into the 15% category. So basically, if you're trading futures, you don't want mark to market anyway because you lose that. So 60% of your gain is long-term capital gains, and that gets capped at 20%.
Amazingly enough, that's all the questions.
Oh, wow. Maybe I answered them all in the presentation, so that's great.
One of the things that actually Kelly just commented was like, you always have so many interesting questions that come up, but not today for some reason. So I would recommend, Jerry, tradersaccounting.com/metastock, 800-938-9513. Always learn something from you, Jerry. Thanks for spending some time with us today.
You're very welcome, Jeff. Hope to talk to you soon.
All right. Thanks a lot. And I'm gonna eject you now.
All right. All right.
Thanks a lot.
Take care.
Okay, let's do that. Okay. There's one thing I actually kind of wanted to revisit just for a minute as we get here. Dennis says, great presentation. Yeah, he does. Oh, I just saw your question, David. I'm sorry. You'll have to email him. David just asked, so you can write off services we pay for with our fees from a broker TD. That's something you'll definitely need to email them about. As soon as I hit the eject button, I realized that he was gone. So yeah, great presentation though. I definitely agree with you, Dennis. It's always so interesting to hear. And then here are all the rest of, there's tons more questions now. I'm sorry, guys. It looks like I ejected him just a little bit early. But yeah, give him a phone call, drop him an email. They're very, very receptive, and they'd love to help you with that. So yeah, it's kind of funny. Let me go ahead and make me the presenter here. Go ahead and show my screen. Then go ahead and go back just one slide here real quick. Oh, that's not what I meant to do. Give me a second. Okay. We'll kind of just wrap things up. One of the things that I wanted to kind of do was I felt a little bit rushed when we were talking about the Magic Trader offer. And so I kind of wanted to go through that again, just because we were running so far back in time, or so far behind in time. I figured I might as well go through it again, just to give it the due. All right. So I want to kind of talk a little bit about what's included in the add-on. What Peter does really well is talk about his ingredients that he has. It includes, yes.
I'm sorry to bother you again. I think it's something about when you click on his slide, it freezes up the thing. Give it just a second to catch up with you. His slide is not showing, and I'm trying to refresh it on my end, and I'm not able to. Go back to his slide
Okay.
now.
Yeah.
Well, now I'm seeing a picture of Jerry Allison.
Okay, it's just because there's a 30-second YouTube delay. You'll see it in a second.
No, it's the screen has frozen. It happens occasionally, but I'm trying to just get us back. Give me a second, Jeff. Are you looking now at his slide?
Yeah.
Why can't I get it? Give me one more place. I just don't want to do Peter another disservice of not being able to do it when you're trying to make the point of redoing.
You might as well have it on YouTube, right?
Yeah, I guess so. I mean, I guess.
Here, let's do this, Greg. This usually fixes issues. I'm going to go ahead. I'm going to make you the presenter, but don't accept.
Okay.
And that just this is a way to refresh.
Oh, okay. Yeah. That does. Okay,
and then
I'm not
make
accepting
me the presenter again.
There you go. That
and you
seems to
be able to see it.
Yes, that. Wow, you're brilliant.
Genius.
Are we paying you enough, Jeff? Because that seemed really. I'm just now maximizing the screen because it minimizes. Okay,
let me know when you're ready. I'm going to start to talk a little bit about it.
Oh my gosh.
I just wanted to kind of spend a minute on this, go through the offer again. I felt like it was rushed before.
Jeff, I'm sorry. Do that one more time because it once again froze up when I tried to. I don't know what's going on with that. Just send me the thing. Sorry, just want to get it right.
Yeah, I guess. Hold on just a second. No problem. I wonder if there's a lot of stuff on this side. I wonder if it's having some issues with it.
I couldn't honestly say. So did you send me the thing to... Are you still there?
I didn't. I just stopped sharing and shared again.
That's not doing it.
I can even hear
what worked before. Yeah, because I'm coming through on a delay. I've got a live audio going in the background. Send me the request like you did before. That appeared to work.
Okay, I did it again. Isn't this fun, guys?
Yeah, okay, I'm
All
not
right.
going to touch anything. You're not full screen, but people can see the offer, and they can see and hear you. So
Okay,
I'm just going to
okay.
leave it like that, and I'll get out of here. I beg your pardon.
No, you're fine. Let's get it right this time. All right. So as I said, and maybe we'll edit this. Actually, we can edit the pretty long YouTube videos anyway, but just want to go through the offer with Magic Trader. I think you should try it. It's a really, really good add-on. Has 58 different indicators. But what I really like about Magic Trader is how well Peter uses the ingredients. We had the question in the chat way earlier. I think it was John. He said, the spike is my favorite. And as long as you take the time to understand Magic Trader, it will work really well for you. He said it was his go-to indicator. And the reason I kind of wanted to go through this again, too, was the people that really go to his room and kind of follow him or just absolutely love him. They stick with the service and that kind of stuff. So wanted to kind of make sure we had a little bit of a time. And so now it's perfect. So as you can see, the stuff that's included in Magic Trader Elite is huge. There's 58 indicators, 47 explorations, 2 expert advisors, templates, 127 page manual. Normally it's $199 per month. And in addition to that, he's got a lot of training that we're going to include as part of the package. There's over 20 hours of training for the fundamentals of Magic Trader. And you can kind of get an idea of what's included here, okay? The other thing that we're going to include as part of the offer is what Peter calls, or what we call the Magic Trader Consulting Educational Alert Room. And you can kind of get an idea of everything that's included with this. The normal price on the alert room is $299. And believe me, when people, I didn't like the way that sounded, but the people that we have that actually pay for the elite room, as soon as their credit card changes, they're calling us to let us know so that they can kind of keep access to it. People really, really like the service that he does with it. So it's normally $299, and here's another page just full of the stuff. What he does with this is they meet a couple times a week. He also sends out alerts through WhatsApp, and that's all part of the service as well. And so normally kind of the offer value that we're going to give out for the Magic Trader Elite is $2,493. That'd be 3 months of the Magic Trader Elite, the educational alert room, that training, the 20 hours of in-depth training. Normally that's $4,493. Here at the event today, and available for just 1 week only, you'll get 3 months of that, the alert room, which will be 3 more months, fundamental trading, and it's all $997. So you can do that by giving us a call at 800-882-3040. You can visit us online at metastock.com/saleschat. And you can't do this online. You have to give us a call. So give us a call, 800-882-3040 or metastock.com/saleschat. And I feel that was better than when I was like, when we were 25 minutes behind and I was trying to go through it real quick. So in any case, give it a go. I do want to spend a moment to thank all of our presenters for coming in today. It was really good. Another great day of instruction. I hope you enjoyed it as well. I want to thank all of our sponsors, that be Stocks and Commodities Magazine, AAII, CMT Association, all core partners that help us make this event work. And of course, we're MetaStock. We've been rated #1 in our price category for 31 years in a row. If you buy a month and get the second and third month for free, that'll cost you about $23 a month. That's all. You'll be able to try out the award-winning software that's been rated #1 in its price category for 31 years in a row. It's going to help you do scanning. It's going to help you test ideas. It's going to help you do forecasting, get real-time commentary alerts, signals, all that kind of stuff. So go ahead. There's a reason that it's been rated #1 for 31 years in a row. Find out why. metastock.com/conf promo. Call us 800-882-3040 or metastock.com/saleschat. For me, I think we can get some rest. We got another great day tomorrow. I hope to see you there. And thanks for coming. It's good to see you. I do hope you've learned something today. And I'll see you again in the morning.
Hi, Kelly Clement here from MetaStock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.